we feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Very good morning. You're watching India Market Open and it's looking like another good morning. This week's turning out to be pretty good, folks. Jerome Powell adding to that positive sentiment.
Yeah, most certainly. So you could argue maybe even if it's a mixed bag, the Asian equities are moving higher because he's at least saying that this tariff-induced issues are probably transitory.
You said the word.
The T word is back.
The T word is back.
The T word is back. Yes.
Did you guys mean Trump?
No.
That is
that
not
was already
back. That
said,
is
right?
Omnipresent.
Omnipresent.
That T word is omnipresent. Trump. All T's are in vogue right now.
Right, Tamanna. I get it.
No, okay. Well, let's tell you what we're talking about and why you're seeing the implied on a positive note right now. In fact, the implied over 100 points up for India. So 103, there you go. It's a positive day for US markets as well as the Fed retained its outlook on rate cuts this year to 2. So 2 rate cuts, that has been retained. That was the key point. The Dow was over 1% up, NASDAQ also up in the green 1.5%, and Dow futures also in the green as we see it. Now, what has the Federal Reserve said? The federal fund rate had been retained between 4.25 to 4.5%. This was widely expected, so no surprises there. They have retained their forecast for 2 rate cuts in 2025, and this is important. This is what the street was looking at, because if that had been reduced, that would have been bad news. The GDP outlook for the US economy has been lowered to 1.7% of growth this year. That's about 0.4% lower than the December projection. The inflation outlook, though, has increased by 0.3% to 2.8% for the year. One thing to note is that the dot plot has turned a little hawkish. The dot plot essentially is a combination of opinions, if you may, of everyone who is part of the Federal Reserve, and they put out their views, and that is plotted on a chart. Now, 4 participants have seen no rate change in 2025 versus 1 in the December policy. The overwhelming majority, of course, see 2 rate cuts in 2025, so that's the stance. But the number of people who see no rate cuts has increased. So that is one factor that the street may note. The Fed chair, meanwhile, has said that the tariff impact could be transitory. That means short-lived, and that really is a big relief. Listen in.
As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Okay, so that was the take from Jerome Powell, and that definitely is more positive than would have been expected. The 10-year Treasury note yield slipped to 4.24% as the Fed hits pause. Crude has held steady even as more economic uncertainty has been seen. I don't know if you can pull up NYMEX. Yeah, there you go, about 0.5% up. It's been a bit of a mixed open for Asian markets. Fed has kept rates unchanged, but you are seeing some pressure coming in Shanghai and Hang Seng. Japan, of course, shut today. Meanwhile, this is what Donald Trump is saying. The Fed would be much better off cutting rates as U.S. tariffs start to transition their way into the economy. Do the right thing. April 2nd is Liberation Day in America. So, yes, President Trump with his take on rate cuts and saying that they should be in as soon as is expected. But let's get to our commentators this morning. Stephen Davies, Founder and Chief Executive Officer at Javelin Wealth Management, joining in, as is Jonathan Barrett, Chief Investment Officer at ETO Markets. Welcome to both of you. Always a pleasure. Stephen, let me come to you first. The pause on expected lines, but would you be too worried with the predictions for GDP growth as well as inflation that have come out from the Fed, both not quite as pretty?
The natural effect of any tariff increases will be to obviously both increase inflation and to reduce growth. So it seems quite likely that the Federal Reserve is beginning to bake at least some of that into their cake for the future. When we start looking at this word transitory, it was interesting listening to Chairman Powell. I think that he's qualifying his statement by saying so long as it works relatively quickly through the system. What we've learned so far is that the US will do what it does, other countries will retaliate. So this actually could go on for rather longer than expected. So that's a bit more difficult to quantify in terms of the effects both on interest rate policy and therefore growth and inflation too.
An interesting point that you make. I want to know what Jonathan thinks about that as well. Because when you listen to the statement, of course, when you read the headlines, you see that the word transitory is back. And do you buy into it? Wall Street certainly seems to have taken it as it comes. Jonathan, what do you make of that? Because he has put certain conditionalities to it. He said if it passes through relatively quickly.
Look, I think it's transitory is a nice word, but it also suggests to me that he's taking a bit of a punt, saying that he think it might pass through or it might not pass through. But I think at the end of the day, when you look at the dot plots, and there's only 4 of them, I think over time you'll see more of them actually say that I don't think we will get a rate cut, because I think it's been proven historically that when you do impose these tariffs and they keep going and we get that volatility, it does sort of push through inflation. So I think the transitory message is just it's something that needs a lot more time, but I don't think you can look through it when the hard facts say it will be inflationary. So I'm out there basically saying I don't think the Fed will be that aggressive on 2 more rate cuts this year.
Jonathan, here's the question then. Is it going to be 2 or could it be more than 2 if indeed things are not so bad on the inflation front, even though there is a warning? So it's maximum 2 according to you, right?
Yeah. No, I don't think we'll actually get up to that 2. I'm actually of the view that that transitory period will actually say the Fed will come out and say, well, hang on, we're getting that inflation coming through. Well, I'm going to hold back, and this could go on, to the end of Q1, Q2, Q3, and then you're running out of time to actually do the rate cuts. So when I do look at it, I do think that the inflationary aspects, that chance of stagflation is high. But on the other hand, remember the Fed also said he's reducing quantitative tightening. That's coming right back in again. So on one hand, he's going to keep rates, but he's also going to reduce the amount of tightening that they've been doing over the last couple of years.
Okay. So the main question that I had was, and maybe Stephen, you can come in on this. If you concur with Jonathan that it's maximum 2, maybe less, what have you, and it's a moving part, what happens to the other key central banks? Because I think a clutch of central banks have started on a rate cut drive. If the Fed doesn't cut, can individual banks or will individual banks be able to go ahead with a rate easing cycle, or will their hands be forced? Let's say India, for example.
As things stand at the moment, markets are anticipating that other central banks will be able to have a bit more latitude as far as rate cuts. But clearly, as you quite rightly point out, that's sort of predicated on whether or not the tariffs affect other countries in the same way or even more. So you've got to hold that to one side. For instance, if you look at futures rates predictions at the moment, still expecting something in the region of about 100 basis points or so off European rates, which reflects a better inflationary outlook for the Eurozone, if you will, than is the case in the United States. So from that perspective, maybe a little bit more latitude. As far as India is concerned, yes, I do think there's probably more room for rate cuts in India, and that will be supportive of markets going forward.
Jonathan, just to come to the emerging markets in India story, we've talked about the rate cuts possibility, and here domestically a 25 basis point rate cut is being penciled in the April monetary policy. But having said that, what is your view on the equity side of things? India has seen a constant FII outflow. Nothing has really changed there, but we have seen the mood sort of transition in the last few sessions. Do you think emerging markets like India are going to come back in the spotlight as the Trump trade, so to speak, fades in the US?
Oh, look, I think it's a moment of time, basically, because, I think when you look at the flavour that we've had in the emerging markets, people have seen that opportunity, but each country is going to be affected different by the tariffs, and that's a blanket across everywhere. So I really think it depends on how each individual country plays out its retaliation in the tariffs, and to see how that will then sort of translate down into the domestic economy. There's been a lot of movement in equities across the board. And you remember that last time we were on this show, we sort of turned around and said, well, look, I think equity markets themselves are going to go through a corrective phase, and certainly a very highly volatile phase. And I think that's going to continue. And I wouldn't be surprised if equity markets still come under pressure. Some economies will go sink lower than others, and other people will see there's more opportunity in different regions. But in answering your question, I really think it's really up to how the domestic government handles how they're going to retaliate on the tariffs, to see what sort of policy makes sense and how that values down to the equities.
And there's so much that is up in the air. We don't know how things are going to pan out. But with that caveat, Stephen, I just want to ask you to build on that. In the US yesterday overnight, you had equities cheer, but then they're making a little bit of a comeback after a sell-off. And the question mark is, if money does flow out of that equity market, where does it go? One. And two, if there aren't going to be as many rate cuts this year as was previously anticipated, yields therefore remain still relatively attractive. And so will they move into Treasury? And so therefore, will they not leave the shores of the US?
I think what we have seen is certainly other markets beginning to take up the slack that the US has given up as a result of concerns over rates and so forth. European markets have obviously been performing very strongly during the first part of this year, partly as a result of government policy changes, particularly in Europe, and partly because they were notable laggards. The same has applied to China. So obviously, a lot of money that has been shifting out, some of it coming out of India, admittedly, and going into China as part of that sort of reflation trade that is continuing. But as President Trump has been saying, it's going to be all eyes on April the 2nd and what the detail is of US tariff policy, because as Jonathan has been saying, there are going to be knock-on effects all the way around the world. We're already seeing in some countries in Asia, for example, countries being destabilized by a flood of very cheap Chinese imports. So the knock-on effect there might be that those countries will have to introduce some form of tariffs on imports on their own to adjust for the effects of that.
And that is inflationary. Point taken. Stephen, thanks so much for joining in. And Jonathan as well. You've given us some things to think about this morning. Thanks so much. You saw that, in fact, yesterday, what Stephen was just speaking about. We saw the steel stocks in focus yesterday on account of the measures that have been taken to prevent cheap imports of steel coming through. And you saw a lot of automakers, by the way, yesterday announced that they would be raising prices to counter inflation. Let's talk about what happened in trade yesterday, though. Trade recap, if you will. The foreign institutions net sold once again to the extent of about 1,100 crore rupees. Domestic institutions net bought to the extent of 2,141 or thereabout crore rupees. The Nifty 50 ended the day just shy, and you say just shy because it's just about 100 points, less than 100 points or so of 23,000. The broader markets have in fact outperformed and outperformed significantly, with a lot of beaten down stocks recovering very smartly in trade, and that continued yesterday after the move that you saw earlier in the week. The Nifty 50 went home with gains of only about 0.33% though. The mid-cap index gaining about 2.4%, the small-cap index up as much as 2%. IT was a big drag in trade on Wednesday, but the index closed about 1% off the lows, and so investors will take heart from that. Sharpest intraday recovery in Wipro, which ended the day in the green. Coforge and Persistent Systems also saw smart recoveries through the day. Barring IT and FMCG, all the sectors ended in the green. Realty continued to make a comeback, and so did PSU Banks, by the way. Realty index gaining about 2.8%. Defense, capital market players, infrastructure companies all gained quite significantly. And look at the likes of the BSE, look at Angel One, look at CAMS, all gaining very substantially, close to 6% each. Cochin Shipyard for one, Garden Reach Shipbuilders, HAL. These are companies that gained very, very substantially in trade yesterday, Neeraj.
Yeah, I'm quoting to start off with the person whose note really brought about that 2% fall in IT, Citi. And Surendra Goyal and team have written a very nice note on reiterating the constructive stance of India. So just some optimism there, because they are saying that we reiterate our constructive stance on Indian equities. The Nifty target stays 14% upside, given stable or improving macro, etc., etc. And they have upgraded NBFCs to overweight versus neutral earlier. So this is a bit of a change in stance. And we know Bajaj Finance didn't need an upgrade from anybody because that stock has been on a roll, but a clutch of others as well likely. But they have downgraded staples to underweight, which is the interesting piece. Before the 12,000 per month starts into the bank's accounts and people start spending, people are saying, hey, enough done for staples. So that was the interesting piece. But and added Chola, Zomato, etc. But the trade setup for the day. So yeah, momentum is sustaining for sure. We don't need anybody doesn't need us to say that, but could we see a pause or a pull back soon, or a pause, if not a pull back? Very likely, because a few quant indicators are now pointing to we being in extreme greed zones as well. And maybe the positioning is such that we've had a good rally, maybe a pullback around the corner. So just be careful with leverage trades. That's the only point that is being made here, because the macro is still mixed. I mean, you look at any message that comes in, there is a lovely MK note that has come in today as well, which is pointing to macro still the 18th of March or thereabouts. Select pockets, tractors, port cargo are improving, but not everything. And because it's a seasonally weak month for liquidity, that hasn't improved either. So we might see that happening in April, but not thus far because of the year-ender, if you will. So just be a bit careful there. But on the positive note, there are some mid-cap stocks wherein the volumes have gone through the roof. And I was doing this small data check late last night. So, I mean, and I have a table. Look at that. Gabriel, LG Equipment, GR Infra. So the 1 week returns for all of these are interesting. But look at the 1 week volumes versus the 1 year volume data. I mean, on Gabriel, the volumes in the last 1 week are 50 times the last 1 year volumes average. LG Equipment 23 times, GR Infra 24 times, even KC International about 5x. So some very nice price volume action being seen at the broader markets, which is so heartening. You were making this point yesterday as well, right? That the broader markets are doing well, which is great for portfolios.
Could it be, since there are hefty allocations in small and mid-cap funds, that money needs to be deployed somewhere, and these are fund managers saying, let's come in now. Because people have not necessarily switched their, allocations or their SIP. Individual investors have not. So those fund managers need to go out and deploy as per their mandate, and they're hunting for opportunities.
And at least one, I saw GR for sure yesterday because we pointed this out. It was trading at, and before the move, yesterday it moved up, I think 9% or thereabouts. It was trading at less than 5% above its 52-week low. So maybe that makes sense, that you're seeing that there has been such a lot of erosion in value that people are going and buying.
Just one small mood check. I was at a conference yesterday. It was a private equity conference, and there everybody who had come in was asking, "Acha, abhi market mein kya lena hai?" And people are back with the bang. The mood was so much better than the mood at the earlier conferences. You know, spate of conferences. The mood was very somber. Suddenly, the mood seems to have turned.
You know, someone had put this out yesterday. India is a very emotional market.
Yeah.
We keep talking about levels, etc. here, quant indicators, but yeah, it tends to be a bit of an emotional market as well. Are we seeing a lot of emotion in the derivatives end? Puneet is standing by for more on that. Yes, Puneet, good morning.
Hi Tamanna, good morning. So definitely a positive session seen yesterday in Nifty 50 reclaiming the 22,900 mark, and you know the GIFT Nifty is also indicating an open of above 23,000 odd levels today in the session as well. Well, we also seen that the Nifty is currently at a crucial overhead resistance level of about 23,100, so about around those levels, and we've seen that the immediate support has also moved up from 20 to roughly about 22,800 levels from about 22,300 at the start of the week. So definitely a positive there. On the Bank Nifty as well, we have seen the index in the last 9 weeks has been consolidating between 47,700 to 50,600 odd levels, and currently getting there on the higher end of the range as well. So another big positive. Bank Nifty has gained for the 5th straight session. So definitely something to watch out for on the upper hand as well. Now, it has been making higher highs as well as higher lows. So that range has been moving on the upside as well. When you look at some open interest distribution as well in terms of the index, we've seen the maximum call option levels at roughly about 23,500, 20,300 to 500 levels. While on the put option in open interest, the maximum has been seen at 22,500 versus 22,000 at the start of the week. So that is also a bullish sentiment there. Finally, when you look at some of the key stocks on the open interest gainer side, we have seen long build up in stocks like Apollo Tyres, which was a stock that was beaten down because of other fundamentals as well as raw material prices. We've seen delivery also being back yesterday, and we had a discussion on it yesterday as well. Chambal Fertilizer also seeing some long build up. On the open interest losers side, we have seen short covering across the picture, especially in the mid and small caps, and seen in stocks such as PB Fintech, AU Small Finance, as well as SAIL to name some of them. So overall, it's a positive picture, and 23,000 is a level that will be something to watch out for, as well as the Nifty Bank levels as well.
I think 23,000 will be taken out pretty quickly in the start of trade if the implied is anything to go by. Let's see if the implied is held up. Quick look at the implied open before we move on to stocks. Yeah, I mean, you're looking like you might hit 23,000 pretty quickly. The GIFT Nifty above the 23,000 mark. All right, these are the stocks that are on my watch list this morning based on news flow. I'm starting with Adani Enterprises. It's a thumbs up because its arm Kutch Copper will be holding a 50% stake of Pranita Eco Cables. This was put out in an exchange yesterday. Now, this is how UBS is interpreting it. It says Adani Enterprises has announced a joint venture to enter into metal products, cables and wires. Competitive intensity for the cables and wire sector continues to rise. Is a second large serious player that has entered the space. Capex plans for the group in cables and wires are not known yet. This is negative sentiment-wise for incumbents in the segment like Polycab, KEI and Havells. Disclaimers here, NDTV is part of the Adani group. So thumbs down for Polycab, Havells and all of the other players. Once again, another upheaval might be in place, but that's the announcement that was made yesterday. Raymond Limited is the second stock that is on my radar. Thumbs up there. Here I would say a big headwind in a sense for Gautam Singhania, the promoter, has come off, and which is why a thumbs up sentimentally. So Mrs. Nawaz Singhania has tendered her resignation as non-executive director of the company. Nawaz Modi Singhania is the wife of Raymond Limited chairman and managing director Gautam Hari Singhania. In 2023, remember Nawaz had alleged physical assault by Singhania, after which he announced the separation. Last year, she was a board director of JK Investors, Smart Advisory, FinServ and Raymond Consumer Care Limited, and was removed from her position in these three companies, following which she had stated in the media that Gautam Singhania has lost confidence in me. So one can presume that maybe some settlement has been reached between the two parties, and which is why you're seeing this decision announced to the exchanges. So another troubled stock which is on my thumbs up list today, and this is on the back of what CLSA is saying, and this caught my eye. CLSA on Z Entertainment has maintained an outperform with a target price of 170. They say that the stock is at rock bottom, 8 times of PE. A rainy day EBITDA, PAT and CAGR is 22% for EBITDA, 33% for PAT CAGR. They believe advertising revenue-led growth will re-rate the stock. It is India's #2 TV network and is ramping up on OTT and Z5. Z's EBITDA margin has widened by 9 points from lows, and it has zero debt, 1,700 crores cash. Even assuming 6% year-on-year ad growth, it would deliver a 22 to 33% EBITDA and PAT CAGR between 26 and 27. That's FY26 and FY27. So they say, and I thought this was the important point, they believe Z's stock could double over the next 12 to 24 months. So yes, like I said, at least two troubled companies seeing a positive light today.
Z has hit rock bottom. That stood out to me. Interesting. Yeah. All right. So I've got, I think, 3 interesting stocks as well. Not the biggest announcement for Avenue Supermarts, but think about it in terms of strategy, right? The company has announced additional equity investment of 175 crore rupees into Avenue E-Commerce Limited. And this is the company that operates its online grocery platform, DMart Ready. Now, this is at a time when e-commerce is posing a bigger challenge to DMart, of course, which has by far and away retained its network of brick and mortar, and says that that's going to be the primary channel. Will this change? You don't know at this point, but the fact that it is investing in this company is maybe a sign of the future. Just an update on its financials, you see that on the screen, but importantly, in FY24, that's the last financial year, DMart Ready's contribution to the total sales was only 5.7%. They give this value on a full year basis, so you will see it at the end of the 4th quarter. DMart Ready's revenue was up 22% in the 3rd quarter though, which is positive. MCX, I think this is a thumbs up because they're launching a gold 10 gram future contract, gold 10, from the 1st of April. And the maximum order size in that is going to be 10 kg. The standard contract size, remember, for MCX Gold Futures is 1 kg. And while smaller grammage contracts exist, this 10 gram contract should draw attention. At least that's the way that I see it. And the new contract should add more liquidity and volume at a time when gold is of interest to everybody, no matter who you speak to. The 3rd stock on my list is Voltas, and I'm giving this a thumbs up because in the commentary to analysts in the meeting that they had, they're saying that they want to focus on the mass market segment and they will focus on growth first and foremost. The interpretation of that is that the margin contraction that you have seen as a headwind is not likely to go away anytime soon, but the summer has started off with a bang for this company and it's likely to do well. A couple of brokerage notes have come through with differing views, and we'll talk about that later in the show, but I think it's a thumbs up.
Yeah, it's interesting though that for now they're saying that the compressors shortage will be managed. Yeah. I wonder if, as in the case of Voltas, as has happened in gold mining companies, that the pick and shovel companies tend to do a lot better than the actual gold mining companies. Could it be that the compressor companies, if there is anything listed, etc., can do better than Voltas or some of the others?
News yesterday that the government is going to be easing imports
on
compressors and some of these equipments required for the coal cooling industry.
Yeah, until the capacities are built. Yeah. But it just shows maybe it's a great industry for somebody who's building out capacities in compressors. If ACs are going to go up, cooling solutions are going to go up.
And it's become a necessity for a lot of people.
Oh now. Yeah, no longer a luxury. Right. Okay, very quickly, 3 stocks on my radar for today. So I wonder, by the way, if Ultratech could also face the heat today because of the Adani announcement on cables and wires. Technically now it's an incumbent, if you will. But the first stock on my radar is Jyoti Structures. It's a small cap, but it's reported a carry forward order book exceeding 1,800 crores, and the majority is slated for execution within the next 12 to 18 months. Key point, the trailing 12-month revenues are just 462 crores. So if it has to execute 1,800 crores over the next 18 months, break it down, does it do 1,200 crores over the next 12 months? Does it mean FY26 will be a step up year for Jyoti Structures? Remains to be seen. Let's wait and watch. 5% up in trade yesterday. Let's see if there is more in store. Jubilant Foodworks is the interesting one. Again, I'm quoting a CLSA note here, but it's a thumbs down because CLSA has observed that the Turkish lira has depreciated. That's not an observation. That observation, it said the potential risk for Jubilant, because year to date, Turkish lira depreciation of 8.5% could have a 3.5 to 4% impact on FY25 consolidated profit after tax for Jubilant. Let's see if there's a bit of a reaction in Jubilant today as a result of this. And two interesting bulk deals, because two interesting investors. So Zim Labs, and remember Matthew Sirak has stake in this earlier, but he's added 6.44 lakh shares at about 84 in Zim Labs. The stock was up 5% yesterday, so keep an eye out for this one. If there is a further reaction, you should know why. And ABG Logistics, Nikhil Vora has bought 81,000 shares at about 228. Again, the stock was up about 5% yesterday. Just please keep in mind, if you don't know too much about these companies, be careful if you're investing. The worst thing to do is to follow an investor, because you do not know when she or he will exit and you might be holding on. So please do your research, but interesting to see these names simply because the nature of the investors who have bought it is pretty renowned. So keep an eye out for these as well. Time for a short break. On the other side, we talk about the top trading strategies for the day.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
All right, that's what should be on your watch list today on your screen as we get into what's looking like an exciting day of trading. But the exclusive coming up this morning, it's another day and another issue for Ola Electric. Sources are now telling NDTV Profit that after Mumbai, several stores in Pune have been inspected, are under the radar. Tushar joins in with more. Tushar, what is the issue that is causing all of these inspections?
Good morning, Tamanna. So, in an expansion of the rate of the inspections that we saw in the last couple of days, has now gone out from Mumbai to Pune. So, till yesterday, there were about 10 Ola Electric stores under the Transport Department's radar. That's now expanded to 26. A total of 36 Ola Electric scooters has been confiscated by the Transport Department by various RTO officials across 5 RTOs in Mumbai and Pune. The problem is with the trade certificates. Remember, a trade certificate is necessary for if you have to operate a showroom to display motorcycles or scooters or any kind of vehicles in India, these Ola Electric stores did not have these trade certificates, or multiple Ola Electric stores were operating under one single trade certificate, which is against the law. The transport minister, the Maharashtra transport minister, has taken cognizance of this matter and has directed immediate action and a submission of a report as part of the Ola Electric inspections. What we also know that the transport minister is in constant discussions with the transport commissioner to arrive at a solution for this particular issue that is at hand.
Okay, more pain, and you know there's been a whole host of issues that has been cropping up, right from pricing, even the data from Vahan versus what they have claimed in terms of the actual sales made. So you know, a deep dive required in what really is going on Ola Electric. But let's go across to Neerav Ashar this morning. He's head equity research analyst, Latin Manharlal. Neerav, very good morning to you, and great to have you on the show as always. Let's start with your overview on the markets as you see it, and what is the one space that is going to be on the radar? Do you see any kind of recovery, first of all, in IT? Let me start there.
Yeah, good morning and thank you for the invite. I think we've seen a good relief rally in the markets, which was much required. And I think yesterday, of course, the FOMC meet, the Federal Reserve comments, they were very important. They have given a kind of a mixed picture with a cautious undertone, of course. The uncertainty with respect to the economic outlook seems to be increasing. Labor market conditions are quite strong, but at the same time, inflation is also within the desired limits of 2%, but still continues to remain elevated. So we do have the cautious undertone which is there in the commentary. That is one factor. And I think what this seems to be hinting is that the manufacturing outlook still continues to be strong. But IT clearly is under a lot of pressure, because even if one were to see the Nasdaq Composite Index, it has been the biggest casualty as far as the US markets are concerned. And the direct impact of that is being seen on the domestic markets as well. We've seen the domestic IT stocks being under a lot of pressure, and the PE multiples have also contracted. So this is definitely a serious matter to take into account, because we are seeing there's no valuation support at this point of time. So definitely a cause of concern.
All right, point taken on IT, by the way, and yesterday it was under quite a bit of pressure. Milan Vaishnav joining us this morning. He's founder and technical analyst at Gemstone Equity Research. Milan, good morning to you and thanks so much for joining in. Wondering whether you need to be wary of the pendulum swing the other way, because this week has been fantastic for the Indian equity markets, and what a comeback, particularly in the broader markets. Would you be watching for the pendulum to swing the other way though?
I would expect the pendulum to slow down a bit if I use that analogy, because see, what has happened is that we still continue to remain in the secondary corrective trend that we were in since last a couple of weeks. That is point one. The rebound that we have seen has come from the levels near 22,000, which is also the 100-week moving average. So we have to respect that level as an important medium-term support. And so far it has been defended, and I expect that level to stay defended for a foreseeable future at least. That is point one. Point number two, we are still seeing a technical rebound. There hasn't been any major attempt to reverse the ongoing corrective trend. The reason is that I expect the markets to run into the resistance zone anywhere near 23,000 levels. This is also the classical levels that we see on the chart as a potential resistance. 50 DMA is also there. And secondly, even from the options data point, there is practically negligible rating of puts above 23,000 strikes. So anywhere between 23,000 and 23,100, 150 zone is where I expect the markets to take some breather.
So what positions would you take this morning, Milan? Hi, Tamanna here. Would you go long Nifty, Bank Nifty?
I would go long in Nifty and Bank Nifty at open, but would also maintain a very strict stop loss of just 70, 80 odd points on Nifty and 100, 150 odd points on Nifty Bank. Because even if we do not see any major retracement from the current levels, I also don't rule out the markets consolidating in a very defined range.
That's interesting. What would be then your picks for this morning? Because we're looking like we have perhaps another first half, if nothing else, of a positive up move. What would be the top bets then to make the most of it?
See, if we speak of absolutely near term, I mean, let's speak for today because we are also having weekly options expiry shaping up today. Overall, for the next couple of weeks, my approach to the market would be it would be sector neutral but very stock specific. So far as my two picks are concerned, my one pick would be from the realty space. I would be going for prestige estates. One can buy above 1200. Expect 1290 on it, and we'll be putting a protective stop of 1155 on it. Another would be from the energy space. I will be opting for Reliance. One can buy above 1245. Expect the target of 1320, and one can keep a protective stop at around 1200.
Okay, two interesting picks right there coming in from Milan Vaishnav. Nirav, I want to come to you, on the other story that we're tracking this morning about maybe some uncertainty in the cables and wire space. That's at least what UBS is saying. And they see trouble in store for a Polycab or Havells. Now, these are some companies which have just about recovered. I mean, if you pull up the 1 week or the 1 month chart, they've seen quite a bit of volatility because of competitive fears. Do you see more pain in store for them today?
Well, it's quite likely that the competitive intensity will go up. That is definite. And I think with the entry of the larger players, as we already pointed out, that Birlas have also entered this space. And they are going to set up a plant near Bharuch, which is very close to Jagadia Copper, which is a main source of raw material as far as the wires and the cable business is concerned. Now, on similar lines, I think we have Adani, which is entering into this space, and they also are very close to the source of the iron ore, so source of the copper, which is Kutch copper. So I think this again could be a very, very planned and a strategic move, and definitely it is going to impact the incumbent players because valuations over there are, as it is, quite stretched at this point of time.
The other interesting thing is we know that the Adani Group is getting into the copper business as well, right? So aside of the fact that they might source it from somewhere, they will be their own manufacturers of copper, and therefore fully backward integrated. And that's why I suspect that while maybe Polycab, KA, RR, Kabel come under pressure today, maybe even Ultratech could come under pressure today. They put in money, large money out there.
But there's no clarity on capex. There's no clarity on intent. I mean, what we know so far is not really clear on...
Not clear, agree completely.
Yeah.
But just the playbook. I mean, when the cement plants were announced, and just the announcement made, Ultratech and a lot of others, the sentiment around that spoil. I wonder, it's not as large for Ultratech.
But one would assume to take that forward a little bit, the backward integration, the ability to price aggressively will therefore be there. And so from that perspective, it's worse from the incumbents than the new.
Yeah, maybe even if it's not a negative, I want to suspect that this caps upsides for these guys, right?
Yeah.
For everybody in this business. Ultratech is not strictly in this business, but they made an investment.
But for the ones for whom it's their bread butter, there might be a bit of pain. Well, another space to watch out is the sugar stocks. The Indian Sugar Mills Association remains optimistic about the upcoming season, backed by favorable weather conditions and improved planting. Before we speak to the Director General at ISMA, Deepak Balani, let's go across to my colleague Varsha, who's setting up that conversation for us.
Thank you for that. So yes, there was this press release by ISMA yesterday wherein there were some rumors about the, considering the supply of sugar, wherein they've come up with a press release where ISMA has projected a strong early sugar output of around 43 lakh tons for October and November. This is the first 2 months. Talking about the current season production and supply, 238 lakh tons sugar has been produced as of March 15. 38% of mills are still operating, and they are projecting 54 lakh ton closing stock which ensures adequate domestic supply. On the net sugar production estimate that has been revised to 264 lakh tons after ethanol diversion. Now please note that earlier the guidance was around 294 lakh tons, which has been reduced to 264 lakh tons, and ISMA has assured a comfortably supply despite regional output reductions. On the market stability, if I were to talk about the sugar prices, the retail sugar prices rose only 5% despite 11.5% of FRP increase, and whereas the other essential commodities saw higher prices increase. On the projection, ISMA is optimistic about 2025-2026 season due to good weather and planting, and improved cane varieties is expected to boost yields. On the export side, we all know that exports were banned, but now the government has come up with a policy wherein 10 lakh ton export policy will actually benefit sugar industries, and 80% of can payments have been completed in 2024-25 season, up from the previous period. And lastly, they are expecting exports to add almost 4,500 crore to foreign exchange reserves.
All right. Thank you so much for that, Varsha. Now, let's get some clarity from Deepak Balani, who's joining us, the Director General of ISMA. Very good morning to you, Mr. Balani, and thank you so much for speaking with us. Now, for the last couple of days, the concern has been that there is going to be a shortage of sugar supply from two of the world's largest producers, Brazil and India. And in part, this is being attributed to estimates put out even by ISMA that your production levels are going to go down from 27 metric tons to 24 metric MMT. Give us some clarity on this.
The entire narrative of supply constraint is unfounded. See, even though we have reduced our estimate from 272.5 to 264 in last 1 month, but having said that, we have started the season with almost 80 lakh tons in opening stock, which is much higher than perhaps what should be kept. So if we take an opening stock around 80 lakh tons, and even if we take a net production of 264 lakh tons, that makes our availability to 344 lakh tons. Our domestic consumption is going to be max to 80 lakh tons. And with an export of around 10 lakh tons, we still will close at 54 lakh tons if we take 35 lakh ton as a diversion, which perhaps has been reduced from 40 lakh tons to 35 lakh tons. So we are going to close the season at 54 lakh tons. Basically, the idea is that we should at least have 2 months of stock, a safety stock, when we are closing the season. That means sufficient stock for October and November. So even if we start the season with 54 lakh tons, and considering that the next year the crop looks very good, and the report of the cane planting is perhaps very positive, so we are looking at a much better crop and production next year. And historically, if you see, when the mills...
No, Mr. Balani, I understand that. But the fact is that you have reduced the output indicated. You have reduced it from 27 MMT to about 24
Exactly.
MMT.
I was just explaining you. Am I clear? Am I audible?
Yes, sir. Yes, sir.
Okay, I was just explaining you the dynamics of supply, how the supply is going to really be there. There is absolutely no concern. So historically, for October and November, we need almost 45 lakh tons for our domestic consumption. Because we have an early Diwali this time, the mills are going to start around 15th of October. And we will have a production of almost 46 to 47 lakh tons in October and November. And with an opening stock of 54, I think we have sufficient stock so there is absolutely no concern on the supply side. Yes, very rightly, we have reduced our estimate because primarily the mills in Maharashtra and Karnataka have closed very rapidly because of the lower yield and early flowering, and also some bit of a problem in UP because of the red rot infestation. But still, the supply is still very robust, and we have a very good healthy stock going forward.
You've also talked about misinformation and rumors. Because let's look at what happened. Sugar futures have hit a 3-year high. There has been concern. You saw sugar stocks jumping up last couple of sessions as a result because, the fear of prices. What are these rumors? Because what I see is statements from industry bodies that there will be reduced supply for a variety of reasons.
So there was off late, there was some news that the productions are, because of the reduced production, we will have a supply constraints. And the government might, so it was completely a rumor, it might just restrict the export which they allowed in January. But I believe that was very unfounded. The exports are continuing. I believe the government will continue with the export program which they have given in January. And because of that, a huge benefit has actually been given to the farmer because the cane payments, the percentage of cane payments have increased. Because if you see before the export program, around 69% of the cane payments were made to the farmer. Today, after almost a month and a half, we have almost 85% paid cane payments have been done. So that is a very positive news. The market have stabilized. The domestic rates have stabilized because way back in December, our mills in Maharashtra and Karnataka were selling sugar at almost 33 rupees a kilo, which is much below the cost of production and which is around 39.40. So I believe because of the export program, the benefit has not only gone to the mills, but primarily it has gone to the farmer. So I believe there is absolutely no reason to think that government is going to stop the program at this point of time. The export program, in my view, will continue. We just wanted to put a press release in the media that everything is fine in the industry. We still have very good supply. Next year, crop looks very good. So there is absolutely no concern on the supply side.
Okay, so point noted, Mr. Balani, and thanks for that clarification. I just want one more. If you are revising production downwards, having said that, and you've amply clarified that you have enough supplies, could the interpretation also be that the diversion to ethanol of cane, of stock for ethanol, would be slightly lower than it was last year? Do you have estimates for that?
See, last year was a very unusual year because if you remember, in December 23, government had restricted midway, they had restricted the ethanol diversion from juice and B-heavy. So last year diversion was only 21 lakh tons. But this year, we started with a diversion estimate of around 40 lakh tons. But because of the less cane availability, and also one very important point, that in January, we were expecting the juice, ethanol and B-heavy prices to be revised, which was not revised for last almost 2 years, in spite of the fact that we have 11.5% increase in the FRP. So the industry was waiting for the government to increase the price of the ethanol, which unfortunately has not happened. And that also has led to the reduced diversion into ethanol. So from 40 lakh tons, we have revised to 35 lakh tons.
Okay, 35 lakh tons. Okay. Thank you so much, Mr. Balani, for that clarification, and appreciate you joining us and taking the time to explain this to us this morning. And of course, several factors that are at play in the sugar space. Let's also take this as a question to Nirav very quickly. Nirav, from the perspective of sugar, everybody has spoken about this in the past, right? It's a highly cyclical business, and so therefore you have to be wary when you get into this. How would you play this? Would you pause? Would you wait for clarity as to how things will pan out over the course of the year?
Well, yes, definitely. In case of sugar, it's very necessary to be cautious because, as we discussed, there are a lot of moving parts over here. One important factor is that the final realizations. The industry is always keen to go in for the price hikes to pass on the price hikes to the final consumer. But that's a very difficult process as far as this. It's an essential commodity as such. This is one important factor. The second important factor is that the sugar mills are always looking out for lucrative exports. So if the government gives them the necessary approvals, then exports can be a lucrative area for them. The third important factor is the distillery operations. So I think it's very important that the distillery operations do well. And the fourth is the captive power. I think captive power is a very important source of savings for the sugar companies. So it's not very easy that you tweak the production or you increase the production, but it's a matter of increasing your realizations, improving your exports, doing more ethanol sales, doing more distillery operations, etc. So I think rather wait for the results to pan out before we take a call on the sugar stocks.
Yeah, I mean, typically the space does well when people don't have too many other ideas as well, or when the cycle is really strong. I think it's very difficult to make a case for a very strong cycle currently, for sure. Point well taken, Nirav. Milan Vaishnav, before we thank you, you've given us your ideas, but I remember you used to give some terrific option strategies to us, right, earlier. I wonder if there is an option strategy on the Nifty that you have, or the Bank Nifty that you may have right now.
Right now, I would like to refrain from giving out any options. But right now, if we just take a isolated view of the options data, one can still continue to play a strangle with selling around 22,200 or 300 March expiry call and selling some 200-300 strike price lower put call. I'm not being strike specific because I had not prepared the strategy, but still we can still play out some 300-point strikes on either side as a strangle and expect the markets to remain in the range, not moving past 22,300 very easily until this month's expiry.
Well, yeah, okay. What we'll try and do is next time that we have Milan, and maybe we should make the just kind of outline the strategy as well, because it becomes very difficult for somebody to execute too. So point well taken, right. Milan. But thank you so much for joining in today, and looking forward to talking to you more.
My pleasure. Thank you very
much. Let's welcome in Shrikant Chauhan, Executive VP and Head Equity Research at Kotak. Shrikant, thanks for joining in and good morning to you. Has the mood changed, and are you cautious at these levels for the Nifty for a long trade, or is it okay to do a long trade after the start today?
Good morning, Neeraj. Good morning, everyone. No, I think we are at the middle of the entire rally that we are expecting in this market. We are not expecting market to cross the level of 23,800 so easily. But yes, we are heading towards the levels of at least 23,400, 500 sort of levels. And currently we are at the middle. So 23,000 is definitely going to act as immediate resistance for the market, because there is good amount of resistance lined up in terms of option statistics, in terms of call writing, as well as in terms of 50-day simple moving average. So most of the time, whenever we saw some rebound in the market, we saw some profit taking close to 50-day simple moving average. But this time I'm of the view that the market is going to surpass this 50-day simple moving average, and it may retest the levels of 100-day simple moving average, which is around 23,500. So in case today, because it's a expiry day, if we see any correction during the day close to 23,900, 920, then there we should look for taking some long bets. And because it's expiry day, I'm expecting some profit taking close to 23,000 levels. But if really like somebody is interested in holding long positions, then they can keep stop loss at 23,800 for holding long positions, because still upside is there. Bank Nifty especially, there also I'm expecting 50,500 sort of levels, because most of these stocks have crossed their important levels, and furthermore activity is more likely in the near term. So Bank Nifty also 50,500 is the next level to watch out for, and supports exist at 49,500 and 49,300 levels.
Okay, so a slightly more bullish view than our previous technical analyst Shrikant, which is interesting to see on this morning. What would be your top picks though?
Yeah, see, we saw activity in banks, commodities, few FMCG have also participated in this up move. Now we need support from tech companies. See, the broader trend for IT companies is still down, but they have fallen to their extreme levels in the near term, and we could see some rebound. Along with the overall performance of the market, we could see some short covering in IT companies, and that's the reason we like a few IT companies. But also, if we go through with few other index heavyweights, then in that Reliance Industries should do well, because it is consolidating since last 4-5 days when the market is actually rallying. So here I'm expecting a breakout sort of formation in the near term, maybe today or tomorrow, and the chances of hitting 1300, 1320 would turn bright. So we can keep stop loss at 1220 for creating long positions on Reliance Industries. And we also like few fertilizer companies, sugar, fertilizers, they are displaying major strength. So in that space, Chambal fertilizer looks good, which is around 586, 590 levels. There I'm expecting 630 sort of levels in the near term, but in the long run, the stock may even move towards the levels of 700. We can keep stop loss for creating long positions at 570. So Chambal fertilizer looks good at current levels.
Okay. Right. Time for a very short break. We'll be back right with the pre-open rates and more calls from Shrikant Chauhan and Meera Vashar. Stay tuned.
he sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter.
Welcome back. You're watching India Market Open. It's setting up to be another positive start. Let's see how far that takes us. For now, 23,000, not too far away. It could be on the cards at open as well if we open gap up. We're in conversation with, of course, our experts. We've got Nirav Ashar as well as Shrikant Chauhan. Shrikant, I want to come to you on a clutch of stocks in a couple of pockets that did particularly well yesterday. Of course, broad-based buying, but your capital market plays, something like a BSE, something like a CAMS, Angel One, all of these stocks ratcheted up quite fast, and you saw quite a few defense plays also that moved up very substantially. Is this the moment to catch that updrift, or would you be cautious?
Yeah, it's a good question because whenever we saw rally or recovery in the market from lower levels, especially in this fall, we saw specific buying interest in these two spaces. The reason is maybe because they have a huge exposure in the momentum indices. So most of these mutual funds, they have huge investments in all these momentum sectors. And that's the reason specifically we are seeing buying interest in these stocks whenever there is a recovery in the market. But yes, in that space, we like a few stocks which should do really well. In that HDFC, AMC, CAMS, there we have bullish view, Nuvama, UTI, AMC. These are the stocks to buy even at current levels because the upside is clearly visible on technicals as well as on fundamentals. So if we go through with a few stocks like HDFC, AMC and even I can say CAMS, then at current levels, both are very close to their important resistance level. But broadly, I am of the view that eventually CAMS is heading for 4,200. Currently, it is at 3,800 levels. So in case if there is any correction, slight correction, close to 3,700, 3,650, then there we should look for taking some bets. And if there is an aggressive sort of trade somebody would like to take, then he can keep stop loss at 3,650 for creating long positions even at current levels. We also like HDFC, AMC. There also we have bullish view, and I'm expecting this stock also to move towards the levels of 4,100. From the defense space, I think they have crossed their important levels, and stocks like Mazgaon Dock or Bharat Dynamics should be on the watch list.
All right. Some interesting moves that we're seeing early this morning, but of course we'll wait for the pre-open to settle and stabilize. Just a couple of minutes in actually. Garden Reach buzzing again. I'm just wondering, Shrikant, if you're going to see that up move continue as far as defense stocks are concerned. And that was an interesting play that we saw pair out yesterday. Any picks over there or anything that you're liking over there?
Yeah, in that space, we need to focus on very specifically on Mazgaon Dock, which is currently trading around some 26.50, 26.25 levels. If we compare this stock with other stocks, I mean to say if there is a relative comparison, then this stock has fallen lesser than other stocks. And now when there is a upward activity in the market, we are seeing good amount of buying interest. So from here, the stock can move to its previous high of 2950. That's the view. And we can keep stop loss at 2500 for buying this stock at current levels. We also like Bharat Electronics because it's a stable stock and again relatively better than other stocks like HAL or maybe GRAC. For Bharat Electronics, there also we have view that based on technicals, the stock can move towards 320. At current levels, it's a buy with a stop loss at 280. And for GRAC and other stock, I am expecting rebound to its deep sell-off. So it's a pullback rally that we are witnessing and close to resistance level, like close to 1800 levels. We should look for reducing GRAC, and for maybe for HL, 4000 should be the next level to watch out for.
4,000 for HL and GRAC. Would you book profits today if your opening session mirrors what you're seeing in the first minute of pre-open? Shrikant, question for you. Garden Reach should book profits today
yes.
if it mirrors what you're seeing in the opening session, pre-open session?
Yeah, definitely. We should look for reducing some positions because see, this is not something which is like going to surpass all its important levels. We are seeing just a pullback. So at resistance level, we need to be careful, and we should in fact look for reducing leverage positions or weak long positions.
Okay, I found it interesting that you picked Reliance Industries earlier as well. We spoke about Reliance Industries, but it hasn't participated in a big way. Why are you saying that it will do so now?
See, it's a part of Nifty 50 index and Sensex. So most of the time, whenever there is a rally in the market or recovery in the market, eventually we see a participation in Reliance Industries. Also, if we go through with its businesses, then most of the oil and gas stocks have started recovering from their lows. And we are expecting further activity like ONGC or maybe BPCL, IOC sort of stocks. Also, if we go through with few other telecom or retailing side of companies, then there also we have seen good amount of buying strength. And if we consider the performance of the Reliance Industries, then before the market moves, like before the recovery that we saw in the market, Reliance already recovered from the lows in the past. It was around 1150 levels. From there all the way it came to the levels of 1250 and it started consolidating. So it's a consolidation, it's a continuation sort of formation. So it's a bullish continuation that I'm expecting. And on the dismissal of 1260, the stock can move to the levels of 1300. So broadly, I think the entire this particular oil and gas space should do well in today's. That's my view.
Okay. Just before we get into the big brokerage call of the morning, need to highlight some of the stocks that would be the high-flying movers. So start off with the cable and wire companies. While the Nifty is up 0.6%, Polycab, RR Kabel, KEI. Now, it may well happen that the quantum of the reaction may not be as steep as was the first time Ultratech came into the competition because there was new news. I wonder what Ultratech is up to as well. But KEI and Polycab certainly look like getting smashed right now. And that will be an interesting one to see. You know, at 9:08, we'll try and talk to Nirav Ashar about what would he do with these names if they start off at the levels that they are looking like starting off right now, which is about 10% lower, at least for Polycab and KEI. Also wonder what Jyoti Structures is up to. Because that stock had, Polycab is now 5% odd. So I think this will change. Jyoti Structures, nothing too dramatic, up 1%. And Jubilant Foodworks is the other one, which because of the Turkish lira depreciation could be an interesting one. Watch out for that one. Okay, but the big brokerage call of the day, that is the CLSA view on Z. It's after a while that we've seen a large brokerage come out with a note on Z Entertainment. And should we get in Harsh to try and talk about this? Harsh, I haven't seen a report on Z for a while. What is CLSA's argument?
Absolutely, and not seen something this bullish either for a while now.
65+% upside. They are calling this a virtual doubler, possible virtual doubler. What they're saying is the stock has hit rock bottom in terms of price to earnings. Just about 8 times is what it's currently trading at. The stock has slumped 55% since the merger has been called off with Sony. Now, in terms of relative valuations, here it starts getting interesting. The P is 50% below pre-merger, so pre-announcement of the Zee-Sony merger, and 25% below the 2019 pledge crisis that Zee went through. So looking really good. In terms of what is anticipated going forward, they believe that the worst is behind. One, ad revenue could propel growth. They are expecting the PE to re-rate to 12. This is because it's the number 2 TV network, ramping up on OTT. TV in India is still higher than digital in terms of viewership. TV ad spends have been subdued and in fact are at peak pre-COVID levels even now. They're expecting on a conservative basis a single-digit TV ad spend growth over the next couple of years, and despite that, Zee, if it even clocks a 6% total ad spend growth, and I'm not just talking TV, total ad growth for Zee, if it's just about 6% FY25 to 27, they are expecting EBITDA to grow at 22% and PAT to grow at 33% FY25 to 27. So extremely strong margin expansion is what they are expecting on top of the 9% expansion that we saw in the Q3 quarter. Another 6% expected.
All right.
Clean balance sheet, 1,700 crore cash, and therefore deep discount.
All right. So yeah, and the outlook of doubling the stock price in 12 to 24 months. I mean, frankly, 12 to 24 months is still quite a range. But at 103 right now, any views here, Nirav?
Well, nothing to lose as far as the stock price is concerned, but that's the only saving grace, because there have been a lot of setbacks as far as this company is concerned, corporate governance issues, and that's why it's available at this price. But I think going forward, this talk about the increase in the advertising revenues and the subscriber base, etc., is going to be difficult, because this is a very, very competitive business. At the same time, the OTT space is also quite crowded. So to make deep inroads into this particular segment will be difficult. But from a price perspective, it looks attractive still.
Okay, just want to point out, Shriram Finance once again setting up for a decent move. It's up about 3.3%. Let's see if that continues. Shrikant, any view on this particular counter? It's been buzzing off late, right?
Yes, Alex. Yeah, we like this stock. The reason is because it is relatively doing much better than other stocks, and also if we consider the NBFC space, then in that also Shriram Finance is doing well. Again, it's a strong pullback to its deep sell-off that we saw from the highs of 700 to almost 500. Now it is very close to those levels. So till the stock is not crossing 720, we need to be careful. But yes, in the near term, I'm expecting this stock to move towards the levels of at least 690 or 700 again. So there we should look for taking some profit. So now if we see any rally, like today it is opening higher, and in case if we see the stock is approaching to 700 levels, then there we should look for taking some profit on long positions.
Okay, since it's 9:08 and then the rates have settled, and we of course know what's happened to some of the stocks, I wonder what the metal stocks are up to as well in the session today. So should try and pull up the likes of JSW Steel, SAIL and Tata Steel and just see if yesterday's move is seeing any kind of a follow-up. SAIL should come up because that was the one with, okay, just about a flattish move, nothing too dramatic today. But yesterday the unequivocal view was that while there is a gap up, there is still some more to go because of this, the duty that has been levied. Now, Nirav Asher, are you a buyer in any of the steel stocks because of the duty levy?
Yeah, we had bought Tata Steel and Jindal Steel and Power, and we continue to hold these positions at this point of time.
Would you buy them afresh, Nirav?
No, not at this point of time now.
Okay, but you're comfortable holding them? You don't want to commit fresh capital there?
we are comfortable holding.
Okay.
Yeah.
Now, viewers, that's because they have an earlier position. By the way, not as big a reaction, but certainly a negative reaction on Polycab, KEI, as well as RR Kabel. So about 4% apiece for Polycab and KEI. RR Kabel, slightly low liquid name, but down just about 1%. So nothing too dramatic there. Settling down, if you will. Havells, by the way, is also down 2.5%.
So I think the recovery story this morning could be IT, and Nirav, we actually started our conversation with that. Look at where the Nifty IT seems to have settled, and that was one space which didn't participate at all. With the outlook of 2 rate cuts in place by the Federal Reserve, do you think that there are some opportunities there, perhaps in mid-cap IT, that you would like?
I think mid-cap IT is relatively better placed as compared to the large IT players, because still they are dependent on the client spending in the US markets. That is one factor. The second factor is that the dynamics of the industry have been changing. We've seen that the linear growth curve, which we have seen for 30 years, as far as the IT industry is concerned, is now coming to an end. And we need niche players in this industries, companies which are working on new technologies like artificial intelligence, machine learning, etc. So I think this creates a kind of a fresh level playing field for the mid-cap companies. So there we could see some exciting plays as far as the mid-cap IT companies are concerned, and they could even manage to outperform in the medium term as far as the new areas are concerned.
Anything you're finding interesting, Shrikant, in mid-cap IT, or you would stay away right now?
No, I think, all these stocks have fallen to their oversold levels. They are extremely oversold in the near term, and if there is any upward activity, then we can expect that from Coforge specifically, which is currently trading around 7650, 7700. There I'm expecting stock to move towards the levels of, again, 8000, 8050 sort of levels. So it's a strong bet because it is relatively lesser impacted stock as compared to other IT companies. And we also like LTIM, L&T Mindtree. The reason is because it has fallen to its extreme level. I'm to say it has broken almost all its important levels and it is completely oversold. So if there is any again short covering in the market, then we could see some short covering in this particular stock also. So we need to keep a very tight stop loss for creating long positions, trading positions, especially in these IT companies. But yes, in the near term, I'm expecting LTIM as well as Coforge to do well.
For LTI, Mindtree and Coforge, since you've spoken about it specifically.
Yeah. Absolutely.
No, what would be the stop loss?
Yeah, for Coforge, we can keep stop loss around 75.50. And for LTI Mindtree, the stop loss should be somewhere close to 4,400 levels.
Okay. Shrikant, you also spoke briefly about the NBFC space, and it's been an interesting play in this week as well. 0.5% up for the Nifty Bank at this juncture, very close to that 50,000 mark. And you saw a few big moves earlier in the week by the likes of ICICI Bank. I'm just wondering, what is the best play here? Do you play the index or do you play individual stocks? Quick answer.
I think at this levels, it is better to play individual stocks because all these stocks have crossed their important levels. So from here, ICICI Bank can move to the levels of maybe 1450, 1500 sort of levels. And for even HDFC Bank also, I'm expecting stock to move towards the levels of at least 1800 again. So if we consider or if we compare this with the indices and returns, then I think stocks can do well.
Okay, stay on, Shrikant. We'll maybe try and get in some more strategies post-market open, but we're looking at yet another day of a gain, about 0.5, 0.6% on both the large caps and the small caps anticipated on open, 0.47%. So, yeah, but in that range, if you will. 23,000 on the Nifty. Well, a few hundred points ago, this seemed like a distant dream. We have it now. Let's savor it while it lasts. Well, may go further as well, by the way. Shrikant Chauhan believes it will. IT should come up on your screen, and let's see what Nifty IT is doing. 0.8%, quite a remarkable pullback really from the depths of yesterday. So it's kind of recovered the 2% loss that it had almost. Mid caps 0.5%, small caps probably 0.5%, 0.8%. Really good show here. So good market breadth. Let's get the heat map up on the screen. I would suspect more green than red. Yes, in fact, hardly any red, about 6, 7, 8 stocks. Okay, that screen moved really quickly. But yeah, there is some bit of red, nothing too dramatic. Sun Pharma, Reddy's, Trent. No particular reason I would reckon out here, but what's doing well? Shriram Finance, Wipro, Hero MotoCorp, some of the beaten down names. Remember, Wipro had a bit of a pull back in trade and now the top gainer in trade today. Hero MotoCorp bouncing back from yesterday's losses. IT by and large bouncing back from yesterday's losses. M&M, I think the third straight day of a positive move here on Mahindra & Mahindra. IndusInd Bank in the green, interestingly. Adani Enterprises, just about 1% reaction. I mean, I would presume that cables and wires foray is not really dramatic in the overall fortunes for Adani Enterprises. Yep, HCL Tech. So it's essentially IT on the upside, probably the only standout sector aside of some beaten down names making a bit of a comeback, Tamanna.
Holding on to 23,000 is not going to be an easy task, as is clear. You're hovering right near it, and of course some selling pressure coming in, but not a bad start as well. I think it's also better if you don't have runaway rallies right now till the markets do not consolidate. So it's overall very good. Wipro, interesting. They have a new AI strategy out, and perhaps that is also driving the stock. We should look at that more carefully. Meanwhile, let me look at what's happening in the broader markets. Let's pull up the small cap and mid cap indices for a sec. Mid cap 150, about 0.5% up, in line with what we're seeing with the Nifty and the Sensex. The small cap 250 doing pretty well, 1% up. I want to pull up the micro cap if we can, because I saw quite a bit of activity there in the pre-open session. The Nifty micro cap about 1.5%. Yes, it's the broader markets that is ruling the roost today, which is always great for portfolios. Let's pull up the sectoral heat map and take a look at what's happening there. Nifty IT, Nifty Media, but not too many stocks in that index in any case. But you know, we started off our coverage today talking about the pullback that you will see in the Nifty IT, and there you see it 1.5% up. Banks also doing well. So when you have both banks and IT doing well, it's overall expected to be a good day. Broader markets continue their up move. The small cap index about 1% up. Only the VIX in the red. We like that. Consumer durables also flat. So a very pretty screen today, all in the green as we like it. Let's look at individual stocks and stories and what's happening there. We put Raymond on our watch list. A big headwind for the promoter maybe has come off. Is there a settlement in the offing is the question that we see. Stock about 2% up. Z is the other one that we picked. CLSA has a bullish view on the stock, 4% up in morning trade. CLSA says it's hit rock bottom, can only go up from here. Defense is back in focus. Let me look at Garden Reach, BEL, HAL. Garden Reach about 3.5% up today. I'm going to pull up Paras as well. This 142 crore DRDO order news has come out shortly before markets have opened. So Paras Defense also is something we should look at. 8% up on that DRDO order from Paras Defense. So that's interesting. Cables and wires, is there really a big hit because of fears of competition? Yes, it is, at least for Polycab, definitely. Polycab, Havells, KEI, all of them feeling the pain. I want to see if Phenolex, RR Kabel, yeah, all of them feeling the pain, but Polycab worst hit is what I would say. MCX, I thought interesting product that they have come out with. New contract for 10 gram gold, futures contract 2.5% up on the stock. Prince Pipes was the other one on our radar. They've opened their 8th facility in Bihar. Can't see anything happening there, completely flat right now. And Ola Electric, there have been inspections, a lot of questions there, more trouble mounting for Ola, about 1.5% down on the stock. So overall, I think some good winners to pick out there this morning, Alex.
Certainly, and some more names I'm going to add, not necessarily reacting to news updates, the ones that you've listed out, of course, the one. By the way, look at the breadth. I was going to talk about this, but we have it on the screen, so why don't I point that out? Very strong, and advances ruling the roost once again. But pull up something like an Eris Life. It is up close to 11%, in fact, over 11% at this point. An interesting play here. Ratan India up about 5% or so. We spoke about Z Entertainment, it's up about 5% as well. But KC International is what I want to ask Srikanth about, because there's another up move to the extent of 4.7%. Srikanth, we were talking about this as part of a clutch of stocks over the last week and a half that has moved up very substantially on very strong volumes as well. What's happening here? And if you have had the ability to get in earlier on in the run, would you take some money off the table now on KC International?
Yeah, it's a very strong technical peak that we can say because the way it recovered from the lower levels, uh, it has broken all its important resistance level, which were close to 750, 760 levels. Now it is at 805, and we saw steep decline in a very short span of time. If we consider the daily and weekly charts, then it is diverging positively. What it means? It means that it is reversing its previous trend, which was down, and we could see a very strong pullback in the near term. So the pullback levels could be around 900 or maybe 980 sort of levels. So from here also we can see 10 to 15% sort of appreciation, and that's the reason it is better if there is any position, then just hold on to it. Further, more upside is more likely in the near term.
So interesting. I wonder if Kalpataru Power Transmission, which we spoke to as well a while back, could be doing okay. But there's some serious volume activity in KC International. And remember, I think in May or June, when Vimal Kejriwal had come on NDTV Profit, he had said that he's not seen such enthusiasm in business in the last 22 years. So clearly it's showing in the stock because it's first of the blocks in terms of recovery. Nirav Ashar, power transmission will not go anywhere, right? T&D right there. So, but KC is off substantially from the lows. Do you like these companies, power transmission companies, and is KC a good fit there, or do you like something else?
Yeah, actually there are very limited players in this space, and there's a lot of work which is to be done in this particular space. So there's no dearth of orders. Companies have been continuously winning orders, and we have players like KC International or Kalpataru Power, Jyoti Structures, which is on the revival path. So all these companies have got, they are flush with orders. They have to focus on execution and be very careful that the working capital cycle doesn't get impacted, because if there is any slowdown in the execution or in the working capital cycle or in the availability of labor, which these companies had pointed out, then it's going to hit the margins directly. And these companies are working on wafer thin margins. So I think that is a key monitorable as far as these companies are concerned. So I think this is the only factor which they need to watch out for. Otherwise, there's no shortage of work.
Okay. Shrikant, we didn't have the opportunity to ask you after pre-open what your idea would be, whether you've changed anything, whether you're spotting any opportunities, anything that stands out after open?
Like after opening, yes, we are seeing good amount of buying strength, or maybe we can say some short covering in IT companies. So in that space, we like Coforge, which is like still, I can say, one can look for taking long positions, even at current levels, 77.60, 77.50. We could see the levels of maybe 8,000 in the near term, and we can keep stop loss at today's a little above the today's lowest level, which is around, we can say around 76.50. So keep a stop loss of 100 points and keep a target of 8,000 sort of levels on the higher side. We also like NHPC, which is trading around some 81, 82 levels. Good amount of buying attraction we are seeing in the stock. And the next level to watch out for would be 85, 86. So it is very close to its breakout level. And finally, from the from the pharma space, we like Divi's, which is around 58.50, and there the formation is indicating us that it is heading for the levels of 6,200 again. This particular space is really doing well, and in that this particular stock should be like look for adding at even at current levels.
Okay, I also want to ask you about Paytm. It's down about 2.5% or there, in fact 3.5% at this point. Shrikant, is this simply a case of people taking money off the table?
The overall formation is still indicating us that it is going up, but it is going up gradually. But at the same time, if we consider the entire formation of the stock from May 2024, then in the month of May 2024, it was around 350, 300 sort of levels. From there, all the way it rallied to 1080. And now it's a correction to the previous rally. So I am of the view that the stock has already corrected to its previous strong up move. And again, at this level, it's a decent buy. So purely based on technical view, I am of the view that we should look for adding these stocks even at current levels more on dips in the near future. I'm going to say next 3 to 6 months of time, the stock is going to surpass its previous high of 1100. That's the view that I can make out based on its technical formation.
Okay, so Paytm in focus. I think the other one that we should talk about very quickly is NCC. NCC also in focus this morning. They've got a 2130 crore construction order in Andhra Pradesh for the development of the capital in Amravati. 5% up today. That's doing really well. I want to recap what's happening with defense stocks, and we spoke about this with Shrikant. He said Garden Reach not that great, but look at Paras Defense this morning, and Paras Defense is what is really catching my eye. Shrikant, Paras Defense would also be a sell on rise kind of a story, or more upside there?
For Paras, what I can say is that here also the gradual up move that we are seeing in the stock. It is around 1025, 1030, and the overall performance of the stock is not that great as compared to other defense companies. But yes, there is a range bound sort of activity that we can see in the near term, and the stock is still behind its important resistance level, which is around 1200. So from here, the stock can move to the levels of at least 1150 if there is any continuation in the overall upward activity in all these defense stocks. But broadly, I think we need to focus on those which are doing relatively better than other stocks in the same basket. And that's the reason we like Mazgauda.
Okay. Interglobe Aviation, guys, and at around 4,500, we got a lot of people saying that the constructive momentum is building out. It would be a strong quarter. Bunch of brokerage notes. Today too, there is a BOFA note on Interglobe Aviation which speaks about how they have upped the target price. There's a Jeffries note on Indigo and a clutch of those out there. So pretty interesting. But I just wonder, Shrikant, if the best time to take the trade is behind us already, because the stock has rallied quite a bit. Would you? But or is it that it is still looking so strong that you're comfortable taking a trade?
What you're saying is right. I think at these levels, it is better to avoid for taking any trading bet because the stock is surpassing its all-time high. And whenever the stock is very close to its surprising, I would say it's all-time high, we see good amount of traders activity, but most of the time it fails. So broadly, if there is any correction, then we should look for taking some bets. I'm not saying that the stock is now going to fall back to the levels of 4,500 or 4,600, but yes, the stock can again come back to the levels of 49 or maybe 4,850. There we should look for taking trading bets. At this level, if there is any long position, then just hold on to it because the overall formation is suggesting us that it is heading for at least 5,500 or 5,700. So which will take some time. It will be more volatile because it is very close to its all-time highs. But broadly, the overall trend is suggesting us that it is heading higher.
A lot of talking points emerging from the analyst meeting with Interglobe Aviation. Of course, low double-digit growth in traffic is what is anticipated in the short term. But Nirav, if you look slightly further out, and not slightly actually, if you look all the way up to 2030, the expectation is that they will continue to add a plane every week and the fleet will rise to 600. They're talking about having a 40% odd contribution of international to the average seat per kilometer. So several interesting points there. Would you be a buyer based on the fundamentals? 64 odd % control of the domestic market and building international routes as well.
Well, the outlook is quite interesting, but I think I'll wait for some correction before making an entry into the stock because, of course, there are going to be a few twists and turns in this journey. So wait for a correction and then enter at a healthier levels.
Okay. So then, let me add another question there because let's talk about the airport plays as well then. Neera, from the infrastructure space, which once again is getting interest and attention, would you pick anything there?
In the infrastructure space, I think we like companies like KNR Construction is there or MCC is there. Larsen & Toubro, of course, remains the prime pick. So all these companies are looking quite interesting apart from the likes of KEC International, Jyoti Structures, etc.
All right. Thank you so much, Nirav. Thank you, Shrikant, for speaking with us today. We're ending this segment of the show in good spirits, which is great. The Nifty also holding on above the 23,000 mark. But let's shift to our corporate radar. And the company that we're talking about today, Seagull India, has been in focus for quite a while. It has received a 923 crore project from National Highway Authorities of India. We're speaking with the management shortly, but Anushi, who tracks the company for us, joining in now on talking about why this could be a game changer for Seagull's order book.
Right, thanks for that, Tamanna. So Seagull India is in focus, and this is on the back of an order win that we are looking at. That's the 923 crore of size, which was mentioned by you, and this pertains to a developing 6-lane greenfield southern Ludhiana bypass road, and project is to be expected to be completed in the next 2 years period itself. Now, Seagull India is infrastructure construction company, and their majority of their work is related to the highway segment. So what we have seen in NHAI in the recent couple of order wins that we are looking at, there has been a pickup in terms of where the ordering is concerned. So outlook on understanding how this one sector could fare for the business going forward is something that should be focused on. In fact, if you look at the key financial metrics of the company in terms of revenue growth, which have been there in the last 3 fiscal years, you're seeing robust growth numbers. 46% was the growth in FY24. In fact, in 9-month FY25 period, we've looked at a 16% of growth, with the margin standing in the range of 15%. 16 to 15% is the range that we are looking at, and the company expects to maintain this double-digit margins as well. In terms of where the order book is concerned, the order book stands at about 11,703 crore. This is as against the FY22 period of order book, which stood at 6,346 crore. The company has said that it has a bidding pipeline of 16,000 crore, and this is across its various segments, which includes railways, metros, and the national highways. So that is important to watch out for. Order book, 79% of it is tied up with NHAI as of December 24. So further expansion across the order book from other sectors is something also that needs to be addressed. If you see the ongoing projects, we are seeing Delhi, Saharanpur Highway, Marco project, and others which are in focus. So this is the overall picture that we are looking for Seagull India.
Thank you for that, Anushi. And of course, the latest one is the Ludhiana, the Greenfield Southern Ludhiana bypass. Ramnik Sehgal joining us. He's Managing Director of Seagull India on what has been happening with the company and this new order. Mr. Sehgal, very good morning to you. Thank you so much for your time with us here at NDTV Profit.
Thank you for having me over.
Oh, yes, absolutely, absolutely. Let's start with this 923 crore rupee order from the National Highway Authority of India. What more details can you add?
So we have the second package also with us, which is Ludhiana Bathinda package 2. So both tenders, both the projects are together. So in totality, 981 is that contract, 923 is this contract. So it would be around 1900 crores. So it makes good metrics for us because we are originally from Ludhiana. We already have a camps there. And both the projects together, it is mix of the structure and the Greenfield Expressway. It's a 6-lane expressway. And as I said before, we are originally from Ludhiana. Our journey started from Ludhiana. So we are strong enough. And this project was originally allotted to us about 2.5-3 years back for 702 crores, which government couldn't give us the land. But now more than 60% land is available. We are targeting to achieve the AD by maximum second quarter because we have about 225 days for getting the FC done. And this is a HAM project, and a HAM project is always a good bread and butter for Seagull because we don't work less than about 25% IRR, project IRR level.
Okay, this project is over the next 24 months. What is the kind of schedule you see in terms of revenue accretion? How does it hit your revenues and in what timeline?
So, this project should get started by second quarter or maximum would be the third quarter. So we would get revenue in next year from this project. But the good thing about Seagull is we have a great pipeline for next 4 years in which our Ayodhya projects are going to start. One of the Ayodhya project is very near to the AD. So Ayodhya projects are for 2,500 crores. And that was allotted 6 months back to us. And whereas if you talk about this another Jharkhand project, which again we are expecting to start in first quarter, the package 12. So the pipeline is robust. We have a great revenue coming from existing projects and new projects which are going to about to start. And the Bathinda Diwali package 2, we should expect that should also start by second quarter.
So, I mean, every quarter the new project will be starting. So, 11,700 crores, you rightly said, we have order book value. So, next 4 years, 3.5, 4 years, I mean, we don't have to look back. And good thing is, we've already quoted tenders more than 20,000 crore. And by 31st March, we should cross 30,000 crore. And the pipeline is great. The NHI is coming out with new projects. And last year also, we've got 2,100 crores from NHI, 900 crores in this year. So approximately 3,400 coming from NHI of around 4,500 crores.
Okay, Mr. Sehgal, a lot of your projects are near completion. I believe in the con call with the analyst, you stated that you might be eligible for early bonuses as well. So give us a sense of that too.
So our Bathinda Diwali, we are targeting to get a COD by this month or maximum next month. So we should get a bonus on that project. Our first project, which was Malotapur Sadhuwali HAM project, which got completed 8 months ahead of schedule, and we got bonus on that project also. And the bonus we got in the first quarter in this financial year, which is yet to get completed in 31st March. So yes, our USP is completing project before time and getting bonus, and that we've already shown before also. We've already got bonus in about 3 projects. 4th one is on track. And if you see other projects also, all our project milestones ahead of schedule. And we always work in such a direction that we should complete the project before time and get bonus.
Sure. Okay. What about, I heard you say that the next 4 years of ordering pipeline looks strong. Can you give us some details there?
So 11,700 is already our order book value, which we have in our hand. And we guided our investors that we should get 5,000 crore projects. We've already crossed 4,500 crores. So we have already quoted projects more than 20,000 crore. And this will increase by another 10,000 crore by 31st March, because we see a robust tendering pipeline coming in next 2 months. So, and then, you know, Seagull is in 10 verticals. So we don't have to only be dependent on NHI. We are working for the specialized project.
Sorry, I'm interrupting, but that actually was my question and my point. You're saying you don't only have to be dependent on NHAI, but as of December 2024, 80% of your order book is with NHAI. So this robust pipeline, is it NHAI dependent, or, you know, where is it going to come from?
So, you know, sometimes what happened, we got 3 metro projects also. We're doing Kanpur, Agra, we're doing Bhubaneswar. So all 3 projects are worth 1,700 crores. And with NHI, the project size is large. Whenever we get an NHI project, the percentage increases. Like I said, 2,500 crore is a Ayodhya project, 923 crores is a southern bypass. So 3,400 crores out of 4,500 itself makes a big difference. But yes, we are moving into water, irrigation, transmission, and those projects are large projects. And
I agree that metro etc. is there, but just from NHAI, because NHAI last quarter was a little muted. Are you seeing signs that NHAI's project rate will improve?
Yes, 100%, because they are approving. They've got certain projects approved from the cabinet. You would have seen it in the morning. Also, I got a message. This is another project which got approved. And you know, we as a company get qualified close to 6,000 crore for a single project. And we always tend to get the bigger and larger projects. We are doing the country's longest elevated, which is in Bihar for 2,000 crore, almost $250 million. That's 20 kilometers elevated. We have completed one of the longest 6-lane elevated of the country, which is Delhi Saharanpur, about 12 kilometers elevated out of 16 kilometers of the project size. So we intend to work into specialized fields where the competition is less and where there's a specialized job involved. And it doesn't matter that we have to quote in only NHI. We'll be quoting, we quoted for a railway station, Delhi railway station for 2,500 crores. We were L2. There was a difference about 74 crores.
No, agreed. Sounds interesting. It sounds interesting, and we're looking forward to hearing more. I'm so sorry, Mr. Sehgal, but I've run right out of time. Let's, have a more detailed chat in the future. But I think 2 important things over here. The total set of projects in Ludhiana is 1,900 crores, not just 932 crores. That's something that Mr. Sehgal talked about. Secondly, the order book pipeline from NHAI, National Highway Authority, is gaining speed, and they're expecting robust set of orders in the next 2 quarters. So thank you for that. All right, let's talk about SEAT for a bit. The tyre maker aims to become India's #1 car tyre maker by the end of this decade. That's what the CEO of the company, Arnab Banerjee, told my colleague Tushar. Let's listen in.
We had a third one, which is calm tires, which is very low noise tires. So all three are basically covering the bases in the premium segment, which is 17-inch plus. The Z-rated tire is also a 21-inch tire, which is about driving on a highway or on entry stretches of road. Of course, the speed limit is about, the max is 120 kilometers per hour. But our job is to keep people safe, even if they marginally do better. It is safe at 200 plus. We don't recommend you to drive at 300. So this is something which is going to be a big need, customer need in the coming years. Run flat tire has been around, but none was manufactured in India. So we have invested in the technology and come up with this product. And this will again go into that same premium segment of 17-inch plus. The third one is calm, which is about very low noise tires, and as things are opening up, people are driving bigger cars on highways and EVs are coming up, the need for very low noise tire is going to be more salient. So this way we are covering the emerging customer need in 17-inch plus, which itself is a big trend going forward. So we want to be in a very strong position in this segment of premium tires.
So essentially you're prepping for the future.
Absolutely, and the present.
Okay. Can you tell me what is this particular segment, 17-inch plus tires? How large is this segment right now, and where it can be in, say, 5 years' time?
Yeah, so right now the saliency has already reached 8 to 10% in aftermarket. In OEM, it's much higher. Okay. And it could reach anywhere between 25 to 30% in 3 to 5 years' time. So this is how we define our premium segment as our premium customers are. So it's by the vehicle type and hence the tire rim size, which is 17-inch plus.
Okay. Again, let's talk about these tires again. What is the production capacity you're aiming for at the get-go?
See, our production capacity overall of passenger car tires is about 40,000 tires per day. We are investing further, and maybe by end of next fiscal, this will go to 46,000 tires per day. And then there is enough space in our Chennai facility to further invest. So we are committed to this segment not only for India, but we have a very big presence globally, especially in Europe. In US, we have just launched. In Latin America, we have decent presence. We have a significant market share in some of the countries of Europe, such as Italy. So we are committed to continuously invest in capacity as well as innovation and capability in technology. So you will see a lot of news from SEAT, small and big, over the next few months on innovative interventions in passenger car tires.
Okay. You talked about the investments that are going into it. Can you tell us how much investment has gone into developing these new tires? I mean, there's a lot of R&D that goes into first run flat tires in India, calm tires in India. So what has the investment been like towards these tires?
See, we invest between capital expense and operating expense. We invest anywhere between around 1.5 odd percent, sometimes 2% of our sales in R&D. It's very competitive. If you see the trend over last 5 years, it's been the highest investment in R&D as percentage of sales. Globally, of course, we have some gap to cover. We need to invest more to be, as we increase our aspiration globally, we would like to see this investment continue or enhance in terms of percentage of sales. So this is overall R&D I'm talking about, of which these new developments take a significant jump.
You're mentioning exports again, international business. What percentage of your overall business, of your overall revenue, does international business command now, and where would you want it, say, by the end of this decade, if you have a short-term, medium-term goal?
Here and now, I can say we are at about 19 to 20% of our saliency, and we have just acquired a brand called Camso in off-highway segment from Michelin, and with the integration of Michelin, I see this immediately moving to 25-26%, and by end of decade, we would definitely look at enhancing it to 30%. At least. Yeah.
Is it a way to offset domestic pains that you may be seeing on a margin front?
I would not look at it that way. I would look at it as an opportunity on many fronts. One is we get to understand the competing technologies and brands which are there globally. The tires we sell in Europe are totally different from what we do in India or in US for that matter. It will help, it is already helping us understand the emerging technology on sustainability front, consumer front, and different niche markets in different territories, which will help us in domestic market in the OEMs as well as in aftermarket. So it is, without this knowledge, we wouldn't have progressed as fast as we have progressed in the domestic market. So it is not only margin accretive, but it is also enabling to, in terms of technology and in terms of penetrating the OEMs. It is definitely enabling us in domestic market also.
You mentioned about margin accretive. Your EBITDA margin, correct me if I'm wrong, was 12.5% in Q3 of FY25?
Q3, it's 10%, 10.4.
10.4. How is Q4 looking like, and where do you want to end the year? Are there still margin pressures because of raw material costs? Because OEMs have raised their prices because of higher input costs. So I'm assuming that you're also facing those pressures.
Yes. So the raw material basket is behaving in Q4 in the same manner. So it is flattish over Q3. Q1 also is flattish to the extent we have visibility. So the good news is that the raw material price is not going up. So that means the margins are stable even at a lower level. But we would like to take up prices in frequent bursts of very small amounts, because the market is very competitive and there is a fight for share that is going on in several categories. But we would like to gradually, in baby steps, enhance the margins now that the raw material is flat towards the 40-41% gross margin level, at which level we are reasonably comfortable.
Okay, so 10.4 you said?
That was EBITDA. Gross margin, we are currently 35-36%.
And that's what you want to get to 40-41%?
So around 5% enhancement of gross margin is required.
So when is the next tire price hike coming to pass on these costs to the consumer?
It's difficult to fix a date, but we have taken some increases in two-wheeler category at the end of Q3, at the end of January. We will take further increases on the passenger side by end of March.
Okay. What about replacement demand and OEM demand? We have seen some slowdown in the auto space, at least in the first couple of months. The conversation with OEMs that we have had and through sources, we've seen that the picture is not looking too bright from the OEM point of view. For you, how is the year looking for the entire 2025 and FY26? This will start in about 15 days.
So when you are talking of OEM demand, you are looking at a flattish four-wheeler, a negative commercial segment, and a good two-wheeler segment, right? So overall, if I look at it, our OEM sales have been good, because we had been talking about exiting some vehicles and coming back in higher rim sizes in passenger, in getting new approvals in motorcycle steel radials, in getting new approvals in truck bus radials. So those exits have happened over last 2 years, and the re-entries are happening now. So we are growing well in OEM. That's one. Replacement of the aftermarket scenario will be about mid-single-digit growth for the market, I'm saying, for passenger. Two-wheeler will be strong single-digit, almost double-digit, because of strong demand in rural. And truck bus radial should be around GDP levels, which is 6 to 7%.
This is maybe for CAT you're talking about?
This market.
And for you?
We would always like to gain market share over this. So I can't predict what will happen in FY26, but this year we have been maintaining close to double-digit rate up to the first 3 quarters. So we would like to carry the momentum into Q4.
So where do you see you ending FY25?
FY25, as I said, we'll try to maintain the momentum of the first 3 quarters into Q4.
Okay. Yeah. You also mentioned before our chat that you're number 3 in the country right now. You want to be
passenger.
Number 1 in passenger vehicles. You want to be number 1. How far is that goal?
See, we have very strong competition in this segment and very entrenched players. It's if you look at our journey, we about 12-13 years back, we were at 2.5% market share.
Okay.
So we have climbed to 16. But as you know, the because of the competitiveness of the industry. Climbing further is tough. We see this happening in a reasonably short period of time, and we have plans.
Short.
So it's difficult to predict. It could be 3 to 5 years.
Well, so that's of course autos. Then the other business, which is or other set of businesses, which would be directly linked to the fortunes of the capital markets, would be, of course, everybody involved in that business, in whether it's the distributors, whether it's brokerages, whether it's AMCs, whether it's infrastructure providers. One such business is Prudent Corporate Advisory, I presume. And let's talk about how is business looking like in the quarter gone by, and could there be pressures in the near term? Prudent Corporate Advisory is the one that I'm talking about, and the management, Mr. Sanjay Shah joins in to talk about all of this and more. But before we get in the management, let's get in Harsh to set up the conversation for us. Harsh.
Well, absolutely. So first off, the AUM growth clip has been extremely strong, right? From sub 50,000 crore, they're now at 1 lakh crore plus. FY22, they were just sub 50,000 crore in terms of AUM. Can this kind of growth clip continue in these tough markets as well, is really the question. Also, with regard to how the vintage is shifting, especially with regard to new investors, the number of new investors that have been added in general, with regard to the overall industry, has been sharp over the last three to 4 years. And therefore, are they able to stomach the kind of correction that markets are seeing, is really the question. And Prudent is well placed to answer that question because of the kind of growth clip that they've clocked. The other piece is diversification. They're moving away from mutual funds, more towards insurance, stockbroking, other financial services. While those also are growing at a healthy clip and the revenue mix is changing, how quickly does that change? And in the current setup, will there be a larger focus on some of the other ancillaries? Insurance also, in that sense, facing its set of headwinds. Whether those headwinds are temporary, permanent regulatory issues, as well as expensive management guidelines, which will likely cap commission payments, and whether that's going to impact the numbers for Prudent altogether. So some of those questions. Also a temporary blip with regard to stockbroking revenue in Q3, whether that can bounce back in Q4, or when does that bounce back, and how much of that attributable to the slowdown with regard to where market returns are concerned versus the merger and the special situation which is playing out in any case where Prudent Corp is concerned. Some of those will be very, very interesting to understand.
Let's pose all of those questions to Sanjay Shah, Chairman and Managing Director of Prudent Corporate Advisory Services. He joins us right now on the show. Sanjay, thanks so much for joining in. And firstly, of business, great example that you're setting out as well for celebrating 25 years of your being in the business. What prompted this donation to, or rather this gift to your employees of all kinds?
Good morning to all the viewers, and thank you very much for having me on the call, Neeraj bhai. So as you rightly said, I was completing 25th year of my journey, and it's a service industry where I've been lucky that we got the best of the talent who stood with me for longest period of time. So there was a thought that how can I do something which is meaningful for my employees, and the idea came in my mind that if I can make them the part of my organization by giving them a shares which is owned by me in my personal capacity. And that's how the idea came, that anybody who has completed 3 years in the organizations, I'll give the share from my personal capacity. And that number which we thought of is almost about 650 employees. So today Prudent has roughly about 1350 employees, and people who completed 3 years are 650. And I thought, let me give some shares to them. However, when we tried to understand the legality, we came to know that promoter, when they give any share to anybody, they all classify as the quasi-promoter, in the sense today we have a 4 people list in the promoter table. If I'll give share to 650 people, everybody will become a part of my promoter. So it was a bit difficult and difficult to digest also, that it was a gesture of gifting the shares. But then we thought, let us reach out to the regulator and say that, sir, the object is something different, and can you give us an exemption? You not believe the regulator was equally candid enough to acknowledge that this is a very noble cause and we should make sure that we can try and give the exemption. After an effort of 2-3 months, we got the exemption from SEBI, and I think now it's in the process of gifting this as.
Nice, but it's a good benchmark for a lot of other people as well to know that there can be exceptions done by SEBI as well. But kudos on that. Now let's come back to figure out that is the business looking healthy enough for you to do another donation in the next 1 year? I'm just kidding. But no, the belief is that the capital market slowdown in recent times would have brought about a small downtick in all capital market businesses. Broking firms have certainly suffered. I wonder if the MF trends and distribution trends have stayed strong enough for you not to, because your October to December quarter numbers looked okay. I'm wondering if the same holds true for Jan, Feb, March as well.
Neeraj bhai, there are two parts of the business. One is the mark to market, which is definitely going to impact my AUM because the revenue comes from. So let me first of all tell you, as far as Prudent is concerned, 85 to 88% revenue comes from the mutual fund business. The insurance is also a very significantly large piece of us, which is about 11-12%, and broking is a very, very small piece. The revenue from broking is hardly about 4-5%. Now the mutual fund is a trail-based business, and within the mutual fund, I think the significant thing is the new money which you bring in, right? So if you look at, we are the retail player and we have very large, strong SIP book. So if I tell you number, I think in the month of December, we closed the quarter with 935-40 crore of SIP book. Now, when I'm talking to you, we are close to 982 crore. So these numbers keep my flows and my AUM to a large extent intact. So if you look at, I think when market has picked out at 1 lakh, in September, we were at 1,07,000 crore AUM. When I'm talking to you today, still I am at 1 lakh crore. So market has gone down by roughly about 18-20%, 22% in the broader market. I am down by 7% on the point to point. We would have added about 6,000-7,000 crores. So I think my AUM is down about some 14-15%, but definitely because at the end of the day AUM is down, so which will be visible in the quarters number.
Okay, but does the impact, Sanjay bhai, come with any kind of a lag at all? And independent of the mix, I'm just trying to understand. Let's say if the mix was not in your favor, would the numbers come with a lag, or would it start showing immediately in a business like yours? If there is a slowdown and reduction of activity, is what I'm trying to ask.
Yeah, so you are absolutely right, sir. So if you look at, there are two parts of my business. One is SIP book of 1,000 crore, which continuously going to come. I don't see major fluctuation in the money which comes by of SIP. Now there's a lump sum money which comes where somebody has to take a call of investing 5 lakh rupees. I think the February and the March was little bit dull. The gross flow has definitely came down. The redemption has not yet picked up, but my belief is that when you see the recovery in the market, normally the recovery, when it will happen, my belief is that it will be sold off to certain extent, because hua kya hai, anybody who has invested in last 6-8 months specifically into the NFOs, when NAV has gone down from 10 rupees to let's say 9 rupees, 8 rupees, when that NAV comes back to 10, historically we have seen the retail normally take a call to move from that fund and move to some another fund. So you might see some amount of redemption when the recovery comes back in the market. So that's the reason we believe that next 3, 4, 5 months might be a range bound period from the point of view of flows are concerned.
So let's ignore the next 3, 4, 5 months, Sanjay bhai, and look forward to the next 3-5 years. What's the base assumption? Based on the trends that you have, based on the feedback that you get from clients about whether the SIPs will continue, whether the PMS flows, etc. I'm presuming you also do PMS AIF distribution, so whether they would continue, and therefore, to your mind, what's the, let's say, the bare minimum CAGR or the average CAGR number that you believe you can pencil in terms of growth for the next 3 to 5 years?
So normally when we talk about the growth, sir, I think one thing which historically we have seen that agar mera SIP book hai roughly about 1,000 crore a month, which is equivalent to 1% of my total AUM. मेरा 1 लाख करोड़ के AUM, महीने का 1000 करोड़ का सिप बुक है. सो ऑन एन एवरेज वी हैव सीन दैट जितना मेरा सिप बुक है उतना मेरा नेट सेल्स रह जाता है. सो इफ टुडे वी हैव 1% अ मंथ सिप बुक, तो साल का मेरा 12% SIP से आता है. अगर वो रह जाता है तो दैट्स 12% शुड गेट ट्रांसलेट इनटू AUM ग्रोथ. ओवर 3 to 5 years we can fairly assume that equity market should generate or fund managers should generate a return of at least 10 to 12% for the investor. So 12%, 24% में से भी आप 10% निकाल दीजिए. So I think my belief is financializations, mutual fund AUM growth is a very strong story, and wherever somebody has a very strong retail book, I think 18-20% of AUM growth, which translate into 18-20% of revenue growth, is something which is on a 3 to 5 years you can definitely take it as a fair assumption.
But that's something that is just arithmetic, right? On top of that, you will enter into newer business segments, you will add new clients, you will do all of that. So therefore, could it well be northwards of 20%? Could it well be 20 to 23%? Those 3% on a 5-year CAGR make a lot of difference, right, to growth. Could it be northwards of 20% as well?
Yeah, so I think bare minimum, I'm assuming that 18-20% should be a minimum which you can definitely project. And there are a lot of, I can tell you, sir, there are structurally, I can frankly tell you, if you want to look at what can be the situation of financialization in the India, you need to look at the 80s of US, where the per capita in between 1980 to 2000, per capita income grew by about 5-6 times. The asset management business grew by 56 times.
Oh.
So we believe that in next 5-7 years, when the per capita grow by at least, let's say 2-3 times, your AUM should grow by at least 7-8 times.
Fair call. Okay. I have one last question, by the way, one short-term question. Any near-term impact on SIPs as a result of this that you see? Because we saw the number on mid-cap, small-cap funds come off quite dramatically. Part one of my question is that, short-term. Part two of my question is this. In order to execute what you just mentioned, right, over the 3, 5, 7-year period, would you need to, and in order to maintain or improve your return ratios, etc., and all of that, but would you need to raise any capital for executing anything, or would internal accruals be enough in a business like yours?
So answering to your first question, as far as SIPs is concerned, the new flow has some amount of impact in last 2 months. So नई SIP जो आ रही थी वहां पर थोड़ा सा taper down हुआ है, and that might happen for next couple of months, for say 2-3-4 months, because historically when the investor comes, he look at last 1 year return, and probably come after 2-3 months, अगर सितंबर का बेस देखोगे तो हो सकता है 1 year return will start looking at negative. क्योंकि सितंबर से आपका मार्केट फॉल चालू हुआ है, तो हो सकता है आपका थोड़ा सा नया पैसा आना कम हो सकता है, which used to be very, very strong for last 2-3 years, but I think that's a good consolidation phase. Coming to your second question, sir, it's a very, very asset-light business which we do, and we generate almost about 200 crore of cash every year, and that money itself is, we always look for some amount of inorganic way of acquisition. So for me to achieve what we are talking about, I think whatever is required to create the physical infrastructure, digital infrastructure, I think about 34,000 advisors हमारे साथ जुड़े हुए हैं, उनका experience भी हमारे साथ last 10 साल का अच्छा है. So I think we just wanted to continue what we are doing, and it will not require any amount of additional money to be invested. It's a fully bootstrap organization. If you look at when we gone for listing, it was an offer for sale by my private equity investors. So आज तक promoter के पास कभी भी, और या तो organization ने कभी भी बाहर से पैसा नहीं लिया हुआ है. It's 100% bootstrap organization.
Sanjay bhai, lovely talking to you. Thank you so much for taking the time out and being with us today. Really appreciate your time. And of course, keep up the great gesture. Really good to see leaders of corporate India do the pro bono work.
Thank you, sir. Thank you.
All right. That's the view from Mr. Sanjay Shah of Prudent Corporate Advisory. 3-5 year period doesn't see a 20% CAGR as any issue at all. In fact, he said that could be the bare minimum that they could do on a conservative side. We need to slip into a break on the note. The markets are still in the green. Come back, talk more about the markets, put a spotlight on some of the top buzzers, and get in Mihir Vora, CIO at Trust Mutual Fund, to talk about markets and more.
he sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
Welcome back. You're watching India Market Open. Well, it's looking like an interesting morning. We've not quite hung on to the 23,000 mark. And some of that slide has come from the broader markets as well. So the Nifty now below the 23,000 mark. Let's pull up the sectoral indices if we can, because Bank Nifty is holding on. I want to see if IT is holding on as well. And IT, I think, is the winner of the day in relative terms. But you have seen some of the stocks come off, and that pressure largely from metal stocks. It could be about a profit booking, because remember, metal was in focus yesterday due to safeguard duties in steel finally coming through, and that's where the pressure is coming. Let's just look at the Nifty heat map for a second before we get to some of the top stocks that we are covering this morning as well. And there you see it, Bajaj, Fin, they're showing a lot of pressure. Trent as well coming in, but on the upside, it's IT which is ruling the roost, to Wipro among them. All right, the other story that we're tracking today is an announcement by Adani Enterprises that its copper arm, Kutch Copper, has announced a joint venture with Pranita Ventures. Somit is joining us for more details on this. Somit, what's interesting is the UBS note that has talked about this development as well.
Yes, UBS in fact has come out, and a lot of other sales analysts also came out with their note, like ICICI Securities, JM Financial, but those were not PDF notes, but WhatsApp to their clients. But what is the news, new development that has come in is that Adani Enterprises 100% wholly owned subsidiary Kutch Copper plans to form a 50-50 JV, that is joint venture, with Pranita Ventures Private Limited. Now the joint venture's name will be Pranita Eco Cables Limited, and it will engage in the business of manufacturing, marketing, distribution, buying and selling of metal products, cables and the wires as well. Now the additional capital expenditure or investment details are still not available, but so far we know that the investment in share capital will be just 10 lakh rupees by both the parties in the joint venture. Separately, we also know that Kutch Copper also announced that it has joined the International Copper Association as its newest member, and it will establish a copper smelter in Mundra, Gujarat, with an initial investment of close to $1.2 billion US. And this, because of this investment, it will enable an annual production capacity of around 0.5 million tons in the first phase, which could be increased even going forward. That is what the plan is currently, and this facility will manufacture copper cathodes, rods and other byproducts as well. So the parent company, that is Kutch Copper, will be into the business of manufacturing copper and copper byproducts, while the joint venture will deal in metals, cables and wires. And UBS note is saying that the competitive intensity in the cable and wire segment post this announcement could increase, given the fact that a large serious player, that is Adani Group, has entered the cable and wire space. Now the capital expenditure plans of Adani Enterprises in the cable and wire space is not known, but this announcement itself could be sentimentally negative for the existing players like Havells, KEI and Polycab, and that's the reason why these stocks are down anywhere between 5 to 8% in trade post this announcement and post this UBS note that has come in today morning.
There are no could-bes out there, Somit. KEI is down 10%, Polycab is down. Somit, but just wondering, Somit, if you're there. Yeah, if you're there. I thought you get PDFs for all the notes.
Well, yes, we do get PDFs, but some of the analysts do send WhatsApp forwards to their clients. So I was talking about that as well.
Yeah, fair call. But Somit, thanks for bringing us this update. And there are no would-bes here. But KEI, look at the price of KEI, by the way. That is down 10% as we speak. Polycab is down 4986. Now, remember, these stocks are still a bit higher than what they were at the lowest level when the first news of Ultratech coming into the space comes as well. But so that's the point about these businesses now, that they tried to recover, and now the Adani entry has led to some turmoil out there too. I just wonder what Ultratech is doing just for a moment. It shouldn't ideally have such a heat as these guys are. Ultratech though is still down 0.5% as well. Okay, I'll tell you one more thing that is stock that is feeling the heat, and that's Zomato. It may have been up 7% day before yesterday, but growth has kind of hit some speed bumps, if you will. Stock has sunk over 26% from its record highs after a heavy sell-off hit this food delivery giant. Mahima Johnson with a deep dive of what's dragging Zomato and whether there is a scope for a turnaround. Mahima, good morning.
Good morning. So, as you rightly mentioned, it's been a bumpy road for Zomato overall, and there are certain operational metrics where it is lacking, and of course, profitability is a question mark right now because of the overall dark store addition that Zomato is trying to make. To start with, food delivery growth has gotten stagnant. If we check the Q3 FY24 YOY overall increase, that was at 27%, which has come down to 17% in Q3 FY25. The overall food delivery business fixed costs are also rising. Quick commerce fixed costs already are rising because of dark store addition, but even in food delivery space, the fixed cost has risen from around 3,600 crore in Q1 FY25 to around 4,200 crore in Q3. Moving on to the quick commerce space, overall customer retention in the quick commerce space, that is for Blinkit, is falling. As of December 22, it stood at around 100%, which has come down to 42% in December 24. In terms of quick commerce, the EBITDA, of course, is deteriorating, and this is, as I mentioned earlier, also on the back of dark store addition. It stood at overall a negative 3 crore number in Q1 FY25, which has gone to a negative 103 crore in Q3 FY25. Now, in terms of where Zomato is making its profit from, the question really is that whether it is from its core business or actually from treasury income. Because if we see the adjusted EBITDA for 9 months FY25 stood at around 1100 odd crores, treasury income stood at 700 odd crores, and from that PAT overall, including treasury income, stood at 488 crores. But if we remove that treasury income from the PAT number, there is a loss of up to 648 crores. So the profits are actually being made from the treasury income from Zomato as of now, and not from their food delivery or quick commerce business, or even the Hyperpure business for that matter. Moving on to losses, they've said that losses will continue in the next few quarters because dark store guidance for 2,000 stores has now been, the timeline has been pushed forward to 2025, which was earlier 2026. And overall, the elevated capex will also lead to losses from Q4 FY25. This is the management has come out and already said this. In terms of competitive intensity in quick commerce space, it's rising significantly. Discounts being offered by all of these players are on the rise, with highest of 21% by Flipkart, then followed by DMart of around 16%, then Zepto by around 12.3%. This is Zepto Saver. Then Swiggy and Big Basket stand at around 7.8% discounts, and Blinkit is last in line at 5.9% discount offering. So aggressive discounting policies adopted by competitors will also hamper growth for quick commerce where Zomato is concerned. Lastly, in terms of the quick delivery war, a lot of players have entered into the quick 10 minutes, 15 minutes delivery space. There's Zepto Cafe, there's Swiggy Bolt, which accounts for almost 9% of income for Swiggy right now. Ola has also started with its 10-minute delivery, and overall Zomato has also launched its 10-minute delivery, and Bistro also operates under the Blinkit banner. Lastly, in terms of valuations, where valuations were never cheap for Zomato and they don't get cheaper even by 2026 estimates as per Bloomberg. Right now, the valuations are at around 528 times, which will go down to around 137 times estimated as per Bloomberg in 2026. So valuations never going to get cheap in the next 2 years for Zomato. Lastly, in terms of outlook, Blinkit gross order value growth over 100% for FY25 to 26 is what the management has guided. Overall, they remain confident for long-term growth going ahead, and margin should increase to 5% in the next quarters. But the question really is that when will this happen? They're also sitting on a cash of roughly 19,000 odd crores. And overall, to end this conversation with is that there are certain questions to be asked to Zomato management as to how the overall execution of additional dark stores will happen, how will competition pan out, and how will they be able to become a profitable business in the next few quarters and maintain their margins at 5%. So this is the overall view as to how things are faring out for Zomato.
All right. Thank you for that, Mahima. Very detailed piece over there. Now, let's get a broader view from our next guest on Talking Point this morning. Mihir Vora, the CIO of Trust Mutual Fund, joins in. Mihir, very good morning to you, and great to have you on. I'm just wondering, how excited are you by the pullback that we've been seeing in the markets? And I know we'll have that long-term conversation, but because top of mind right now is the pain over? And the street is kind of divided on whether this is a momentary relief or we really have, crossed the worst times. What is your view?
Hi, good morning. Always a pleasure. So let's just step back and, understand. We all know why the slowdown happened, why the correction happened. It was because of government spending, extra tight liquidity, and the dollar strengthening. I think all those factors are coming to ahead. And we are seeing a reversal in all these factors. I think the most important part is that the government spending component will now actually hit us in a positive way in the June and September quarters, because 20% reduction in capital expenditure spending by the government in those quarters, which means that we have a very good low base to work on. So my guess is that optically the GDP growth and the revenue growth, etc., for a lot of corporates will look better in the June and September quarters. And that's what the market typically looks at, right? We are always looking at incremental, and we are always looking at the delta. So I think the markets have corrected, valuations have corrected, earnings downgrades have happened. And now we have a reset of the base, both in terms of valuations as well as in terms of growth expectations. And I think we should, be back to a normal market from this point in time.
Okay, so this reset, let me come to this term reset, and I think that's what's interesting, Mihir. What does that reset entail, and can that reset really happen if Q4 turns out to be disappointing? The sense right now is, okay, maybe better than Q3, but year on year, you're still going to end off slow and weak.
I mean, that's already in the price, isn't it? Yeah. We've seen the indices correcting by 20%, 25%. Stocks are down 50% and 60% also. So a lot of the negativity is probably already there in the sentiments and the price. And markets probably tend to look a little bit ahead, at least 3 to 6 months ahead. And if there is reasonable confidence that government order is back on track, defense, etc., are back on track in terms of the processing of orders and etc., then I think we should be back on a normal path. The good thing is that even the US is kind of backtracking on its quantitative tightening. The dollar index, from 110 to almost 103. That's a big move. So the risk off trade, which really drove a lot of asset classes globally, is now probably turning into a risk on trade, which is another tailwind for us. So I think globally as well as locally, the base has been reset. I'm not saying that it's all hunky-dory because Mr. President Trump's announcements, etc., will continue to create volatility in the market. But at least as far as valuation and expectation and sentiment is concerned, we've had a reset.
Mihir, just good morning, Neeraj here. So, just wondering, do you believe this is a W which might get sold into as well, or do you reckon that this is a restart of an uptick? The last 4 years, we've seen dips getting bought into. Is this more of the same, or is it difficult to predict that right now?
See, the whole market has been supported by regular flows from retail investors. So I don't think any big money came in and big money came out. So W is not something that I'm looking at. Domestic and the retailers were always buying all through the last 5 months of correction, and FIs were selling all through the last 5 months of correction. So nothing has changed. All I'm thinking is that even if the FI selling reduces or stops, and even better if it reverses, then we can have a big leg up because they are heavily underowned. I think you may have seen that for the maybe the second time or third time in 20 years. FIIs are in general underweight of in India in their global allocations. So if India starts to demonstrate, then we can have a big move from the FIIs if they start buying.
Noted. Okay. The other question is, Mihir, the pockets getting disrupted now. I'm going to the micros trade, right? And and I'm using cables and wires as an example. But large corporates are looking at pockets of high returns, high return ratio businesses and making related expansions there. We saw that with Asian Paints, maybe doing it with adhesives, etc. But those were small things. Now we're seeing cables and wires and a lot of other businesses too. We hear a lot of businessmen want to get into the quick commerce delivery space as well. Where do you think which pockets do you think are ripe for disruption? And you might want to steer clear or keep exposure low or keep your eye out for any kind of disruptions?
I don't have a clear map in mind, frankly speaking, but I'd rather that corporates, spend money in kind of the newer cutting edge stuff, which is where China is really attracting a lot of attention. Then the traditional stuff. I think in some of the cases that you talked about, like in paints or in cable and wire, it's more of a related diversification because you have the ecosystem, you have the distribution, you have the brand. So it was probably natural for some of those corporates to go into those areas. But I don't see that as a big trend. Quick commerce, I don't think is that easy to replicate. It's not like you can put in 2,000 crores and replicate some of the big brands. It's not that easy because they have the ecosystem, they have the economies of scale. So I wouldn't be too worried about the e-commerce space. I don't think it's really possible to disrupt it that easily now. You would really require deep pockets for that.
Fair call. Okay. The other question, Mihir, is IT. And if AI disruption wasn't just enough for a large bank to say that they are changing the tracks of hiring from contractors to own employees. Maybe they don't do it across the board. Maybe some bit of it is done, but the rest, they might own companies as well back home. Who knows? I mean, multiple things could happen, but it certainly disrupted the space and thoughts around people wanting IT. Now, are you constructive there because the pocket has corrected quite a bit? Or do you believe that because of all the uncertainty surrounding, there is a cap on the upside?
So in IT, I'm looking at it as large cap IT and the others, the mid cap and the small cap IT.
Okay.
Right? In large cap IT, we are underweight and we will continue to be underweight. The excitement that happened in 2022, 21, maybe even till 23 on the IT space was because of a lot of preponement or pent up or extra steroid spending because of the COVID disruption. Because the same story, you had work from home, you had to upgrade your systems, and a lot of online shopping happened, etc. So a lot of bunching up of tech spending happened in those times, which is not a normal thing. So before COVID, if you see, they were growing at single digits. And after this bump, after this spike is gone, I think they are back to single digit growth. So I don't think it's a very exciting space to be in as far as the large cap IT companies are concerned. And frankly, they have not really invested in any cutting edge technologies like AI, etc., which can help them scale up in a non-linear way. So if it's going to be the plain vanilla services business, they are looking at single digit growth. So for us, it's not an exciting space to be in. On the mid-cap IT or IT-enabled space, I think there are companies which have unique business models. Some of them are providing services to medical companies. Some of them are providing services to insurance companies. We have some specialists in the auto space, etc. So mid-cap and small-cap you can really pick and choose because they have specific business models. They have specific customers which they can mine better and grow better. So those specific companies we would pick rather than taking a call on the big sector.
I find that interesting, Mihir, because the announcement of 3 companies partnering with NVIDIA, I don't know if the last word has been written yet on Indian IT. Maybe a bit of lag there, but will we get to those shores? But if IT is underweight, what is financials looking like for you? Some views are coming in that that's going to be the biggest bet, the best sector this year.
Certainly, I would agree with that view, especially the large banks and NBFCs. Probably the NBFCs may benefit a little bit earlier than the banks, but if over a 1 year view, I think both banks and NBFCs should do well. Because if we are going to achieve a 6.5 GDP growth rate, then you can't have credit growth at 10-11%. Credit growth has to pick up. So that's the bet we are taking, that we are back on the growth path, and credit growth should go back to at least 12, 13, 14% in due course as we go to FY26 and the second half of 26. So valuations have been beaten down in most of the segments in financials over the last 2 years because it had underperformed quite a lot. And if you are seeing credit growth coming back with RBI support on liquidity, etc., then you can see good earnings growth in terms of top line as well as margins.
And the large private banks is what you're liking the most?
Yes, absolutely. As I said, it's large NBFCs and large private banks, both. As I said, timing-wise, maybe NBFCs may benefit a bit more with easing liquidity and rate cuts. But if you take a 12-month view, I think both will benefit equally.
Okay, thank you, Mihir, for giving us your time. Always a pleasure to speak with you. And we hope to see you in studios next time that we have a conversation. All right, Mihir Vora there of Trust Mutual Fund speaking on the market outlook, and banks are some of his stock picks as well. Large NBFCs and large private banks in particular. All right, we'll wrap up right here. We're back above 23,000 by the end of the show. So that's always great. If we stay there or not is the question. Maybe that little bit of a breather you were talking about this morning, Neeraj, comes into play.
Yeah, let's wait and watch. Hopefully the small caps don't catch a breather. They have a long way to catch up. But
also expiry day, so maybe the closing session will look more interesting.
Yeah, all of that and more. And in fact, if you want to ask questions about the expiry day as well, the next show coming up does that for you. Ask Profit. Stay tuned.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to America.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. And quite a lot of the positivity that you saw at the start, at least for the benchmark Nifty 50, continues at this juncture. We are trading above 23,000 and very comfortably so. That small dip that you saw has also been bought into, and so that's an interesting place to be. The broader markets also have recovered from the low point of the day. Of course, they started the day very strongly. They briefly slipped into the red, but they've since then recovered ground. And the mid-cap index trading with gains of about 1/3%. The small-cap index up about 0.4% or thereabouts. And I guess to a certain extent, we were expecting this, that you've seen the pendulum swing one way, it has swung the other way very, very quickly. And so to a certain extent, you can expect there to be some money being taken off the table, especially because you've seen individual names move up very, very quickly, very sharply. A few packs, a few pockets stand out. So yesterday you had the capital market plays, the likes of BSE, the likes of CAMS, you had Angel One that was doing particularly well. These stocks are continuing to do reasonably well. CAMS is losing a little bit of ground, but the defense companies, let's talk about Garden Reach Shipbuilders, or let's talk about Cochin Shipyard, let's talk about HAL. All of these stocks gained quite considerably yesterday, and there you go. So a few of them you're seeing a little bit of profit taking. HAL is of course trading just about flat right now. But the other big talking point, and I'm sure that we will speak about this, some of you will ask about this, is the fresh entrant once again into the cables and wiring business. Adani Enterprises announcing that it is perhaps going to be setting up some capacity there. And so the likes of Polycab, the likes of KEI Industries, you have RR Kabil, particularly the first two that I mentioned, are losing ground quite considerably. So we'll speak about all of that and more, but let's get in our experts for the day. Mahima, we've got Kush Bora as well as Shahina Muqaddam. Do we have the first question?
Yes, we have the first question, absolutely. The first question is from, is from Darge, who's from Arunachal Pradesh. He's bought JK paper of 270 in quantity at 555 a piece, and he wants to know whether he should hold, buy or sell from a longer term perspective. China, I'll come to you. What's the view like for JK paper?
Actually, it's a hold from here because we've seen that paper prices, raw material prices are likely to remain subdued. So they could actually do better going forward. The correction also has happened, so it's a hold from here.
It's remiss of me to introduce the two of you and not say good morning and not welcome you to the show. Please let me remedy that. As always, it's an absolute pleasure having the both of you, and you all are smiling very nicely this morning. I can tell that the positivity has reached you as well. But let's get our first caller. Naveen is calling us from Visakhapatnam. Hi Naveen, thanks so much for calling us. How can we help you today?
Hi Alex, good morning.
Good morning. Please go ahead.
Yeah, Alex, I have Manappuram Finance share. Okay, around 182 price point at 120 share.
Okay.
I just want to understand the long-term perspective on it.
Okay, interesting. And when did you buy this? Can you help me with the time that you bought this?
So I was actually doing average from last 5, 6 months, I can say.
Okay, and
So-
your intention is to hold this for the long term, Naveen. How do you define that?
Yeah, intention is to hold for the long time.
Okay, understood. Okay, so interesting name. In fact, we were speaking about this in the newsroom just before the show. Shaina, I'm coming back to you on this one because gold prices have gone up quite substantially. Of course, there's other factors playing for Manappuram as we speak right now, but on the fundamentals, gold prices going up means that the loan to value for these companies goes up, and so the potential for credit offtake also goes up. What's the view here? Would you hold for the long term?
Yeah, the stock looks very interesting actually for the long term. It's gone through a good corrective phase. This is based on a lot of negative news that had hit the stock in the last 6 months. RBI also had put restrictions on its subsidiary, but all these things I believe are more or less behind it. In terms of valuation, if you look, it is actually much cheaper than its closest competitor in gold loan in the space, and I think valuations are very attractive at current levels. It's slightly riskier than Manappuram. It's slightly riskier than Muthoot, but I think to an extent, 1.4 times price to book is very interesting. So it's a hold. You can hold it. I believe from here on, you can even get a price of something close to about 265 if you're holding it for a year.
Interesting. All right. And by the way, what I didn't recall, and what is playing on your screen is that there is a board meeting that is set up on the 20th, that is today, to consider fundraising. Of course, that fundraising could be through various means, either an equity issue or convertible warrants or even debt security. So generally, how that happens is that an overarching approval is taken from the board, and then you could see announcements subsequently. But of course, that's one more reason why the stock is in focus. We've got Kalatinathan, who is writing in and asking about Oil India. He's bought the stock at levels of 475. And he's wondering what to do. He's not given us a time frame. He's asking hold or sell. Kush, first question to you. What's the view on Oil India?
Hi, morning Alex, morning China. Well, not too encouraging. I mean, the entire pack hasn't really done all that well in the last couple of months. I mean, the fall started slightly before the rest of the market. While some recovery is underway from long-term support zones of 340, I'm not sure if it has enough and more room to go to his buying price. But yes, for now, if this momentum does continue, then the stock could head to 415 levels once that is taken out, perhaps even a 450 as well. But there and thereabouts, at the given levels, I would start to exit the positions, go light on whatever my holdings are. Not sure if the entire, rally of about 800 level can be seen anytime soon.
All right, so that's the view on Oil India. And by the way, oil sensitives reacting and have been reacting because oil prices as a whole have been fluctuating. Currently around $70, $71 for the Brent crude. It's not moved too substantially in the recent past. But Shankar is calling us from Chennai. Hi Shankar, good morning. And how can we help you today?
Hello sir, how are you?
Very well, please go ahead.
Sir, actually I bought 700 shares Go Snacks 4 months back.
Okay.
My aim is just done to 15% profit only. But suddenly it down.
Yeah, it
what
went lower.
can I do?
Correct. So
cut loss, book loss, or wait.
Okay, Shankar.
Long-term outlook is good. I ready to wait.
Okay. So Shankar, you've told me what your expectation is, that you want 10 to 15% only, but you haven't told me in what time frame you expect this. In how much time? Okay. I think we've lost him. But so is an interesting question because he's identified, Shahina, how much he expects from the stock, but he's not defined his time frame. And so he's looking at the long-term prospects. He's saying that if it's good in the long term, he's willing to hold. What would you say? He's bought at levels of 324.
Yeah, after this huge correction that we've seen, there is a small bounce back. I think he should exit in this bounce, because if you see the numbers, they have actually shown a deterioration in the last quarter, expected to continue on even for the March quarter. It's a small cap. I believe valuation is also very expensive. So he should take any bounce that he gets now and exit.
Any
Book his
bounce,
loss.
yeah, book your losses and take any bounce that you can get in Gopal Snacks. It has lost quite a considerable amount of value, and you unfortunately caught the decline. Markets as a whole over the last 5 months have dropped quite substantially, and while some stocks have made a recovery, this is not one of them. All right, let's take the next question, and this one's from Varun. And he says that he's looking at buying banking stocks for 2 years time frame, and he wants to deploy as much as 2 lakhs. He's bought HDFC Bank at a price of 1640, and he's got 183 shares, and so he's making a sizable profit right now. He wants to buy more of banking stocks, not necessarily only HDFC Bank, for a period of 2 years. Kush, there are a few interesting names that have moved this week, not least to which ICICI Bank earlier in the week, and you also have Shriram Finance that is moving quite sharply. Anything that stands out to you in the banking space that you would buy for a 2-year time frame?
From a 2-year time frame, the idea is to have a mix of momentum and strength. As far as, or rather a strong risk reward ratio. So something like an ICICI Bank, which has already moved quite a bit, but still has the kind of potential to go higher to about 1500 levels from here on, is what I would suggest. And on the flip side, you've got SBI. Now this stock has already seen a bit of a correction. It's now making that comeback. The risk reward ratio on this one is extremely favorable. I wouldn't rule out a move up until the previous swing highs of 900 on this one in the coming 2 years time frame, maybe a little more than that as well. So if I had that kind of dough, I would deploy partly in ICICI Bank and then the remaining in SBI. So I would split it across these. I wouldn't really venture into the smaller names.
Okay, wouldn't venture into the smaller names in the banking space. Hope that answers your question. Mahesh is calling us from Andhra Pradesh. Good morning, Mahesh. How can we help you today?
Good morning, sir.
Good morning.
I am fan of your channel.
Okay.
You and Kush are laughing always. Very fine.
I'm glad to hear that. Yeah, we try to keep a smile on our face. That's the way. That's the way to do it. And I can hear that you're laughing as well, Mahesh. So it's a good thing.
I want to know about the Symphony, sir.
All right. Okay. So what about Symphony?
I bought it 1170.
Okay.
Symphony, yeah.
Yeah, please go ahead. You bought it 1170.
I bought it. Yeah, 100 shares. 100 shares.
Yes. But what is your time frame? Do you have a long-term view or a short-term view?
Summer season.
Got it. Okay, so you want to hold for the summer.
Only for summer.
Okay. So Kush, what's the view on Symphony Limited? It's obviously a seasonal play that he's trying to have. It's manufacturer, of course, of industrial air coolers in the domestic and international market. He's looking for the summer to add a fillip to the sales and therefore maybe the stock price as well. And he's also appreciating your smile and your laugh. So there's that as a bonus. Would you hold on to this?
I suppose it's the energy that you and team bring, plus callers like Mahesh that bring that smile on our face, and probably widen that that much more. So Mahesh, thank you so much for all the compliments, and Alex, I think a compliment to you too for putting such a fantastic show together every time. As far as Symphony goes, I think for now the stock's already seen a bit of a run up. The momentum indicators and the levels are indicating that there could be resistance around the 1200 mark. For Mahesh, my suggestion would be his intention is absolutely spot on. That from a summer perspective, Symphony does make a sensible buy, but I would keep my stop loss near the 1120 mark. If that is broken, I would get out of it. On the upside, the two targets for him are 1200. If that is taken out, you're looking at 1245 as well. So keep those as your targets. But I would also suggest that if he has some more capital to deploy, then he should also consider something like a Blue Star, a Voltas, which has already shown some run-up, but seems slightly stronger than Symphony. So 1120 as the stop loss for Symphony. We could book profits around the 1200, 1245 mark.
Yeah, interesting. And Incidentally, a few updates on the back of an analyst meet coming through for Voltas. Pull up that stock and see. Let's see what the reaction today is, because you've had slightly differing views. The management, of course, coming out and saying that it's not too concerned about the cost of certain inputs, among them compressors, which have been going up, and it's focused on growth. Its focus is on growth. So the interpretation of that, of course, is that they're not too concerned with the headwinds of the margin compression that you've seen over the past couple of quarters. Quick view on this one, Shaina. Would you say on the fundamentals also that you would look at Voltas, or would you prefer another stock?
The Voltas definitely looks better than Symphony at current levels. At the same time, I would say both are better to avoid as of now, because summer is now, we are in the midst of summer already. And I think whoever wanted to buy would have probably bought. So there is a slowdown. Symphony actually is doing much worse than Voltas, even in terms of profitability. At least Voltas is retaining its profitability, but valuations are expensive. So I think it is, if you want to pick one of the two, Voltas would be a better bet. Symphony, in my view, is an avoid, or in fact, even exit.
What about a Blue Star then?
Blue Star is also, it's reasonably priced, comparable to Voltas. So you could also go in for a Blue Star actually in terms of cost. I think all of them are going to see some bit of pressure, because imports from China are going to be a bit of an issue. Important components. So I think this sector is going to see a little bit of tough phase for the next couple of months. So maybe you can relook at this sector, say 6 months down the line.
6 months down the line. All right. There's a question coming on Wonderla Holidays, and I must admit, it's not a stock that I look at very often. Parag Visaria is writing in from Mumbai and asking about whether or not this is the right level to accumulate the stock. It's currently trading at 661, just about flat in trade.
Not too sure, Alex. The stock's seen a bit of a correction. The only recovery that you're seeing is, along with the markets, and that too not a very strong and a meaningful one at that. While it is above the 20-day moving average, it's finding some difficulty to, sustain at those levels. So I wouldn't really recommend a big trade on this one. But given that the query is very specific on this stock, I'm assuming he would have done some homework. So just some levels for him to go with. 630 is a good support zone. So if you do consider an entry, then that should be your stop loss. On the way up, you're looking at targets of 710, and once that is taken out, 740 as well. But as I said, I wouldn't take a big trade into this one. Hasn't really been an investor favorite, since listing. And even now, the momentum isn't really all that great. But since you've done your homework and you've got a specific query, those are your levels.
Okay, all right. So that's a view on Wonderla Holidays. We've got a question on Aarti Drugs, and Sharat is calling us from Bengaluru. Hi, Sharat. How can we help you today?
Yeah, hi. So I have purchased Aarti Drugs post-COVID times. So I try to average at multiple instances. So currently I have a stock around 1,100 shares at 640 average. Currently I'm at a loss of around 3 lakhs. I am ready for a long term, but I am a little scared to whether should I average it now or what should be my strategy going forward.
Yeah, okay. So, and this is, you basically bought it when, if I'm not mistaken, the overarching conversation and the narrative was very strong for the API manufacturers, right?
Yes.
Active pharmaceutical ingredient. So okay. So it's a fair question. I'm going to take this to Shahina on the fundamentals, because in the pharmaceutical space, Shahina, the pack is interesting, of course, and where the latest update is that it's unlikely that the tariff tantrums, if you can call it that, are going to severely impact these group of stocks. At least it's not going to change things very dramatically. Pricing issues continue, but it's not going to be easy for the US to switch manufacturers or capacity very quickly from the current suppliers, for generics at least. And so generic manufacturers, CDMO is looking okay. But what about APIs, and what specifically about Aarti Drugs?
I totally agree with you, Alex. It is not very easy for, either to get new supplies for intermediates, pesticides, agrochemicals, generics, pharmaceuticals also. So I think the tariffs, if any, and which will come, will be largely passed on. So I think the US, the consumers will have to absorb a lot of this. At the same time, I think there is going to be an issue with what China is going to do versus dumping whatever excess they have, because they are going to be hit more badly in terms of tariffs. So really the whole world order seems to be changing. And I think, chemicals is going to be one space which is going to continue to be affected. Having said that, I think Aarti has corrected a lot. I would not advise any averaging, though it has corrected even at current levels. Please wait, maybe 300 levels you could look to again average, but not as of now. I would just hold it in fact with a stop loss also, and hold it for the medium to longer term and see how it works out.
Ask you this then, as an alternative strategy, is there another play in the pharmaceutical space, in the broader pharmaceutical space, that you would suggest instead of Aarti Drugs, where you can take this capital and you can deploy there for the hope of a better appreciation?
Yeah, I would think so. I think some of the large pharmaceutical stocks are better placed to actually pass on the tariffs to consumers, and especially if you have in specialty pharmaceuticals. So there, I would say Dr. Reddy in terms of valuation also looks good. You have Biocon, which has good approvals that have come, and that largely will be able to absorb, pass on the tariffs if any. You have Cipla, which is doing actually well and likely to continue to do decently well over the next couple of quarters. And you have Arbindo. So there's such a lot of stocks that you have in the pharma space. So it is better to be in that space rather than be in the API space.
So then, two options available, of course, are incremental investments he can make into these stocks, or China he can shift out of and book a loss in his holding. I would think it's a long-term loss, and so therefore he can set that off against future gains as well. Should he do the second or the first? Which would you suggest? Which would you do? Which would you do?
Yeah, I would say I would book the loss, set it off. You have the tax planning available for this year, and invest in some good pharmaceutical stock. I've mentioned all four look interesting, and hold it for the medium to longer term.
Okay, great. All right. So that's advice, Sharat. I hope that helps you out. And it's not, of course, easy advice to dispense. It's not easy advice to take either. It's a bitter pill to swallow. Let's get Devendra on board. Devendra is calling us from Bengaluru. Hi, Devendra. How can we help you today?
Hello. So I have a doubt on this Tejas network.
Okay.
So I want to know, what should I do now? Because it's been so long, and out of nowhere, the stock fell 44%.
Yeah.
I want some advice on that.
Okay, understood. And you bought at levels of 1,292.
Yes, sir.
I'm just trying to pull up the 52-week high if I can. If I'm not mistaken, you bought very close to that value, to the high point, right? So you've actually bought at the high. What is the time frame that you have, Devendra?
I can hold it for 1 more year, I guess.
Okay, you can hold it for a year. Kush, on the charts then, we're looking at a 1 year time frame, 710, chances of recovering and hitting that 1300 mark. First of all, that, and as an alternative, would you book this and move to something else as a better opportunity?
So, Alex, I mean, sometimes, as the saying goes, the higher they go, the harder they fall. I mean, if you recall the movement in Tejas Networks, was similar on the way up as well. So March of 2024, the stock was at 650 levels, and then end of April, the stock was close to about 1200 levels. So near 92%, 100% rise in 2 month time frame. That's the kind of move that it, but then it went further higher from there on as well. Now the stock is close to that 52-week low level. This is a good long-term support zone for the stock. So I would actually have a stop loss near that 650 mark. If that is broken, then whatever gains have been made over the last year or so will be wiped out entirely. If you look at the near-term structure, then yes, the stock is attempting a base formation. It is attempting a recovery from oversold territory. So while those 1250, 1300 levels might seem distant, I wouldn't rule out a bump up from here to levels of 850 and post that perhaps even 975. I would continue to hold on to this one, especially given that its time frame is a year.
All right, hold on is a view from Kush. Jyoti Labs, we've spoken about the pharmaceutical space, but this is specifically a question on Jyoti Labs, and Joby Sebastian is asking this question. He's writing in from Bengaluru. He's bought at a price of 460. Stock is currently at 337 or thereabouts. He's got a 3-year time frame. What's the view, China?
Well, I would say Jyoti Labs he can hold as of now. It looks like, it can remain in this corrective consolidation phase for some more time. But I think in terms of performance, in terms of numbers, it's starting to look better. So last quarter, of course, was pretty disappointing. So I would suggest it's a hold.
Hold. All right. Hold is a view. We have to take a very quick break. Guys, do stay with us. And viewers, we'll be back on the other side to take more of your questions. So do stay tuned.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
we have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was.
Welcome back. You're watching Ask Profit, and we've got our first caller on this side of the break. Ganesh is calling us from Chennai. Hi, Ganesh. I believe you'd like to talk to us about Orient Technologies, right?
Yes, correct. Orient Technologies. I'm holding about 130 shares.
Okay.
I purchased at the price of 350.
Okay.
It went beyond 600. Then again it dropped down. Now it's about 320. So should I hold it, or I can sell it? Now my losses are on 3,000 rupees.
Yes. Can you help me with the reason why you picked this stock? It's a small, very small company in the larger scheme of things. 1,400 crore market capitalization or thereabouts. What stood out to you?
No, actually I just checked some of the YouTube channels, and everyone suggested that its company is making consistent profit over the years. So. When I applied for IPO, I did not get it. So after that, I purchased it. So
understood. Okay, so you bought it based on what you saw on social media. Did you?
Social media, correct.
Yeah,
correct.
But did you look at the company at all? Did you study the fundamentals?
I checked it. I was not convinced with this thing.
Yeah.
But based on the social media result, I went ahead and purchased. That's why I purchased very less stock, just 130 that I purchased.
Got it. Since you bought on the fundamentals, Ganesh, a good thumb rule would be to invest in businesses that you understand. Or it's good to study the company as well. But I will let Shahina explain to you what you should watch out for if she has looked at Orient Tech at all. Shahina, what would you say?
Well, I've not really looked at it in depth. Of course, as you mentioned, it's a very small cap company. I just briefly looked at the valuations, which are pretty expensive. And being a new issue, I think it was October, September. So this will actually, being a small cap, being more expensive than the peer group in terms of valuation, you are likely to see a lot of volatility in selling, with initial investors selling, over a year's time. So I would say if you're making money, then it is better to switch. I really didn't get his buy price.
The buy price was 350 or thereabouts, I think. Yeah.
Yeah, so I don't think it's it's advisable to stay in a small cap in this volatile market since IT space. It's better to switch to some large cap if possible. It is more safer.
All right. So that's the view. Ganesh, I hope that answers your question, and it's a good idea to maybe book out because, like you pointed out, you've taken a very small exposure, and so you can kind of get out unscathed. Relatively so, right? So let's take the next question. We've got several that have come through on WhatsApp, and the one that I'll take is Dixon Tech, where Sumit from Bengaluru has invested and he's been holding for the last 6 to 8 months, I believe. He's bought at levels of 17,800, so he's seeing a significant loss. He's wondering whether to hold till April to May and whether he can recover some of his losses. What are the prospects, Kush, on the charts?
Well, I think with the kind of fall that the stock has seen, and now the consolidation, I think somewhere the fall has now come to a halt, which to begin with is a good sign. Now a couple of things are happening. One, the stock is facing a resistance around the 200-day moving average, close to the 14,200, 14,300 mark, and also the volumes on the way up haven't really been as encouraging to suggest that the momentum is starting to build in Dixon or perhaps some of the peers. So my suggestion would be to, no matter how deep the loss is right now, still hold it, but with a stop loss around the 13,000 mark, or the low that it had recently made, close to that level. On the way up, the stock will first actually face resistance around the 14,250, 14,300 level, where the 200-day moving average is. But if that is taken out, you could see a good 1,000-point up move near the 15,200 mark. The 17,000 plus kind of buy price that he has by April, May could be a bit of a stretch, but given the kind of upswing that the stock is starting to see, momentum could build into this one. So I would hold, but with a stop loss around the 13,000 mark.
Hold with a stop loss, and maybe you might have to widen your time horizon a little bit if you are to recover. Would you suggest that as well? Quick answer, Kush.
Yes.
Okay. All right. So bear that in mind. Those are the key levels, and it's a significant loss. So you might have to widen your time horizon. Kamath is calling us from Bengaluru as well. Hi, Kamath. Good morning. How can we help you today?
Good morning, sir.
Please go ahead. Good morning.
Sir, I have 1,000 shares of BPL at the rate of 135.
Okay.
I wanted short term and long term.
Okay. So you bought it at 135. The stock is currently trading at 109. You bought it based on the fundamentals, Kamath?
Yes, sir. Yes, sir.
Okay. So, Shaina, on the fundamentals, then the shorter term prospects of Bansali Engineering polymer, would you hold on if you bought at levels of 135? And what are the long term prospects?
Well, I think he should hold on. He can hold on because I think the numbers should be pretty decent even for the March quarter. They are reporting a bit of flat numbers, but I think it should be decent. Balance sheet is pretty strong, so he can hold.
Okay, all right. So that's the view here. Let's take a question from Vijay Kirti, who's writing in from Tamil Nadu. He admits that he is aware that Kush is not a fan of the averaging strategy, so he's asking what the strategy should be. In the case of Spandana Spurti, where he's bought at a price of 1,045 and he's looking to hold for now, but he's asking whether he should sell, average or hold right now. He's incurring a loss of close to 80,000 rupees because he's bought at levels of 1,045. The stock is currently trading at just above 700 if I'm not mistaken. What's the view, Kush?
Spandana Spurti, Alex, right?
Yes. Oh, 250. Sorry, my bad.
Yeah. Just got me mixed up for a second there.
Yeah.
First, I'm glad that the no averaging theory is starting to stick. There are very specific cases when you should average. This is not one of them. Spandana Spurti is not one of them. But I also want to admit one more thing, that the other theories that we've discussed, which I always refer to as God's gift to mankind, are stop losses. Now it's a little too late in the day for him to apply a stop loss on something like a Spandana Spurti. There are some green shoots, but I don't think he would be seeing his buy price anytime soon, or maybe in the coming few years. My suggestion would be to start exiting at any kind of a 5, 10, 15% bounce that he sees on Spandana Spurti. So yeah, the first thing would be from what is done, but going forward, it'll be a good idea to have a stop loss in mind before you enter the trade, and exit as soon as the stop loss is hit. And for now, Spandana Spurti is an exit. He could start exiting now, and maybe in parts, as I said, when the stock starts to bump up by 5, 10, maybe 15% or so.
Okay. All right. So exit on any bounce that you see in the stock. Shweta is calling us from I don't know where actually. Why don't I ask her? Shweta, hi. Good morning. Where are you calling us from?
Hi, Alex. I'm calling from Hyderabad.
Okay.
I hope Mahima is feeling okay.
Yeah, she's feeling better now, but then I don't want to strain her voice. She's got a cough, and so I'm asking her not to speak. Maybe she'll be back tomorrow. But what's your question?
My question is, Alex, I have Garden Reach and Zen Technologies. Both are at 30% loss at present.
Okay.
I want to exit from one stock and I want to put the money in the other stock. So which one would be better among these two?
Interesting. And you've seen, and so this is a 30% loss despite the kind of run up that you've seen over the last couple of days, right?
Yeah.
Okay. So, and are you willing to hold for the long term?
Yeah, no problem. I can hold it for long.
Okay. First of all, thank you so much for your concern, and I will pass on the word to Mahima as well. And let me go across to Shahina on this one. Shahina, Garden Reach Shipbuilders, and she's got Zentech. I do not know the buy price for Zentech, but she's wondering which to hold. She wants to sell one and buy the other. Garden Reach, she shared her buy price 2,557. So both she's incurring a significant loss. What should she do?
See, I would first start with Zentech in defense, and the long term, they've got huge order book, very good technology, so they will do well in the very long term. As of now, it is very expensive. On the other hand, Garden Reach is doing much better and likely to show a better performance in the medium term also. So if you want to hold one and exit one, I would hold Garden Reach as of now and exit Zen. But maybe at a later stage, you can relook at corrections to re-enter Zen.
All right. And bear in mind that technical advisors have also pointed to maybe Garden Reach, the kind of run-up that you've seen, maybe it might falter a little. Kush, I want to check with you because it's seen a very sharp move in a very short period of time. Is that something to bear in mind as well?
So, firstly, Alex, I do concur with China. Not a bad idea to stay with Garden Reach and perhaps exit, Zentech for now. And I also agree with the idea that yes, Garden Reach indeed has actually overshot, or gone into, deep overbought territory. So could see a bit of a pullback. But since the view is a year, perhaps slightly longer, then not a bad idea to continue holding on to Garden Reach. Perhaps shift the Zentech investment also here.
Got it. Decline. All right. So a consensus view here on the question that Shweta had for us. Delivery is a counter that we're looking at next, and a 3-year time frame is being asked about. We've got Mohit from Ludhiana, who's bought at price of 280. So he's seeing a small loss here. The stock is currently trading at 260 or thereabouts. On the fundamentals, would you hold this? It's a play on the warehousing logistics space, right? So Shaina, would you hold on?
Yeah, it looks like you can hold on at current levels. Valuations, like the rest of the stocks in this space are a bit on the higher side, but after the correction, I think, and the number of the expansion that they're talking about, the expansion in earnings, I think it is a good hold from current levels for the medium to longer term.
Okay. Just to follow up, and since I didn't ask this, I'm going to ask you, Kush. Vijay Kirti, you gave him advice on Spandana Spurti to sell on rise. Would you suggest another stock that he can get into as an alternative?
So, Alex, there are a couple of stocks that he could for sure get into. If you're looking at something more stable, something more steady, I wouldn't rule out something like a Geo Finance. The stock's actually corrected quite a bit, and starting to see some consolidation, some uptick. That's again for the long term. One stock which has already run up quite a bit, but still has a lot of potential, and we've discussed this time and again on the channel, is Narana Hrudayalaya. Today also, if you see, the stock is actually up about 3.5-4%. So these are some of the stocks which have something going for them. So these are the stocks that I would recommend that you want to get into and hold on to from a medium to a long term perspective. So Narana Hrudayalaya and Geo Finance.
So there are a few people asking about this averaging strategy, right, Kush? So I want you to clarify. You say that it's not a good idea to average on the way down. Maybe a better strategy would be to average on the way up, because and I want you to make that clarification, because we've got a question from Ramya, who's writing in from Chennai, and she's saying, since he's always saying no to average stocks, what if I want to average a good stock on the way up? ITC is what she's talking about. She's bought at levels of 30, she's bought 30 shares 3 years ago, and she's wondering whether to average on the upside. So what should you do?
Fantastic question, Raman. I'm glad, Alex, that these just keep coming up, because this is a very common mistake traders and investors across the board tend to make. Let me give you a rule of thumb as to how do you resolve this averaging conflict. Just for a minute, assume that you don't hold that share and think about it. Is this price and is this time and the money that I'm deploying right now, is this a good time and a good price for me to deploy this capital right now into this stock? If the answer to that is yes, please by all means go ahead and buy that stock. The averaging then happens as as a default. It's not something. The reason I say no to averaging is because a lot of people do it because of the ego and not because of what the share price is doing. Sometimes when you make a loss, you want to just perhaps protect and give yourself that extra chance, and then you go out and put some good money behind bad money, and that's when you end up losing a lot more, right? That is why averaging from an emotional standpoint is a no-no. But as I said, if you want to buy something at this price and it still looks good, irrespective of whether you hold it or not, that's when you average. So just to come back to her question, ITC at this price, would I recommend a fresh buy? Yes, from a medium to a long-term perspective, the stock's already seen a goodish bit of correction, about 20% or so. So this is a good time to buy ITC and hold from a medium to a long-term perspective. Now, if she's holding it from 200 levels, just hypothetically, and it's 400 now, it's a automatic averaging on the way up and not something that she's doing, right? So that's the rule of thumb. Does it make sense to buy this stock right now at this price? Go by that. If the answer is yes, by all means, go ahead.
Okay, all right. So that's the view on ITC as well, and also the strategy that you should consider employing when you're looking to add on to your positions in stocks. Amrita is calling us from Kolkata. Hi, Amrita. Good morning to you, and thanks so much for calling us. How can we help you today?
Hello.
Yes, please go ahead, Amrita.
Yeah, I have some share of Geno Power Infrastructure.
Okay.
And I have brought it at 416.85 and 200 share, and now it is 270. So I have a loss of 29,560.
Right.
So should I invest more to average it down if I see any future in the short term, or I will hold it?
Okay, so I think you haven't had the benefit of what we've been speaking about in the time so far. I would encourage you to go back and watch what we were discussing just before this question. It's now 11:15, and on YouTube you should be able to see this, and you should scroll back and see what we've been talking about. I won't take more time to talk about the averaging strategy, but on the fundamentals, let me go to Shahina on this one. Genus Power, bottle levels of 416. Would you hold on? Would you buy more at the current level?
I would hold on because the numbers are going to look more and more interesting and attractive going forward. Balance sheet is strong. Valuations are a bit on the expensive side even now at current levels. So one can see a bit of further consolidation. But they are in the meters, where I think they are going to get a lot of orders. They have already got some orders, and they are likely to get some more orders in the prepaid meter business. So I think it's a hold from here. The business is very interesting.
Okay, interesting. Genus Power is interesting. So hold on is the view from Shahina on the fundamentals. The next question is going to put a smile on the face of Kush, I'm sure, because it's certainly quite an impressive achievement. HAL is the name of the counter, and we've got Venkat from Andhra Pradesh, who's bought 8,000 shares at a price of 3,608, and so the gain that he's making is 13 lakhs. He's wondering whether to exit at this juncture or hold for another 6 months for potential upside. Kush, what's the view?
First up, kudos on buying, at this price and the kind of quantity. My suggestion would be continue to hold on. The entire pack is now starting to see some kind of, an activity on the way up. So definitely there is some traction. EEL, HAL, these are the stocks that continue to, impress us on the upside. Now, since we've discussed a lot about averaging, way down, way up, I won't get into that, but I will give you one more very interesting nugget, which is trailing stop losses, right? So now what you should do is keep your buying price as your trailing stop loss. In case the stock falls, there's a possibility, or in that case, you will at least exit at a no profit, no loss scenario. You for sure won't incur a loss, right? So continue to hold with a trailing stop loss. Now, as far as levels go, I think the momentum is now starting to pick up on HAL. I wouldn't rule out the move up until 3,900, and if that is taken out, you're looking at a 4,050 kind of zone also. I'm not going to give him a stop loss based on technicals just yet. It's more of a trading strategy now. So you place your stop loss, just about at your buying price, or maybe just above it.
I think you have nerves of steel to be able to put 3 crore down on a single company to see the kind of gains that you are seeing right now, and I'm hopeful that this is a part of your portfolio, not the entire amount that you have available to invest and trade, Venkat. Because you shouldn't be, well, I'm not going to give you advice. You have gains of 12 lakh. Who am I to give you advice? Let's talk about the next one. Suresh is calling in from Hyderabad. Hi, Suresh. Good morning. How can we help you today?
Hi, Alex. Good morning. I am holding Thomas Cook at 170, around 200 shares which I am holding. Can I hold it for long term for next 1 to 2 years, and can I average it as it is bounced back from lower level?
Yes.
And shall I average it or shall I keep it for long term?
Okay, so let me go across to Shahina on this one. It's a pretty clear question. Thomas Cook, it's a play on the tourism space, on the travel space. Would you hold on to this, and what's the strategy you would employ?
Yeah, I suggest you can hold on to it. As Kush very nicely explained, that it is better to avoid averaging until it reaches a price level where you think valuations have started looking very attractive. So I don't think that current levels valuations have started looking very attractive because it is still expensive. If you look at price to book, it is still about 3 times price to book. If you see a multiple, P multiple is about 25 times. So if you want to average, you wait for some corrections and then you average. I would say closer to maybe 125 and odds, but as of now you can hold. It looks like it will do better going forward.
Okay. All right. So that's a view on Thomas Cook. Hopefully that answers your question. We've got one more caller that we'll take. Ray is calling us from Bengaluru. Hi Ray, good morning. And how can we help you today?
Yeah. Hi, good morning, Alex. Actually, my query is on Shipping Corporation of India.
Okay.
I bought it during the budget announcement of, maritime focus being given by the government. I bought it at 206 and it went down to around 139 in about a month. At which time I had averaged it, and it is now at 194. And there is a recent news now that they are collaborating with Container Corporation of India, and they are trying to build a bigger portfolio out of it. So just want to know the short-term and long-term view, if possible, about the future of the share.
Yeah, and you bought it based on the fundamentals. So you can hold Ray for the long term if you have to, right?
Yeah, sure.
Okay. So, Shahina, on the fundamentals, this is a stock that is buzzing. I must admit that it was up about 5%, 4% earlier on when I looked at it at the start, and was one of the stocks that was buzzing. But right now, pull up the intraday chart, it's at 12% higher. It's one of those stocks that is making a strong comeback. And so, therefore, on the fundamentals, what's the view? What level would you look at 1 year, 2 years down the line?
Yeah, actually, if you see the numbers, they have actually shown a much declining profitability, over the last couple of quarters, and likely also to be the case over the coming quarter. But had the stock having given this big correction, of course, now it's recovering a lot. It's showing a very big bounce. But despite this, I think still valuations are just about 1 time price to book. Also, with the new tie-up that they'll have, it is likely that the stock will bottom from current levels. So I would say, having taken the loss that he has, it's better to hold for at current levels.
Hold. A quick view on this one, and then we hit the rapid fire round. Hemant is writing in from Tirupati asking about Sai Life Sciences. He's got IPO allotment, and so his price is 549. He's looking at the long-term prospects and wondering whether to hold. He's in the green China. Should he hold on?
Well, I'm not too much in favor of holding on to these stocks, small caps, and as well as in the IPOs for at least 1 year in the first year of its listing. So I would say it's better to take your profit.
Take your profit and exit. All right. It is time for the rapid fire segment. And Shahina and Kush, you know what this means. I'll toss as many questions as I can at you over the course of the next 2 minutes to keep your answers as quick as possible. KNR Constructions on the fundamentals, and we've got Tamil Selvan who's writing in from France and asking, should it be held on to or should you buy into this one for a period of 1 year or more? Shahina?
It is a hold as of now.
Hold. Z Entertainment, interesting note coming in today, and the stock was up and about. It continues to be. 130 is the buy price of Venkatramani. He's asking whether to hold for 12 months or add more. Kush?
Hold with a stop loss around 96.
Okay, CAMS has cooled down a little bit today after a sharp move yesterday. Gul wants to know whether it can be bought at the current market price for a period of 1 year. Kush?
Can be, but I think a better buy price would be 3625.
Marksons Pharma is the name of the counter. 290 is the buy price, and We've got Parsaran who's writing in and asking whether it can be bought and held for a period of 3 months. Kush?
It can be bought and held also. Stop loss would be 195.
Okay, Dixon is already something we've taken. Ola Electric and Zomato. Would you buy into any one of these, Shaina, on the fundamentals? Ramesh wants to know.
Zomato can be bought into in the base of fundamentals.
Okay. Castrol, not castor oil. Okay, okay. Vaishnavi wants to know about Castrol. Would you buy Castrol at the current juncture for a period of 6 months, Kush?
I'd wait. There's profit booking underway, but maybe closer to the 210 mark, it'll be a buy.
Okay. IDFC First Bank bought at levels of 80 rupees. The stock is currently at 55. Would you add more or would you hold, Shaina?
I would hold, not to add as at of current levels.
Okay, big loss in Polycab and KEI at 20,000 or thereabouts. Would you hold on? Shaina, is the move today overdone?
No, I would not hold. It's an exit.
It's an exit. All right. That brings us to the end of this segment, of course, and indeed the show. Shaina and Kush, thanks so much as always for joining in. Always a pleasure having you on the show. All right, and that brings us to the end of All You Need to Know. Not All You Need to Know, Ask Profit. I got my name wrong. But you know what this show was. This was Ask Profit. Thanks so much for watching. This is NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking more information on the trades and the
Welcome to KYC, Know Your Company. It's a show designed to give the regular investor powerful, actionable insights into single NSE listed companies daily. Now, today we're going to deal with one MobiKwik, recently listed. There's been just so much flip-flop with regard to the stock price. What should one do at this point with the company is what we'll try to give perspective to by the end of this show, and hopefully it adds value. Now, let's quickly look at what the company actually does. It onboards customers like you and me onto the app, very similar to what Paytm does. It was founded by Bipinpreet Singh and Upasana Taku, who are the founders, as well as continue to be those who are running the company. Both of them had experience in building scalable technology and financial products. So what they do is they onboard customers like you and me and thereafter cross-sell products to us. That's one part of their customer base. The other part of the customer base is merchants. They target the Kirana store next to your house, try and sell them products like the sound box, as well as card machines, and thereafter earn spreads on some of those products. They also earn rental yields on some of those products, and they onboard these merchants so that you can make payments to these merchants seamlessly. Thereafter, they also sell products to these customers. For example, loans, which a lot of MSMEs need at this point. Is one of the most underpenetrated spaces with regard to lending, and also investment and insurance products, which is pretty much to their entire base. 72% of digital loans disbursed are to tier 3 plus cities. So they're really catering to those who are underserved. That's really what they are pushing for. That's their forte versus a Paytm, where Paytm deals with a lot of tier 1 and tier 2 customers as well. MobiKwik has in its, it boasts that it does more of tier 2, tier 3 and beyond. That's what really their target audience is. In terms of why the IPO, they wanted to invest in research and development, especially with regard to the latest technology, machine learning, AI and the like. They wanted to try and capture that opportunity. They also wanted to try and do capex with regard to the payments business and devices business rather, and then general corporate purposes. That's why they've done their IPO'd in December. Thereafter, it's been quite a roller coaster of a ride, I must say. Stock price ran up very quickly, thereafter fell 60 to 70%. We'll talk about some of those metrics as well. But first off, let's talk about all the metrics that we're going to break down today with regard to one MobiKwik. And relevant because it's a platform company, and therefore it's unique in that sense. And all of the metrics that a manufacturing or a service-based company would typically, you or me would typically look for in some of those manufacturing and service-based companies, you would necessarily not look at in a typical startup platform-based company. So these are some of the parameters we'll look at. Income statement, balance sheet, operational metrics. Those are three metrics with regard to growth that we'll view, and we'll see as to how this one has done. Then we'll look at street cred, because there's been a listing in December and there's been large amounts of volatility on the stock. So we'll dive a little deeper into how that's played out. Shareholding pattern currently post the IPO, street coverage, street expectations, and thereafter we'll venture into the valuation picture. The most difficult of the lot, trust me, but we'll do a little bit of that, and we'll speak with an analyst, try and get a complete understanding of what this business is all about. So that's how we'll kind of break it up today. Let's start with the income statement. I'm going to try and ease this process. FY22, the number in terms of revenue from operations was roughly 527 crore. Saw a flattish kind of move in FY23, but the pump up has been seen in FY24. When you're looking at 9-month FY25, they've done pretty much the entire revenue of FY24 in 9-month FY25. So showcasing roughly a 33 to 34% kind of growth on the top line. That's how it's playing out. Talking about the expenditure and the move in which, or the journey of the expense, we've seen 659 crore of expense in FY22. We saw a bit of a taper in FY23 to try and recalibrate. There's also an IPO which happened in FY25, so they wanted to kind of make sure that they are recalibrating their expenses in FY23. FY24, we saw a bit of a increase with regard to where total expenses was concerned. And therefore, how did profit before tax and depreciation look like at the end of all of these years? So the bump up in revenue has aided profit before depreciation and taxes. That number was at 18 crore in FY24, thereby aiding profitability of around 14 crore in FY24 versus the 8 crore loss in FY23 and FY22 of negative 128. I look at profit before taxes because a large chunk of the company for a predominant period of its life has been a loss-making company, and therefore taxes may not currently flow through. Therefore, as the profit normalizes or as the tax losses expire, you will likely have a tax impact on this profit as well. So currently, profit before tax equals profit after tax, especially for FY24, and you may see that for a few years going forward. Likelihood maybe 5 to 8 years. Thereafter, once it starts normalizing, you will start to see a tax impact on these numbers as well, and hence I've taken the kind of number that we have. So 14.1 crore, and now I'm talking about profit after tax for the moment, comparing FY24 PAT versus 9-month FY25 profit after tax or loss after tax. It's a loss number of 66 crore, but just let's deep dive on those numbers. Revenue moves from 875 crore to 902 crore. This is again 9-month, and therefore you likely see a bump up when you're looking at it from a full year perspective. EBITDA was positive, 22 crore positive number. Cannot compare that to FY23 and FY22 because that's an EBITDA loss number there. But margins now at 2.5%, which have slipped to negative 5 this year. You're also seeing profit after tax at 14 crore. We did speak about that in FY24. Currently sitting, because of the margin decline, currently sitting at negative 66 crore. Some part of this is also customer acquisition costs, and we'll talk about that in the operational metrics. But this is how the income statement lines up. A very decent set, a neutral on this count. They are very close to PAT profitability. Sustainable PAT profitability is what one would want to watch out for in this particular case. And there is no real guidance on that count, and we'll talk about guidance as well. So something to keep in mind with regard to income statement, you want to see sustainable PAT profitability. Let's talk about balance sheet, and this is a thumbs down for various reasons. Look at the way in which the equity has been playing out. It's fairly steady till H1 FY25. Still need to map out how H2 will look like, but we'll wait for the balance sheet to come out. Don't want to be too hasty to drop the balance sheet for the company, and therefore we've just kept it at H1 FY25, right? This is pre the IPO. Now let's talk about shareholders funds. This includes the reserves, which are on a declining trend, except in 1 year, FY24, where there's been around a 14 crore profit, and therefore you saw a bump up with regard to reserves. You'll also likely see in FY25 a bump up with regard to reserves, because there was an IPO and shares were issued at a premium as part of the IPO, and therefore you'll see a bump up there. But for now, H1 FY25, again a decline, because there was a loss in H1 FY25. Let's talk though about the more important aspects. Borrowing, long term and short term. Look at the split there. You're talking about long term borrowing, largely okay, right? No concern here. And I'll quickly contextualize this. You're looking at a company which has a market cap of roughly 2,200 crore, right? One MobiKwik, 2,500 crore to be precise. Apologies, stock price has also moved a bit. So yeah, 2,500 crore in market cap. Now for a 2,500 crore market cap company, it's not looking too risky in terms of long-term borrowing. But what's really a concern is with regard to short-term borrowing. That one has been elevated at around 150 to 200 odd crores, so 10% of your market capitalization. What becomes even more cheeky is the fact that your short-term payables have remained elevated for a prolonged period of time. So from 370 odd crore, it may have come down to 225 crore, but quite elevated in that sense. And your current liabilities, which are your short-term liabilities which you have to pay out, have gone are at roughly 600 to 700 crore. So something you want to keep in mind is that your payables are quite high. It's almost 25% of your market cap. What's the risk here? Well, we'll try and dive deeper into that. But broadly, this is how it's stacking up. That's why we've given it a thumbs down. Let's look at the comparison versus H1 FY25 as well. And numbers more or less there. Equity at 11.5, reserves at around 146, and therefore shareholder funds at around 157. No major change per se on any of those counts. The short-term payable is roughly 200 crore at the end of H1 FY25, and the current liability total is closer to 700 crore. So just keep that number in mind, and we'll try and quiz our analyst as well with regard to how does he look at this number. Now let's talk about operating metrics. Now here's a clear thumbs up, because what we are seeing is very, very strong metrics across the board. Let's talk about it. GMV, which is gross merchandise value, which is the value on which one MobiKwik will be earning its revenues. Look at the spike up there in 9-month FY25. That's very, very strong. Platform spend GMV also has seen a very similar spike. It's doubled FY24 versus FY25. And the registered users have gone up in a fairly healthy fashion. They were at 12 crore at the end of FY22. They've added roughly 1.5 crore nearly every year. They've been jumping by around 1.5 crore every year in terms of new users, new registered users added. Merchants is the other contributing factor to both top line and profitability. So merchants have also continued to go up, 36 to 37 to 41 to 45. So they've continued to jump. Last off is merchant acquisition cost. This is the key, because you can't just monitor merchants or customers added. You have to also factor in a cost associated with that. 17.5, 20.3, 33, and then in Q1, Q2 and Q3, it's been in the range of 34 to 37 rupees. And therefore, you might want to keep your eye out on that number as well. For full year FY25 will be very close to 35 to 36 rupees likely. So those costs have been climbing. And look at the climb between FY23 and FY24. That kind of shows and signals that there was a push in terms of requirement to add users and to add good value users on the platform. So that's something to keep in mind. How quickly does this taper will also determine how quickly profitability starts to get clocked in. So maybe one negative out of all the others, but otherwise operationally it's very, very decent kind of numbers that they are clocking. Now let's talk about street cred. This is an interesting one again, and we bring street cred early this time because it was an IPO. They've raised funds, and 279 was the IPO price. The listing price was 440, very healthy returns for investors. Listing day was 18th of December 2024, not too long ago, just about 3 months. And the listing close was 528. So real good money made for the IPO investor who would have exited on day one. But thereafter, we saw the stock peak at 698 and we saw 67% fall in the stock price to 231. From 231, again, the stock has resumed a rally and it's closed, or it's currently at around 320 rupees a piece, 20% higher from IPO price in the last 3 months and 24% up from the listing price. But that's exactly, 24% down from the listing price. But that's how the journey essentially has played out. It's a neutral here because just the amount of volatility would not signal any real direction, but it seems that at least some amount of money has been left on the table for investors to cash in on, and therefore the IPO was okay. Let's talk now about shareholding, and this is post-IPO shareholding, right? So this is how the shareholding stacks up. You have promoters which own around 25%. Then you have Peak XV and other funds, and these are funds like Bank of America who've invested, and they own around 28%. Around 10% has been held by Bajaj Finance, 9% by DIIs, and 5% by other FIIs. 23% is publicly held. It's a fairly rounded chart per se. Promoter holding is 25%. Now, when I compare it to other peers, other platform companies which have burnt money over prolonged periods of time, made losses, that 25% holding is quite good in relative terms, because the dilution that some of these platform companies do is very, very high, especially upfront. And therefore, very unlikely that a promoter will continue to hold 25% of the company. But both the promoters continue to hold around 25% as we speak, and it was 30% plus pre-IPO. So a neutral on this count as well, not looking bad per se. Public shareholding is also decent, it's not too large. Of course, there'll be some investors who will want to exit from this basket, the Peak XV and other funds, but we'll have to wait and watch. So that may be a bit of an overhang. Also, we've seen lots of investors with who are locked in for 1 to 3 months, part of the anchor lock-in. Some of them have exited, and the volatility in stock price has also been caused by that. So maybe some risk here on this count, but some positive as well, and hence the neutral rating that we've given on this one. Last couple of quick pieces that we need to piece in together. One, the coverage. One analyst covers it, target price being 700, return potential being 115%. That's Rahul Jain, who's Director Research at Dolat Capital. He's going to join us shortly. Let's also talk about his expectations, and by default this becomes the street's expectations. Let's talk about it. From 875 expected to go to 2278 by FY27. So maybe even from FY25, if you look at the forward, it's roughly doubling by FY27 over the next 2 years. Expenses also expected to grow at a healthy clip, from 1283 expected to go to 2204, slightly lower pace of expense growth. EBITDA expected at -86 for this year, but expected to turn positive by FY27. FY26 was also a positive number, and profit before tax also expected to be positive for FY26 and FY27. Profit after tax also expected to be positive for FY26 and 27. But FY25 is that muted here in which they have listed themselves. Quickly on to valuations. And this one is a thumbs up, and I'll tell you why. FY25 price to sales, MobiKwik currently sitting at 2.2 times, and Paytm, which is the nearest compete, is at 5.5 times. So what you're seeing essentially is that MobiKwik is at least 50% plus cheaper than a Paytm at this point. So there is considerable opportunity available. Of course, Paytm has deeper moats in that sense, larger user base and the like, but nonetheless, valuation, purely valuation wise, MobiKwik is looking more reasonable. Let's talk about guidance before we move quickly and speak to Rahul Jain, who's waiting by. IPO proceeds to be utilized for growth and expansion. We've spoken about this. Looking to add 5 million users, which is 50 lakh users each quarter. So roughly 2 crore users a year. Company onboarding 1 to 1.5 lakh merchants each year. Optimistic about growth in payments. Products, new product in UPI to drive growth likely. And there are a couple of products there. Launch of new insurance and savings businesses in 2025, also monetization and profitability. Customer costs have increased but remain competitive compared to peers is what they suggest. Financial services take rates have gone up. This is the key, whether MDR can continue to help that number. Expect a rebound post decline in disbursements in certain lending products, so that should aid numbers. Fixed costs expected to remain stable, so costs also stable. Larger ticket sizes to aid yields, they're focusing on that, and 40% of disbursements are under first loss default guarantee. This will mean that they will take guarantee for the first piece of loss on the loans that are disbursed through the platform. This is a key risk to profitability in case cycle turns bad. So that's how it's playing out. Let's quickly look at the ratings. There you go. So income statement, neutral, balance sheet, operational metrics, street cred. Let's quickly go on and shareholding, street coverage, street expectations and valuation picture is a positive. Overall, it's a 4.5 on 8 on this one MobiKwik. But let's quickly go across to Rahul Jain, Director Research, Daulat Capital, who's here to talk to us. Rahul, good morning. I want to first talk about what's the risk to the estimates you have plugged in. We've spoken about those estimates right just before this conversation. Not sure if you had a chance to listen in, but what's the risk? What's the key risk in your view?
Yeah, I don't see much risk to our estimate what we have built in. As I could see from some of the charts that you were displaying, it was showing roughly 90% jump from FY25 to FY27 in our revenue estimate. And profitability, as you would see, are something which is they are just around the break-even point. They did a small profit last year. They slipped back into negative this year. So they are just around that corner. But most important thing that we need to keep in mind is that the IPO inflow of roughly 570 crore. That is a huge amount if you look at the balance sheet of the company prior to the IPO, which was around 850 odd crore. So that is a good 60-70% jump in the balance sheet size. All of this money will come into some kind of business expansion strategy as they have already identified in their usage of fund. And that will actually expand their canvas in terms of how to get into different revenue streams and increase the per customer value. If you look at for Paytm, the per customer value is around 1,000 rupees revenue they earn per customer. For MobiKwik, at this point is closer to 400, 450. And that needs to go up 2x. And of course, the number of consumer expansion would happen because the UPI penetration for them has started more recently with an innovative product. So I think they have a very long way to grow in terms of scale, both from user perspective, revenue per customer perspective, and number of use cases perspective. So those are the driver to our growth estimate.
And Rahul,
looking into the future.
Rahul, would that also be a fair comparable? Because Paytm's customer cohort is a higher value customer as well. Can a one MobiKwik scale from 450 to even closer to 1,000, given the customer cohort and given that they are more focused on tier 2 and beyond?
Yeah, I would say from an incremental point of view, they want to focus in tier 2, tier 3 as well. But it's not that they're not present in the bigger cities, because it's a old business. And most of the early users all came from tier 1, tier 2 cities for any wallet kind of a use case. If you look at right now, they have significant market share in terms of the wallet users. And that clearly talks about the they possessing some high frequency user as part of their customer pool, and it's not about tier one for Paytm versus smaller tier for MobiKwik. I don't see that kind of a distinct customer base. So ARPU can increase. Of course, it may take time to reach that 1,000 mark because of the number of use cases could be much more in case of Paytm. But if you look at the bigger use cases, which is around payments, UPI, credit card, lending, I think those use cases also exist here. The marketing business, which Paytm has, which has ticketing and those kind of use cases also, which is relatively a smaller business for them. That point business do not exist for one MobiKwik right now. Also, another business which is around the device subscription, which is very subscale at this point, but they have articulated a strategy from the IPO proceed to get into the devices business. That would also increase the ARPU or a use case and increase stickiness for their merchant base, and that further drives into financial services opportunity for those merchants. So that way, the stage is set. Of course, execution need to be seen, and we are hopeful that they will do a good justice of the capital that they have raised, and that's why we don't see risk to our estimate of 35-40% kind of a growth for next couple of years.
There have been deficiencies, irregularities in managing records with the RBI, Rahul. Now, regulatory concerns in this industry are in any case elevated. Plus, you have the MDR overhang, which doesn't seem to be going away. Every time we're talking about a possible MDR, it's been quashed. What's the sense with regard to some of those levers, and how much of the MDR is factored as part of your estimates in your top line, or is that not?
Right. So, firstly, on the regulation front, if you look at any sunrise industry, you should appreciate that the industry gets set up first, and the norms or regulation come later on. And as the business become of a certain scale, regulator come into picture, and then they define the borderline. And so all this innovation happen around in an area which does not pre-exist. So once the rules are formed, you are seen either on the right side of it or on the wrong side of it. And we have seen with all the fintech company that they have eventually been on the wrong side of it, at least for one or the other reason. So that I think is part and parcel of any business which is getting created, any industry which is getting created for the first time. So most startup would have to deal with that, and we have seen it with all the top 10 fintech probably in India. Moving to the MDR element, I think it's a very welcome move that has happened where the government has notified that a small merchant and small value transaction would get incentivized by the government. They not clarified in terms of what happens to larger transactions, what happens to the transaction which are done at larger P2M. If the conventional wisdom has to go, it has to come, because that is a segment where you need to get the monetization done.
Right.
Because they're a large merchant and they have the wherewithal to deal with it. So, of course, we don't want to get into that speculation, and that's why we don't build that into our estimate, even for Paytm, even for MobiKwik.
Sure.
But yes, we know that is a big optionality. If that comes in, some people could be significantly beneficiary, and MobiKwik also will be a little bit beneficiary in that case.
Sure. Thank you so much, Rahul. Completely out of time on this one. But thanks for coming in, giving us your views with regard to one MobiKwik. And we've tried to break this down the best we can. So thanks for joining us. But with that, completely out of time on this edition of KYC. From myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay
Hello and welcome to Markets at 12. This is Anushi Vakharia and today's key theme is defense. We're seeing some smart moves from yesterday, today continuing as well. But before we discuss defense, let's take a look at how the markets are doing currently. Let's see how the benchmark indices are faring in trade today. We have our Nifty 50 seeing gains of around 0.6%, while Nifty Bank, if we can pull that out as well, Nifty Bank also seeing some strong gains in trade today. It's up over 0.3% in trade. Benchmark indices doing particularly well. Broader markets also on the same pace as the benchmark indices. Let's pull out the key contributors which is leading to this kind of upside that we are looking in the benchmark indices. So we have something, if you can pull out the key contribution table over here for the benchmark indices, we have Bharti Airtel, Infosys, TCS contributing positively, while on the other side Bajaj Finance, L&T and Ultratech is under pressure. Ultratech a lot about the cables and wires also. What we are seeing in small cap and mid cap space also, we are seeing some strong gains here as well. But as we were speaking about the defense, there are a couple of defense counters in focus. Yesterday, we saw some smart moves in the shipbuilding companies. But to discuss the overall outlook about how the defense companies are doing and what is the way forward, we're joined in by Amit Dixit, the lead analyst, metals, logistics and defense from ICICI Securities. First of all, hello and welcome to the show, Amit.
Yeah, hi. Thanks for having me on the show.
Yeah, so my first question to you is on the first, about the last couple of days, we are seeing some strong moves in the defense companies. Now, a lot has to do with the markets as well. Markets have been in the recovery mode. So, while the defense stocks have seen some steep correction in the last couple of months, it could be more of a sentimental drive also that we are looking at. But want to understand from you, overall picture of the defense sector, what is your view currently over here?
Yeah, so in the sector, actually, nothing had changed. To be honest, the fundamentals remained intact. We need certain systems, and they are still very much required. However, the move that you have seen over last couple of days has more to do with, I would say, three factors. The first one is, of course, the overall market. The second one is, if you look at Germany, so they have committed to more investments in infrastructure and defense in particular, and there could be a rub-off impact on some of the companies in Indian defense ecosystem that are also in the global supply chain. And the third thing is that if you look at the order inflow this year, while there have been orders here and there, but some of the big orders have remained quite elusive. And we are nearing the end of the March. It is widely expected that some of these could be ordered. And it's not something that is unprecedented. We have seen orders being placed in the last week of March. So it has to do with the combination of all these three factors.
I want to talk to you about the last point which you made about the order expectations. Now for 2025, there are a couple of larger programs also which are there, which includes the likes of QRSAM, P-75 submarines that we are looking at. I want to understand from you, which are some of the big programs that you're talking about wherein there is higher order expectations, and which are some of the beneficiaries which could benefit from these programs and these higher orders coming through?
Yeah, sure. So the only big orders I would say we have seen this year are perhaps to do with the ALF-31B engines for HAL, and the second one was 12 number Sukhoi for HAL. These are the only big orders that we have seen. In February, we saw Pinaka after a long wait being awarded to Solar Industries and Munition India. And then today itself, actually, Cabinet Committee of Security has cleared the procurement of ATHES, that is armored howitzers. So these are some of the orders that have been placed. But talking about the big ticket items that we would expect by end of the year. So P-75, you rightly mentioned, three numbers P-75 that could go to Moscow. I mean, that is for sure, because this is a repeat order of what they were already executing. The second big order is for GRSE. Actually, this is GRSE and L&T, and there are four players at least over there. So this is next generation corvettes worth around INR 364 billion. Then there are a couple of orders in aerospace. So we have the second batch of 97 numbers LCA Mark 1A. Now, it was mentioned in the Cabinet Committee reports that there are negotiations going on for this. This could be a big order. Then, of course, 156 numbers LCH Prachand. So these are certain big orders in the pipeline. Now, if a combination of one or two of these orders come, then definitely the impact, it will be a positive thing for the mainstream players. However, a rub-on effect of these would be felt across the supply chain. So, for instance, in these marine orders or the aerospace orders that I'm talking about, there would be rub-on effect on BL going further down, Astra Microwave, and even companies like PTC Industries, Azad Engineering. Then clearly a second theme that is emerging is ammunition. So over there, I believe that Solar Industries stands to gain over everyone else because of the fact that they have got pretty chunky export orders this year. The order book is quite robust at the moment at upwards of 13,500 crores. So these are some of the orders that we expect as we head into FY26.
Right. So as we head into 2026, I want to understand if we just have to take these 2 years into consideration. One is 2020, how FY26 would be, and if we compare it with FY25 would be. Do you expect FY26 to be a much stronger year for the defense counterparts which are there alongside? If you can talk about what are some of the picks that you have in this space?
No, so FY25 again, one has to understand the genesis that why there were no big bang orders. It was a year that was punctuated by election, the general elections, and of course there were some critical state elections also. So FY26, you're right. I do expect that some of these orders that I mentioned would be placed, and not only FY26, we are quite gung ho about FY27 because one of the orders that you mentioned, QRSM, which can be a pretty big order of around 25,000 crores, that could go in FY27. Then we have six numbers, P75I. That could go into FY27. So clearly, we have a long runway ahead as far as these big orders are concerned. And of course, followed by a number of smaller orders that you keep on getting and the increasing export footprint that some of our companies are having. So clearly, the coming 2 years look pretty good for the sector in general.
Okay, so that was quite a comprehensive answer that you gave to what could be expected for the year ahead and the order inflows for each of these companies that are there. Now, in terms of valuation, if you want to consider like the forward multiples currently, there has been some correction across the defense companies. So considering that, is this a good time to enter into this space for a new investor who is there, or should there still be a cautious approach with in terms of how the markets are faring, because the fundamentals, if we see the order book, the order inflows, they remain on a healthier trajectory. So just want to understand your viewpoint on the overall defense space.
Yeah, so it's easy to sit on sidelines. I mean, considering that where the market is and considering how some of these stocks have fared in the recent times. However, we do believe that in our overall pack that we cover, there are certain stocks like, for instance, PTC Industries, Solar Industries, Azad Engineering. These stocks might seem to be highly valued, but if you consider their future potential and the order book, I think the earnings growth actually justifies that. So in case of solar, we see a clear visibility of at least 35% EPS growth over the next 2 to 3 years. In case of Azad, we are quite hopeful that the growth would be to the extent of 30% in terms of revenue over next 10 years. So you see that kind of a runway. In case of PTC Industries, for example, recently they have commissioned VAR, and they would be commissioning the complete titanium casting and metal complex by end of the year. So these are some of the very exciting names, and these names are interesting because they are not glued to the domestic defense spending because they are part of global supply chains of global majors. So therefore, the predictability is higher there. So our top picks in the space are Solar Industries, PTC Industries, Azad Engineering in the same order. And if there are stocks, the area that we would like to avoid at this stage would be shipbuilders again, because we believe that EPS growth could be constrained there.
Okay, so for shipbuilders, it's still a cautious approach that we are seeing, but Solar Industries, PTC Industries, and Azad Engineering, the preferred picks for ICICI Securities. My final question to you is about if there are still any kind of concerns or challenges that could hinder the performance of some of these companies in the defense space, if you can talk about that as well, along with the overall outlook, if you can just summarize it in a quick take.
Yeah, sure. So there are, execution challenges that we saw through the year. For example, in case of HL, the engine is still elusive, and and we really don't know when, the engine would land. There are hopes that, FY26 would be better. HL has the requisite capacity, but there are certain things that are not in their control, unfortunately. So execution, due to dependence on the imported components, is certainly one key risk that we see. The other key risk that we see, of course, that because of the global supply chains are so distorted at the moment because of ongoing wars, that if the dependence is, let us say, on Ukraine or on countries like Israel or even Turkey for some of the components, then you could end up having orders, but you might fail to execute them. So execution is something that remains a real challenge, I would say, at this stage. Summarizing everything, I believe that there are two themes. First of all, that investors should keep focus on. One is aerospace. The second is ammunition. Both of them have got significant potential globally as well as in India, and there are companies that can be directly tagged on these themes. That is point number one. Point number two, I think the execution is likely to pick up as we go in FY26. We would see HAL producing LCA Tejas. There is a capacity to produce 24 aircrafts. We will have to wait and see, depending on the engine deliveries, how much they can actually produce. And as far as the potential is concerned, see, the whole rearm Europe concept opens up a plethora of opportunities, as I said, for the names that are part of the global supply chain. So clearly these are very interesting times. I think the stocks have shown correction, some of them quite a bit in the recent times, and one could think of getting exposure in some of these names.
Well, thank you so much, Amit, for joining and sharing the perspective on the overall defense space and what could be expected for some of these defense companies which are there in terms of order inflows, the orders that one should be focusing on, as well as how the outlook or how the concerns are. Once again, thank you so much, Amit, for joining in. But let's shift focus. Let's keep defense again in focus. And we have Paras Defense in focus, as the company has received an order worth about 142 crore, and this is from DRDO. This pertains to laser solar module and beam control system on mobile platforms. But to talk more about this development and the overall defense sector, we are joined in by Amit Mahajan, the director of the company. Hello, Amit. Welcome to the show. Firstly, I would like to understand the order size that you've won. It's a considerable big one. Want to understand your take on this.
Good afternoon. Firstly, thank you for having me over. This is a big order. This is, I think, first time in India such an advanced technology has been offloaded to a private industry. And we are very, very proud of that. We intend to make our nation proud by this, because what it would do is the development of a technology like this would put India right on top of the global technology advancements. And here, we are set out to build a system which will not only be good for anti-drone applications, but also for air defense. So this will create mark our entry into all kinds of laser systems, and it will make us a global significant player in terms of air defense technologies.
I just want to understand from you, you've mentioned that this would be a significant for the laser system in the anti-drone and anti-missile systems. Want to get your perspective on the overall industry which is there. How big of a role can you see this? What's the kind of order opportunity in this particular segment that we're looking at?
So this particular segment, like I told you, this is happening for the first time in India. Globally also, very, very few companies are involved into this, because the complexity of the technology and very many other things attached, the supply chain and everything. All of this, today, Paras will be the flag bearer of this technology, not just for the requirements in India, but also we'll be looking at global outreach and good export opportunities. We are looking at a total addressable market in excess of 25,000 crores is whatever we understand from our understanding. So this way, what we see is just the tip of the iceberg. We are creating some technology which will mark the future in air defense.
Well, that's quite interesting to understand. So considering this order opportunity that you're seeing, firstly, I want to understand what's the current order book like. We have seen significant growth in the last couple of fiscals, 215 crore versus size in FY22. From there onwards, 393 crore, and by FY24, 630 crore. Want to get your perspective on what's the current order book shaping up like, considering these multiple order wins that the company has received, and what's the kind of order inflows that you are projecting in the next 1 to 2 years, if you can share more details, and in what segment particularly are you seeing more of these orders coming in from?
So the upcoming orders will be in the area of optics for sure, optronic systems. We are looking at orders coming in the area of electromagnetics, We are looking at orders coming in the area of defense electronics. So there is going to be an inflow in all round verticals of the company. Current order book will be somewhere between, because we executed also in the in this particular quarter, somewhere around 900 or 900 plus crores. But the pipeline is humongous. And when I say pipeline, I'm looking at in excess of 2,000 crores in our existing business. Now there are other businesses that we're looking at. The pipeline even grows further from there. So the opportunities that we're looking at are significant opportunities. We are looking at a order book which will be at least 1.5 to 2x of our revenues always with us. This gives this makes the ball in our court, and we can execute the way the demand is, and then we can plan the execution accordingly, then we can plan the finances accordingly, and we can give a revenue growth that we always want to give it to our investors, and we always have been giving guidance for.
So considering this 900 crore of an order book that you have, firstly want to understand what is the kind of execution that we are looking at, which are some of the key near-term orders which are to be executed. And as you mentioned that the focus would remain on the optics side of the business, want to see what is the kind of overall TAM, the total addressable market that you're seeing. You'll also set up an optics park with which you'd signed an MOU for 12,000 crore. If you can emphasize more about this segment and also about the execution of the current order book which is there.
So if you see the existing orders that we have, Periscope, we have now started delivering one per quarter. And this, we are also adding value to Periscope. So Periscope is going to be our frontline product. It will be a product that we are going to be producing year on year for very many years to come. Apart from that, we are looking at the optics area to grow, not just in India, but we have also started slightly expanding our export market when it comes to optics. We also participated in a few exhibitions. We are going to participate in a few exhibitions where optics can be then subsequently be exported. There have been good hope and good funnel getting built up in Europe, in America, and we are looking at how we can, start delivering to newer customers when it comes to optical components. This will further fuel the growth. Apart from that, what we are seeing is there is good demand coming in the defense engineering side, and defense engineering will also start giving good revenue growth year on year. And more or less, the coming opportunities would be more on the optical systems, complex optical systems, say ground to space and space programs, and also defense engineering. So these three areas would be the key areas for the future.
So if I were to consider your mix, currently, if I'm not wrong, optics contributes to about 70% of your revenue, whereas defense engineering makes up to about 30% of your revenue. Given that the strong emphasis is there on the optics, do you expect there to be a shift in terms of where the segment mix is concerned? And considering that, what would be the impact on the margins? Margins would continue to remain in the 30% of the guided level that you've given?
So I would really want to thank you for considering optics as 70%. Currently it is 50%. Okay. Yes, there will be a big smile, year to year smile on my face when I have optics delivering 70%, because this is the stream that contributes largely to the profitability of our company. Said that, defense engineering is also catching up, and defense engineering today, they both are 50-50 if you see the last quarter which went by. And in the future, we would want to inch the optical systems a little bit higher than defense engineering for the profitability perspective. We would not only sustain the profitability that we've been having for these many years, but we are hopeful that we will be able to better this profitability along with the revenues.
Okay, so 50-50 is the mix currently, and you expect this to go much higher with better margins is the expectation going forward. Okay, so that's in terms of where the margin mix is concerned. In terms of the exports, now government has remained steadfast on increasing the thrust for the defense exports which are there. Want to understand your opportunity on the sides of defense exports. How do you see this mix faring up in the next 2-3 years, if you can give us perspective on that as well?
Exports has always been a plan B for us, because the domestic market is very, very exciting, and we would want to cater to that domestic market, because we, being an Indian manufacturer today, we have a lot of attention from our customers. So said that, what is happening is our position of being an exclusive optical systems and optics manufacturing company cannot be kept hidden from the world. So somewhere they are looking at opportunities like China plus one, and most of the cases India is one of their most preferred defense ally. And when that happens, they would want to source as many components from India. Now, when it comes to optics, you won't find anybody else but us delivering the kind of quality and the kind of quantities that we can. So there is a kind of pull coming in from the export market, and we are saying, okay, let's not keep it only as plan B. Let's look at it parallelly and see how we can also address the export market, which means it's a positive indication that we are having an export pull. All that we need to do is just cater to it, and we are well equipped when it comes to resources, when it comes to capital. We are well equipped to even cater to the export market and the growth that comes along with it.
Okay, well, that was my final question to you. Thank you so much, Amit, for joining and sharing perspective on Paris Defense, what is the kind of order opportunity that we are seeing ahead, and the overall outlook for the company. Once again, thank you so much for joining.
Always a pleasure.
But with that, that's all the time that we had on this show. Stay tuned to NDTV Profit for more updates.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank.
Splash of green on the screen, Nifty trades at day's high, Sensex hovers around the 76,000 mark, all sectoral index in the green.
Tech giants play catch up. Nifty IT emerges as one of the top sectoral gainers today. This is on the back of the FOMC decision, partnerships with Nvidia and more. We'll bring you 5 reasons why IT is buzzing in trade today.
Defense stocks see recovery in the past 2 days. Major stocks buzzing in trade today as well. Paras Defense up more than 5%, while Bharat Dynamics is also trading in the green.
Hindustan Copper climbs in trade as copper prices rise even further as a result of global trade disallocation.
Another day and another negative news flow for Ola Electric after Mumbai and now the stores in Pune are under Maharashtra Transport Authority scanner. Total 26 stores of Mumbai and Pune are inspected in just the last 3 days. This is an NDTV Profit exclusive.
The EV versus petrol vehicle debate again in the limelight, but this time from the price range. Union Transport Minister Nitin Gadkari says that electric vehicles prices will be equal to those of petrol vehicles within 6 months in India.
Good afternoon and welcome to Profit Buzzers. I am Puneet Zaveri and with me once again is Mihika Barve. It's been a very good trading session. As a whole, we've seen the Nifty being in the green across this particular week after a start that was expected to be around the 22,300 odd mark. The Nifty has galloped across over the last 3 days. Specifically, we have seen 23,000 on the Nifty being reclaimed again, and it's very positive to see that level being maintained as well. Let's quickly look at the contributors as well, as which are the key stocks that are positively contributing, and it is Bharti Airtel. Infosys as well as TCS is heartening to see after a day and a last couple of days specifically where the IT sector has been lagging. On negatives though, it's not too much of an impact on something like a Bajaj Finance, L&T, Ultratech as well, but overall it's been a positive trajectory as well. If you can get the Nifty heat map as well, look at what are some of the stocks in green doing, and we are seeing positive on across 39 of the stocks at least in the trading session today, and that's been one of the key aspects. And finally, on the sectoral indexes as well, if we can pull up all of those, and we will see some positive momentum. Nifty Auto being the biggest one right now, up about 1.5%, and Nifty IT is one of the biggest gainers today as well after lagging yesterday. Nifty Media also seeing some positive. We can just pull up the contributors of the Nifty Auto as well, because over the last week we have seen some big moves on stocks like Gabriel India. Apart from that, we've seen some movement on Mahindra and Mahindra as well, and Bharat Forge is up today almost about 4.5%. Despite news flow in the earlier week that the US EPA will be looking at the green emission norms
expected to trigger a pre-buy, which might not happen now because of the delaying of the SEN norms as well. We've seen Eicher Motors also react positively, Bajaj Auto being the other one as well. But Mika, what is happening with the mid cap and the small cap index?
They're doing well. They are underperforming the Nifty 50, but we're still seeing 5 tenths to 6 tenths% of gains on the Nifty mid cap as well as the small cap. It's also key to note that both the mid cap and the small cap indexes have now gained 10% from the 52-week low. I quickly want to pull up some of the mid cap counters. Something like Bharat Forge, like Puneet mentioned, is doing well in trade today. It's the top gainer on the Nifty mid cap 150, followed by something like a Max Health. It's up 3%. Phoenix Mills, after seeing red yesterday, it's up 3.5% right now, followed by a Lloyd's Metal and a UBL, all gaining over 3% in trade. But I think it's key to mention on the losing end, you do have counters like KI Industries and Polycab, which are down 9 to 13%. This follows an announcement made by Adani Enterprises to enter the cable and wires industries, and we're seeing, cuts on that end as well. You also have some weakness in something like a Paytm, down about 3%, followed by a GIC, down about 2%. Lastly, on the small cap space, you do have 148 small cap counters advancing. Top on the list is a Rajesh Exports, up about 14%, followed by something like a KC International, up 9% right now. You also have some strong movement in something like KFin Technologies, up 5%, followed by Hindustan Copper, up 5% as well, which we'll address in just a while.
Well, that was the picture of the broader market as well. And, we're seeing the cables and wires segment again hampered, first with the entry of Ultratech and now that of Adani Enterprises. And, RR Cable didn't recover from that move as well. It's currently down. But stocks like KI Industries as well as Polycab had seen some positive trajectory. That's all wiped out again in trade today. But one stock and one sector is in focus is the IT space. We saw that the Nifty IT was under pressure yesterday as well as a couple of days ago after the Citi note, which cut target prices on all 10 of the stocks under their coverage as well. We have my colleague Mahima now joining in with the top 5 reasons that have been impacting the stocks positively today. Mahima, what are some of the things to watch out for?
Right. So, as you rightly mentioned, there are 5 key reasons as to why Nifty IT is buzzing in trade today. The first one is that a couple of IT companies have partnered with NVIDIA. Wipro announced its partnership with NVIDIA for AI-based solutions. This is for various industries to empower nations, and this is to take place across the globe. Tech Mahindra has also unveiled an autonomous PV solution powered by NVIDIA AI, and this is to enhance drug safety management. The second reason is the FOMC outcome as well as the kind of commentary that came in. The US Fed projects 2 more rate cuts this year. This could push discretionary spends by client, and this could be positive for Indian IT. The third reason being short squeeze being seen in the entire IT space. Shorts have been built up around IT stocks, and dealers indicate that short squeeze is moving up the IT index in trade today. IT index was down by about 2% overall in month to date, and IT was the only index that has been down, in fact, month to date, as compared to the other sectors. The fourth reason being overall Accenture results have been announced today, and Jefferies has come out with their expectations as to how Accenture results will pan out. Full year revenue guidance to be lowered to bottom half of the current range of 4 to 7%. Managed services to continue to drive growth for the company. They see solid deal bookings, and recovering consulting gets pushed out, and clients potentially take additional time to evaluate discretionary spend. These are the kind of commentary that Jefferies is expecting from Accenture results, which will be announced today. So these are the reasons as to why Nifty IT is performing well in trade today.
Well, thanks for that, Mahima. But let me introduce Lancelot as well into the show, who's the CIO at ValueX Wealth. Lancelot, good afternoon and welcome to the show. I just want to get your view on Nifty IT specifically first, because we have seen, one camp of investors as well as analysts mentioning that, the Nifty IT is trading at a 30% premium to the Nifty index versus a 10-year average of about 12%. But on the other hand, we are seeing some kind of short squeeze as well as some FOMC meeting also, which has positively impacted the IT stocks today. Which camp are you sitting in specifically for the IT sector?
So I definitely feel that, at the moment, the situation with the IT sector is very fluid. And we will not really know the impact till because some of the announcements that may come up, on the H-1B visas, on trying to on offshoring of jobs, all these initiatives which the US president may take may impact the business significantly. And we are seeing a slowdown in, in order, let's say, wins from the US markets, because most of the companies themselves are in the US are a little bit concerned about how the policy announcements are going to impact their own businesses. So they are not rushing ahead to set up new contracts or to give to any new capital expenditure. And so I see that there would be a delay in terms of postponement in terms of orders, and that could negatively impact the IT sector. So it's better to wait rather than trying to bet whether this is the bottom of the IT space. Wait for maybe the next 2-3 months. A lot more things will unfold over the next quarter, and maybe by that time you'll have significant amount of clarity. So rather than trying to decide whether this is a great bargain, or and then see that things were actually expensive, it may be better to wait for clarity. And then even if you have to buy at a higher or invest a little bit higher, at least you're sure about the earnings growth going forward. So that's where we are probably looking at it.
Got it. So wait and watch for the IT pack there. But shifting focus, I want to pull up an Indigo. It's up over 2% in trade today. And it's in focus. We have a bunch of brokerage notes that's come out as well. We have Mahima joining us once again. Mahima, what are the brokerages saying?
Right. So basically, Indigo had its analyst meet yesterday, after which analysts have kind of turned positive and hiked target prices for Indigo. To name a few, UBS has hiked the target price to 6,000, which was earlier 5,400. Jefferies has hiked it to 5,700, which was earlier 5,300, and JP Morgan has hiked it to 5,610, which was earlier 4,950, and BofA has hiked it to 5,600, which was earlier 4,750. So significant upside for BofA for sure. Now, in terms of on what basis they have hiked these prices, well, BofA is saying that they're seeing a stronger price environment in Q4. They're also seeing a stronger demand, which will be driven in Q4, and overall unit revenue will be a surprise, and they're a bit more confident now with respect to the FY30 growth strategy that Indigo has pointed out. In terms of Goldman Sachs, they're saying that overall strong domestic position is already held by Indigo, but international will drive growth, and this has emerged incrementally positive on Indigo, and this is after the kind of commentary that has come out from the management. Indigo's strategy in light of stronger competition in international will also be a key determining future growth perspective for the company, is what Goldman Sachs is bullish about. So this is the overall view as to why brokerages are bullish on Indigo.
Got it. Thank you, Mahima, for giving us those details. Ansar, I come to you. 4 buy calls, very bullish views coming in. You have a strong pricing environment. You also have the whole summer tourism kicking in. Your outlook on Indigo against this backdrop?
So, I still feel that Indigo is a little expensive, because even if you look at it, it's trading at almost 30 times its earnings. And while earnings growth may be, maybe more, let's say, certain, given the favorable environment for the tourism industry, as well as for, the crude prices have come off. So we should see some benefit in terms of lower aviation fuel cost. So that should help in terms of operating, leverage for Indigo. But when you look at, whether this should be a right time to enter into the stock, I think it's still trading a little bit expensive, and maybe another 10% lower would make it an attractive opportunity. But at this time, one should wait and avoid, booking, because any negative surprise could see some re-rating, and then you could see a much lower level.
A cautious outlook on Interglobe coming in. But moving on, the next stock that we have in focus, I want to pull up a Hindustan Copper. This stock has seen some strong moves today as the top metal gainer. It's up over 5% right now. It's steadily gained throughout the day. And in terms of why it's buzzing, well, LME copper futures have climbed over $10,000 per ton overnight. And this is a key threshold for copper prices. You have LME copper future prices, and this is the highest level since October of 2024. Even the COMEX copper prices are up 25% year to date, followed by LME copper, which is also 14% on that exchange year to date. In terms of why are copper prices gaining? Well, prices have been gaining for weeks because there's been a global trade disallocation, and this has mainly been caused and triggered by US President Donald Trump's push for tariffs on crucial metals. You've seen a lot of talk about tariffs, reciprocal tariffs, and last month we also saw the US Ministry of Commerce starting an investigation in terms of US copper imports. So as per Bloomberg, these have been one of the key triggers. And in terms of impact on Hindustan Copper, well, Hindustan Copper prices gaining is positive for the company. It's positive for the company's realizations, and the stock has historically always tracked global copper prices. So when they do risen, most of the times Hindustan Copper share prices have again risen, and like you said, it's it's close to 6% right now. Lancelot, I'll come to you. We've seen a strong uptick in copper prices, but a lot of it is also based on a lot of uncertainty regarding tariffs. So from a company perspective, barring a very sudden uptick in the commodity price, what's your overall outlook on Hindustan Copper?
While higher copper prices means higher realizations and higher margins, also, like you said, the uncertainty here as to the sustainability of these high prices is a big issue. And when you look at valuations, it's Hindustan Copper is trading at almost 30 times EV to EBITDA, which is at a premium to the industry median, which is about 11 times. So when you look at it from that perspective, the risk in terms of investing at the higher valuations is much higher than investing at a low. And in commodity stocks, it is always better to buy into a commodity stock when the prices are low, because your margin of safety on the downside is much higher. And thereby you are protected on the downside, and whenever the cycle improves or turns, you can catch the upside, and that's where you get significant gains. Here we are already at a reasonably high valuation, and hence the incremental benefits in terms of copper prices would depend upon how long these high prices can sustain and whether they can go higher. And to see that translate into earnings for the company, it will take at least 6-8 months. So in the meanwhile, if there's any negative surprises, you can see a strong re-rating happen in the stock. So I would also be cautious even on Hindustan Copper as well.
Got the view, Lancelot. So a cautious tone across a few spaces that Lancelot is seeing, specifically IT as well as Hindustan Copper and Indigo as well. But another stock is in focus, that's Adani Enterprises, after the company has formed a new joint venture specifically to entering into the metal scraping as well as the cables and wire space, and we're seeing an impact across the cables and wire company as well. My colleague Swami joins in with some key details of this new entry.
Well, yes, UBS in fact has come out, and a lot of other sales analysts also came out with their note, like ICICI Securities, JM Financial, but those were not PDF notes, but WhatsApp to their clients. But what is the new development that has come in is that Adani Enterprises 100% wholly owned subsidiary Kutch Copper plans to form a 50-50 JV, that is joint venture, with Pranitha Ventures Private Limited. Now the joint venture's name will be Pranitha Eco Cables Limited, and it will engage in the business of manufacturing, marketing, distribution, buying and selling of metal products, cables and the wires as well. Now the additional capital expenditure or investment details are still not available, but so far we know that the investment in share capital will be just 10 lakh rupees by both the parties in the joint venture. Separately, we also know that Kutch Copper also announced that it has joined the International Copper Association as its newest member, and it will establish a copper smelter in Mundra, Gujarat, with an initial investment of close to $1.2 billion US. And this, because of this investment, it will enable an annual production capacity of around 0.5 million tons in the first phase, which could be increased even going forward. That is what the plan is currently, and this facility will manufacture copper cathodes, rods and other byproducts as well. So the parent company, that is Kutch Copper, will be into the business of manufacturing copper and copper byproducts, while the joint venture will deal in metals, cables and wires. And UBS note is saying that the competitive intensity in the cable and wire segment post this this announcement could increase given the fact that a large serious player, that is Adani Group, has entered the cable and wire space. Now the capital expenditure plans of Adani Enterprises in the cable and wire space is not known, but this announcement itself could be sentimentally negative for the existing players like Havells, KEI and Polycab, and that's the reason why these stocks are down anywhere between 5 to 8% in trade post this announcement and post this UBS note that has come in today morning.
Got that view. Swami, thanks so much for joining in with all those details. Lancelot, specifically, how are you seeing the cables and wire space? Because we've seen Ultratech's entry into the same as well, another potential player coming in. How do you see the impact on the current and the existing players such as Polycab, KEI Industries, RR Kabil? And how do you view the space of the large players choosing to enter a space with high return ratios as well, but a lot of volatility in terms of commodity markets?
So I think if one has to look at this space, yes, it is a fast growing space. There is relatively good margins in the business, which is why some of the big groups have decided to enter into the space. And we have seen this in the past. Whenever big groups enter into a space, their competitive intensity leads to, maybe in the shorter term, some amount of margin erosion even for the existing players, and plus there'll be some amount of market share which gets given up in favor of the new players, right? So I think the rate of growth of the existing players will slow down going forward. And even probably that should have an impact on the valuation. So the valuations of many of the existing players, because of the previous rates of growth that were there, were far in excess of maybe normalized valuations. And now we will start to see many of these stocks come back to normalized valuations. Till such time, some of the strong companies in the space can continue to build their moat and consolidate their positions. So I think it's going to be a very interesting and a difficult space for the next year or so. And one has to be a little cautious and maybe wait for some severe corrections or significant corrections in terms of prices to bring valuations down to, let's say, closer to the 5-year trading multiples. And then that should be a good entry point to look at it. But definitely one has to be, again, cautious with this kind of a venture in the pipeline.
It's interesting because there are certain details that we yet have to know. We don't know if Ultratech is going to enter into the cables or wires business, and what kind of capex is Adani Enterprises looking forward in the space via its JV. But we shift focus to Voltas, which has hosted their quarterly analyst call, and some major takeaways include utilization levels in their Chennai facility at 40 to 50%. The company will be further in focus as the summer season sets in. So Varsha joins us with the major highlights from the con call.
Yes, thank you for that. So yes, in the analyst call, they misplaced concerns over recent market loss in Jan and Feb, and the utilization levels in Chennai facility are 40 to 45%. They are expecting to reach optimum utilization level in the next financial year. And the market lost during Jan month will be recouped during summer months as per management. They're going to focus on the absolute profit growth, and they've retained their earlier guidance of market share gains in RAC, high single digit EBIT margins, and focus on absolute growth when it comes to UCP segment, and no immediate price hikes are in sight, which was said by the management. They aim to grow ahead of the industry in the current summer season, and they're focusing on absolute profitability and volumes rather than margins and price hikes. And they're expecting 70 to 80% growth in the cooler category, and accordingly manpower will be deployed. And in commercial AC, the company is expecting 15 to 18% of CAGR growth. For Voltas Beko, EBITDA break-even will take few more months according to management, considering high raw material prices, and due to change in leadership, they don't expect any material strategic changes. On supply chain distribution, so contribution from 2 tons and above AC is less than 10% of the overall industry size, and they are also evaluating JV partner for compressor. Even if I were to talk about the brokerage call, so UBS and HSBC, so UBS has maintained buy call with target price of 2,200, while HSBC has maintained hold call while cutting the target price.
Got it. Thank you, Varsha, for giving us those details. Lancelot, I'll come to you. How are you viewing Walters? We've seen guidance retention, a focus on profitability, volumes, and margin recovery has been, set forward. What's your view on the counter?
I think on the the air conditioning space, Voltas has been able to consolidate its market share and has grown well in that space, which I think augurs well for the company. Like they said, during the summer season, they should recoup whatever kind of market share had dropped in the past, and that should really help them. I think where the concern is more on the projects and the EPC, business. And that is some space where I think there'll be increased competition as well as a slowdown in the rollout of new projects. So given that background, I think the stock looks interesting to accumulate. And maybe even at these levels or slightly lower levels, one can start accumulating this stock.
Got the view, Lancelot. Another stock that's in focus is NCC after a company has bagged a new order from Andhra Pradesh government of over 2,000 crores. Varsha is still with us. Varsha, what are some of the key details about this new order?
Yes, absolutely. So, as you rightly said, so they've received an 2,129 crore order from Andhra Pradesh Capital Region Development, and the contract is for infrastructure construction in Amravati capital city, and the work includes roads, drains, water supply, sewage, utility ducts and plantation, and the construction is to be completed in the next 3 years. In the recent con call, company also highlighted that NCC has always been growing in the range of 20 to 25%, and they're going to maintain that growth. So in FY25 and in next 2 to 3 years, we might see the growth rate of around 20 to 25% when it comes to overall financial for the company.
Thanks for that, Varsha. And Lancelot, let me come across to you very quickly because we've seen, with the government changes in Andhra Pradesh as well as Bihar, a lot of new construction orders coming in from infrastructure companies. So just a two-parter. One, any specific view that you have on NCC? And second, on these infra orders specifically, any kind of counter that you like in the infrastructure as well as the EPC companies, anything that's on your radar?
So, while most of the companies, whenever they announce these orders, if these orders are mainly driven by, political considerations or political thing, it's not really, very healthy. So, while we are keen on the space, we look at, something like a Larsen and Toubro, where they are more diversified across not only, real estate as well as large projects. They also into the oil and gas space as well as they do overseas projects. So given that they have a sustainable large order book, and we feel that L&T definitely offers a much greater upside potential as compared to maybe something like an NCC.
We shift our focus to the gas space. Mahanagar Gas, Indraprastha Gas, Gujarat Gas, all up in trade. Between 2 to 3%, and this is after Axis Capital has initiated coverage on 2 counters and upgraded 1. The first counter it's initiated coverage on is Mahanagar Gas. The coverage has been initiated with a buy call, a target price of 1,580 rupees, which suggests an 18.5% upside from yesterday's close. And in terms of why Axis likes MGL, well, the new geographical areas and initiatives are improving the growth outlook for the company. The brokerage does expect the volumes to grow at a 10% compounded annual growth rate over FY25 and FY27, and EBITDA at 10.5% and a net profit at 10.4% over the same period. Axis Capital has also upgraded IGL's rating from a add previously to a buy rating on better volume growth prospects. They've increased the target price by 5% as well, 224 rupees, which implies a 16% upside. They do expect Indraprastha Gas to benefit from the ramp up in their new geographical areas and expect an 8% volume CAGR over FY25 to FY27. And this comes despite the slow growth in the NCR region because of the Delhi EV policy. And valuations are also now attractive at after the 30% correction that we've seen in the counter. And lastly, Axis Capital has initiated coverage on Gujarat Gas as well. It's initiated coverage with a reduced rating, target price at 390. Why they're not as bullish on Gujarat Gas versus the other 2 counters, because they do not expect any volume, the reversal in the volume decline trend that we've been seeing in the Morbi region, which is a key location and geographical area for the counter. They expect muted 7 to 8% of EBITDA and net profit CAGR over FY25 and FY27, and valuations still remain rich at 20.8 times the FY27 price to earnings ratio. Lancelot, I'll come to you. How are you viewing the gas space? We did see some, setback when the APM allocation was, cut, but now that's been restored almost fully. And we've seen good CNG vehicle additions over the last 3 months. How do you view the stocks, and what would be your top pick?
So I think, yes, this is a very interesting space because you are seeing, reasonable amount of growth coming in from due to vehicle additions. The gas distribution business is also expanding, both like MGL is expanding geographically as well. And with more vehicles coming on the road, a lot more interest is there in CNG. In fact, Bajaj has even launched a CNG motorcycle, which has seen fairly good acceptance. So I think from a let's say growth on revenue perspective, yes, this is definitely, these are attractive options to look at. However, these policy decisions can change the outlook. And gas allocation as well as gas discovery and pricing can make a big difference to the profitability going forward. So at this point in time, one definitely feels that yes, MGL looks good, even IGL could be looked at. But one has to be always watching for potential changes in the regulatory environment and the pricing mechanisms, because those can impact profitability significantly.
Got that view, Lancelot. We'll leave it at that. Thanks so much for joining in, Lancelot, with a whole host of views on your stocks, as well as something to watch out for going forward as well. We look forward to our next conversation. Thanks so much for joining in. But with that, viewers, let's take a very quick break. We'll come back with a lot more stock views as well as a new fundamental guest as well. Stay tuned to NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hand.
Hello and welcome back. You're watching Profit Buzzers and NDTV Profit. Moving on to the next story. It's another day and another issue for Ola Electric. Now, sources have told NDTV Profit that after Mumbai, several stores in Pune have been inspected, and Tushar joins us with all the details.
In an expansion of the rate of the inspections that we saw in the last couple of days has now gone out from Mumbai to Pune. So yesterday there were about 10 Ola Electric stores under the Transport Department's radar. That's now expanded to 26. A total of 36 Ola Electric scooters has been confiscated by the Transport Department by various RTO officials across 5 RTOs in Mumbai and Pune. The problem is with the trade certificates. Remember, a trade certificate is necessary for if you have to operate a showroom to display motorcycles or scooters or any kind of vehicles in India. These Ola Electric stores did not have these trade certificates, or multiple Ola Electric stores were operating under one single trade certificate, which is against the law. The Transport Minister, the Maharashtra Transport Minister, has taken cognizance of this matter and has directed immediate action and a submission of a report as part of the Ola Electric inspections. What we also know that the Transport Minister is in constant discussions with the Transport Commissioner to arrive at a solution for this particular issue that is at hand.
Well, thanks for that, Tushar. And the trouble has been mounting for Ola Electric. Do note that in mid of February, they mentioned that registrations will be affected for the scooters specifically, and we saw 190% fall on a month-on-month basis for the scooters in February. They mentioned that this will be done in March, registered in March, and will reflect in Vahan specifically. But let me introduce Osho Krishnan, who's a senior research analyst, technical and derivatives at Angel One, as well as Astha Jain, who's joining us, senior research analyst at Hem Securities. Both of you, thanks so much for joining in. A very good afternoon to both of you. Astha, let me come across to you first for Ola Electric. It's a very tricky counter. Stock down almost 30% from its issue price, roughly about 68% from its highs. And what is your outlook specifically on Ola Electric and some things to watch out for?
Hi, good afternoon to all of you. See, talking about this counter, first of all, I think the kind of news flow which is coming into, I think it is not very positive for the company, and we are not very much optimistic about the outlook because there are always an uncertainty regarding the counter. Secondly, we all know that even though some problem arise in their subsidiary also, and in fact now this data mismatch news with the Vahan portal, I think all these news are not signaling in a positive direction. So what we are recommending is that stay away from this counter, but those who have this counter, they can try to either exit or put a strict stop loss of around 45 zone. This is what we believe, because we don't think that this counter is now, have a potential to move more upside from here unless some clarity comes, and that will act as a positive for a company. So idea here is to stay away from this counter as of now.
Got that view, Astha. And there have been, the story has been developing specifically in Maharashtra as well. But my colleague Tushar has been reporting that 3 more stores have been raided in Madhya Pradesh. 2 are in Jabalpur, 1 is in Indore. And that specifically has been a concern because they've gone from roughly about 800 odd stores to 4,000 stores just in 1 month in December. And now the trade certification issue across these stores have been coming in as well. They have mentioned that 14 Ola Electric scooters were impounded in Jabalpur specifically, and none were in Indore, but that store has also seen raids in Madhya Pradesh as well. Apart from that, the Ola Electric stores have been served a 3-day notice to explain the situation as well. So the trouble just keeps finding the company as well. Osho, let me come across to you first as well. How is Ola Electric looking in the charts, and do you see some more further downside? Because from those 46 rupee odd levels, we have seen a sharp pullback. But what is your outlook on the same?
Very good afternoon to both of you. Well, yes, looking at the overall technical setup, the counter is already into a very strong corrective zone, and even it is near to the lifetime lows of 46. So I'm expecting that till now on technical front, there has been no respite or pullback that can be seen. Only once it surpasses the zone of 60, then we can see some kind of revival in the stock prices. But till that time, it's better to stay sidelines. And I have the same view that if it breaches the zone of 46, then it might plunge even lower towards the zone of 38 to 40 on immediate basis. So if someone is already holding the position, better to hold with a stop loss of 46.
Got that view, Osho. But we're speaking of, Ola Electric. There has been a raging war between the electric versus ICE portfolio across, the passenger cars and the two-wheeler space as well. Now, specifically, Road and Transport Minister Nitin Gadkari, and one of the biggest supporter of sustainable fuel, has mentioned that he's drawn parallels between the price between an electric vehicle as well as a petrol or a ICE engine option. Listen to what he had to say.
We are the third largest country in the world which is importing fossil fuel. So my dream is we need to think about the alternative fuel and biofuel by which we can reduce pollution and the cost. I remember when I started talking about the electric vehicles, the cost of the lithium ion battery was $150 per kilowatt per hour. Now it comes to $100 per kilowatt per hour. And I am confident that within 6 months, our car cost for petrol car, diesel car and electric car will be the same.
And that's a very bold claim coming in from Mr. Gadkari, because currently we do see at least a 20 to 25% premium for the electric vehicles. And apart from that, there is another key aspect to it, that most auto users and buyers are specifically preferring new models or new born electric models specifically. And we've seen that in reflection of numbers of something like a Mahindra and Mahindra as well, because the new born electric EV is getting 30,000 bookings on day one itself. It is something to watch out for, because we've not seen a very, very strong reaction on something like a Hyundai Creta EV, which is a retrofitted model of the ICE version of the Creta as well. And apart from that, the other comments that Mr. Nitin Gadkari said, that he's trying to make India into the third largest eco country in the world, and he's mentioned that he's working on the mass rapid transport on electricity as well. But this will be dependent on specifically on how buyers are treating electric cars as well as electric scooters. Currently, 1 in every 5 scooters sold in India is now electric. And comments from some management of Ola Electric has mentioned that the motorcycle EV revolution will be much faster than that of scooters. Scooters took about 3.5 years to reach this particular target. So that is something to watch out for. How quickly can we transition to an electric car country? Currently, the penetration is roughly just about 2.5 to 3%, and brokerages are estimating this to double in the next couple of years. And that will be a very incredible feat as well. But definitely something to watch out for. But Asta, let me come across to you first, specifically on your view on the EV specifically. Do you see that for car makers specifically, the consumers are preferring a brand new model as an EV rather than a retrofitted model as an EV? And any kind of picks that you have in the passenger car space?
So yes, as you were talking about M&M also, so I would like to highlight some more points on that part. First of all, they had the plan to launch VE6E and XC9E. Right, because they have declared it on the 14th February, and they were planning to launch, various units of this per month. So I think that will give an edge to the company, and I believe that M&M is in the sweet spot if I talk about this counter as of now. So right now, what we believe that on this basis, M&M has really got a edge, and we are expecting this counter to move upside from here. So recommending hold as well as buy on dip strategy for this counter. So this counter is looking good to us among all the other peers with a price target of 29.50.
Got the view, Asta, but multiple analysts have been suggesting that the cement M&A wave might have run out of steam, but that isn't the complete story. Mika's walked across the wall specifically to talk about that. Mika, bring us what are some key inputs on the M&A wave in the cement sector.
Recent notes have stated that the M&A consolidation trend is coming to an end, but there are still some potential candidates out there. We did do this analysis a few months ago last year, and let me just first go on to the results of the analysis. The last analysis showed that the potential candidates for an acquisition was India Cement, Sagar Cements, Orient Cement. We also had a Heidelberg Cement, Star Cement, Mangalam Cement, NCL Industries and a Deccan Cement. Now, did any of these companies get acquired? Yes. Well, India Cements was acquired by Ultratech Cement via various 3 financial state investments. Star Cement, Ultratech again bought 8.69% stake in the company, and Orient Cement was acquired by Ambuja Cement. And all of these companies actually did see, a stock surge after the announcements were announced. India Cements, it was done in 3 tranches. The day after the announcements was made, we saw an uptick of anywhere between 10 to 14%. Orient Cements gained 7% after the Ambuja Cement acquisition was announced. So now on this analysis, we are basing it on 2 parameters that we've gathered from analysts. First, the capacity has to be less than 20 million tons per annum. Preference is to the 3 to 10 million tons per annum capacities. Second is the enterprise value per ton should be below $110 to $120 because this is the cost to set up a integrated cement capacity from scratch. So then the potential M&A targets that fall under these categories, we have 7 companies that come into our radar. If you could just go to the 7 companies, you have something like a Sagar Cement, Heidelberg Cement, Mangalam Cement, NCL Industries. All of these have capacities of less than 20 MTPA and are trading at an EV per ton way lower than the 110 benchmark. We also have something like a Deccan Cements, the Digvijay Cements and Saurashtra Cements, and many of these companies, there are media reports stating about potential acquisition. Well, who's more likely to be acquired? Well, analyst picks include Heidelberg Cement, Mangalam Cement, Sri Digvijay, Saurashtra Cement, as well as the Deccan Cements. And there's also another angle is that the southern market is a market which has a higher base to get more consolidated because the region is still fragmented. So, and 5 out of the 6 M&A deals or financial investments which were made last year did have presence in the southern part of India. So, based on this parameter, there are 3 companies that fall into NCL Industries and Deccan Cements have 100% of their capacity in the southern region, whereas Sagar Cements has 77% of its FY24 capacity in the south space.
Gautam, Mika, thanks so much for bringing us the detailed overview of the potential M&A wave that could impact the cement stocks as well as sector going forward. Asta, I just wanted to understand your view on the cement sector as a whole and if you have any picks here, because we've seen that the prices have started to move up over the last couple of quarters. But the southern market has not seen any kind of major price movement in cement prices over the last 10 years. So any kind of view that you have specifically on the cement stocks and your top picks?
So I think first of all, if I would like to throw some light on the industry also. So we are expecting this industry to grow at a CAGR of 7 to 9% from FY24 to FY26. Now, talking about the main factors behind it, first of all, the private capex, which has started picking up. In fact, government focus is there on the infrastructure, so that demand is also coming in up. So all these things are leading to the good industrial growth in the cement space. But if I would like to choose any one counter among all these, then Ambuja Cement is my preferred choice. Although Ambuja Cement's main profitability is driven by due to higher other income, but still if I take out all the other exceptional items, etc. from its bottom line, then again it has shown us strong numbers. So among all the peers in this space, I think Ambuja Cement is looking better to us if we would like to go with any one of them, followed by Ultratech Cement.
Got the view, Asta. Osho, let me come across to you. Anything on the charts within the cement space that looks interesting to you?
Yes, there are 2 counters which are looking very positive. First one is obviously Ultratech Cement because it is having one of the highest market shares. So definitely there is a kind of a pullback that can be seen in this counter. Followed by Deccan Cement. Deccan Cement has also seen a very strong breakout and is approximately have retested the neckline of the breakout. So I'm expecting that both these counters technically are looking very positive. but despite many other counters are also on the verge of giving a revival or a reversal kind of a momentum in the coming period. For example, Ambuja Cement is on the verge of giving a reversal breakout from these levels. So I'm expecting that Ambuja Cement from a short to medium term perspective is also looking positive to me. So these three counters, one should definitely keep track.
Oh, sure. It's interesting because Ambuja Cement and Ultratech have led the consolidation trend, while Deccan Cement could be a potential target. But moving on, let's take a look at the big brokerage calls of the day. CLSA has maintained an outperform rating on Z Entertainment with a target price of 170 rupees. The stock is up almost 3% right now. Harsh will join us with more details on the report.
So stock, of course, doing well on the back of the fact that CLSA sees very, very strong upside. They believe that a lot of the downside has been overstretched and overbuilt. They believe that ad revenue growth of even a small number in FY26 and 27 could well push EBITDA and profit growth to a large extent. So they're expecting a 6% ad revenue growth on the conservative side would lead to a 22% EBITDA growth and a 33% PAT CAGR between FY25 and 27. This is huge for a company with what they're saying is a nil debt and 1700 crore cash in the balance sheet already. And therefore, they are very positive with regard to this. They believe margin expansion, there's further upside for that. There's 9% margin expansion in Q3 FY25, a further 6% over the next couple of years, taking margins above the 22% mark. They still believe that TV is largely still alive. They believe that the Indians continue to watch TV in a larger proportion compared to OTT platforms, and Z has a presence in both and therefore stands out in that sense. Ad spends have been at record lows, even pre-COVID lows. They believe that a little bit of a bounce back is warranted and therefore they believe that absolutely inexpensive at this point. This one 65+% upside is what they see.
Percent upside on CLSA. But Harsh, we also have a note that's come out on Paytm by Jefferies. They've cut the FY25 EBITDA estimates by 50%. Could you tell us more details on what led to this cut?
Yes, it's interesting because payments, at any point of time when payments revenue gets impacted, you will see that negative number with regard to profitability as well. Now, in terms of what Jefferies is saying, they've maintained their hold rating, 850 being the target price. Lower UPI incentive is the key negative here. They believe that merchant discount rates, which is MDR on UPI, is likely to potentially come or not come is really where the overhang is. Lower government incentives with regard to UPI means that your UPI incentives will fall and Paytm's incentives will fall proportionately. Adjusted EBITDA for FY25 may be 50% below their estimates, FY26-27 20 to 30% lower, PBT 15% lower. They'll watch out for the switch to MDR based charges for large merchants that may possibly lift profits if at all and also improve predictability. So possible upside but currently negatives.
Harsh, thank you for giving those details. Astha, I'll come to you. I'll throw two stocks at you. You have a Z Entertainment and a Paytm on trending on two different sides on the street. My first question to you is, do you also believe that the advertising revenue led growth is yet to come and will come for Z Entertainment? And are you also mirroring a bearish view on a Paytm?
So first of all, advertisement-led growth is there, and what is a major focus and a major point about this company is that even they did some cost controlling also. So they have adopted some cost control measures. So that has also helped the company in the past in posting good financial performance, especially if I talk about Q3 FY25. So the cost control measures, because and in fact some of the losses from Z5 has also been reduced. So all these factors has already helped the company to posting good numbers. Although in that quarter, that is Q3 of FY25, there was some softness in the revenue due to the advertisement revenue decline. But I think going ahead, if that can be the case for a good and a strong performance in the advertisement revenue going ahead, definitely that will help the company posting very good numbers. So we are expecting this counter to move upwards from here with a price target of 120 to 125.
Got it. Osho, what about you? How does a Paytm and a Z Entertainment look on the charts?
Firstly, for Z Entertainment, the counter is still very weak on the technical front. There has been no pullback, although in the last 3 weeks, there has been a kind of pullback from the zone of 90 and is hovering around 103 now. But on a technical front, I would be waiting for the counter to cross the zone of 120 to have a kind of a view where we can see some kind of upside in the counter. For now, I expect 95 to 115, 120 as the immediate range for Z. While for Paytm has seen a decent correction from the higher end. The counter have retraced approximately 50% from the moment for the rally that it has seen from the lower end towards the 1050 kind of a zone on the higher end. So it has retraced 50%, and I expect the zone of 680, 670 should act as a very strong cushion to this counter. While on the higher end, if it emerges beyond the zone of 750, then we can see some kind of revival in the coming period for Paytm.
Got it. Let's just take a quick look at our markets. I just want to pull up the power pack, something like a power grid up about 1.5%. You actually had the electricity regulator, the CEA, notifying about the National Electricity Plan, the transmission plan for 2022 to 2027, as well as 2027 to 2032. They see an expenditure of 4.25 lakh crores in between the period of 2022 to 2027 towards transmission capacity. They've estimated an expenditure of 4.9 lakh crores over 2027 to 2032. They've also estimated an addition of 1.14 lakh circuit kilometers of transmission lines between the 2022 to 27 period, and India is likely to add 76,787 circuit kilometers between 2027 and 32. You have Power Grid, which is trading on with a positive bias. You have the BSE Power Index also, which is just gaining as well. Some of the counters, an Adani Green, Adani Energy, as well as an NTPC and BHEL are trading with a positive bias on the charts as well. But Puneet, how are the benchmarks doing? Still holding up?
Well, it's definitely a very good positive move that we've seen across the Nifty over the last hour or so. At the high point of the day, and we mentioned today in the morning in the FNOQs as well, that the 23,100 first target would be to meet 23,000. That has happened. And over the last hour or so, we actually crossed the 23,100 levels as well. Another key positive there. And it's important to note if we can hold on to these levels, because most brokerages and analysts have increased as support as well as resistance targets on the Nifty as well. But there are some other key stocks like Amber Enterprises, if we can pull up in the EMS space, Avalon as well. Post the correction over the last couple of months, one stock, Amber, has been in its own atmosphere, to be honest, trading across, not see any kind of correction. So if we can have the 3-month view of something like an Amber Enterprises, it's the least stock that's seen the least correction across in this particular time frame. It's actually up about 17%. If we can also pull up a Dixon on the other hand, Dixon has seen a fall from roughly about 18,000 odd levels to the 13,600 to 900 levels, and the 3-month view, that's a clear opposite view that we are seeing of the two largest EMS companies in India as well. But with that, it's all the time that we have on Profit Buzzers. Astha as well as Osho, thanks so much for joining in, and look forward to our next conversation with all your views as well. But with that, it's all the time that we have on Profit Buzzers. Stay tuned to NDTV Profit for more.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar. I'm my co-anchor Varsha. Well, Varsha, is the third consecutive day of strong gains that we are looking at the markets, right?
Actually, Somit, Nifty 50 crosses 20,100 mark for the first time since Feb 14. But let's see what it's almost up 1.1% in a trade today. Let's see what the gainers, when it comes to the benchmark index. You have Titan, you have iShares, Bharti Airtel, BPCL, who are on the gainers list when it comes to Nifty 50. While on the losers list, if I were to talk about, you have Bajaj Finance, you have Apollo Hospital, Ultratech, and Bajaj Finserv, which are when it comes to when it comes to losers. So, but Somit, how's the sectors? What's the sectorial heat map when it comes to how are the sectors performing?
Well, right before we do the market check, there's an important clarification that has been running on the ticker desk of NDTV Profit, and that is the fact that AU Small Finance Bank's CFO Vimal Jain has not resigned. In fact, he's calling these rumors that are going around in the market as baseless. Now, do remember that the stock had fallen around 3% on the back of these rumors that there could be a resignation that could come in from the CFO of AU Small Finance Bank. But that's an important clarification that we have got for you from the company, and it clearly says that these are baseless rumors and CFO Vimal Jain has not resigned from AU Small Finance Bank.
Right, and so I was just speaking about the sectorial, how are the sectors performing. Let's pull up that chart. Let's see the sectorial heat map. All the sectors are in green today. So you have Nifty Auto, which is up almost 1.5%, Nifty Bank up 0.6%, FMCG is up almost 1.2%, and Nifty IT is up 1.6%. Media, Nifty Pharma is almost up 0.8%. But let's see how are the broader markets performing there. It's basically they're mirroring the benchmark. Nifty mid cap 150 is up almost 0.5%. Let's see who are the gainers. When it comes to broader market, you have Bharat Forge, Max Health, Lloyds Metal, UBL, who are in the gainers list. Well, if I were to talk about the losers list, KEI Industries, Polycab are actually down. This is on the back of Adani Group entering into cables and wires segment. You have Paytm also. Paytm is almost down 3.7% on the back of Jeffries note. We'll speak in a bit about that. Even Vodafone and GIC are amongst the other counters which are in the losing segment. While if I were to talk about the Nifty small cap 250, you have Rajesh Exports, KEC International, RHI, Magnesita and Fine Organics who are gaining when it comes to small cap 250. While on the losers list, you have Phenolics Cables, again on the back of Adani Group entering into cables and wires. You have Vijaya Diagnostics, Alga Equipment and CAMS, Somit, which are actually on the losers list when it comes to Nifty small cap 250.
Right. Well, let's also welcome in the guest that we have today in the show, Prashant Tapse, Senior VP Research Analyst from Mehta Equities. Prashant, coming to you first on the markets, third straight day of gains. How are you reading into
There is no audio.
Well, we are facing some audio issues with Prashant. Right. Okay. Let's go across to Tushar, who has an report on Ola Electric's issues that we have been facing. Let's get in.
But the anchor voice is missing.
Yep.
Well, if you look at the markets, multiple stocks that have been buzzing in trade. We have IT, which is one of the top sectoral gainers on the back of various news flows that are coming. And do remember that there is today Accenture results that might come in, and the street is expecting pretty much stable set of numbers. Apart from that, as Varsha was mentioning, cable and wire stocks are down, and this is after the news announcement that came in that Adani Enterprises, one of the subsidiaries, Kutch Copper, will be buying around 50% stake in, or will be forming a joint venture with Pranitha Ventures Private Limited, and this JV will be called Pranitha Eco Cables. And yes, well, let's go across to the guest that we have today on the show. Prashant, can you hear me now clearly? Prashant, can you hear me now clearly?
No, I'm not.
Well, I guess we are still facing some audio issues with Prashant. Let's get in Tushar with his report on Ola Electric.
So what we are coming to know right now is that the Ola Electric raids have expanded to Madhya Pradesh as well. A total of 6 Ola Electric stores, 4 in Indore and 2 in Jabalpur were raided in the past week or so. The Jabalpur raids happened on 12th March, while the Indore raids happened on 18th March. So a total of 14 Ola Electric scooters were impounded from Jabalpur. No such models or scooters were picked up from Indore by the RTO officials of that city. Now, this is an expansion of the troubles that Ola Electric has seen in the past few days. Earlier today, we reported that about 26 Ola Electric stores were inspected in Mumbai and Pune. About 36 Ola Electric scooters were confiscated by the RTO officials. All of this is happening because all these stores, the 26 in Maharashtra and 6 in Madhya Pradesh so far, do not have a trade certificate to operate a vehicle showroom. That is mandated by law. All these, at least the Madhya Pradesh showrooms have been served a 3-day notice period to explain the situation, that why were they retailing scooters without a trade certificate. That's the update that we have for now.
Well, Prashant, firstly getting your view on Ola Electric, I guess the issues with the company keep on building. Any views on that counter?
I think yes, the pain will keep on continuing until unless the management clears it out on the media with respect to the whatever news flow is coming in the markets. that will create a lot of noise, and obviously the price will have such kind of a negative reaction. I'm still expecting the stock to deliver a negative return because of these kind of discrepancies in the market. 40-45 can be a range one can look at in the price right now.
Right. Well, CLSA has maintained outperform rating on Zee Entertainment with a target price of rupees 170. Harsh will join in with more from the report.
So stock of course doing well on the back of the fact that CLSA sees very, very strong upside. They believe that a lot of the downside has been overstretched and overbuilt. They believe that ad revenue growth of even a small number in FY26 and 27 could well push EBITDA and profit growth to a large extent. So they're expecting a 6% ad revenue growth on the conservative side would lead to a 22% EBITDA growth and a 33% PAT CAGR between FY25 and 27. This is huge for a company with what they're saying is a nil debt and 1700 crore cash in the balance sheet already. And therefore they are very positive with regard to this. They believe margin expansion, there's further upside for that. There's 9% margin expansion in Q3 FY25, a further 6% over the next couple of years, taking margins above the 22% mark. They still believe that TV is largely still alive. They believe that the Indians continue to watch TV in a larger proportion compared to OTT platforms, and Zee has a presence in both and therefore stands out in that sense. Ad spends have been at record lows, even pre-COVID lows. They believe that a little bit of a bounce back is warranted, and therefore they believe that absolutely inexpensive at this point. This one 65+% upside is what they see.
Well, thank you Harsh for all the details. Prashant, do you have same view what CLSA has when it comes to Zee?
Yes, I continue to be very bullish on the entertainment as a segment. Zee, two reasons. One on the valuation, again trading at a very rock bottom valuation, almost 10 to the forward P. Again, with respect to price to book value, again it is trading below its 1x. So I think these two reasons gives a very strong support for any long-term investors to tap these businesses. Second reason, again, as Harsh said, with respect to two different segments, one with respect to content manufacturing, second with respect to the OTT. I think this company has both segments into one company, and that can bring a lot of growth going forward. So overall, I think for me also a 25 to 30% growth for next 1 year can be expected.
Right. Another stock that remains in focus is Paytm. After 3 straight days of solid gains, we are seeing some kind of weakness on the stock, and that is largely because of the Jefferies note that has come in on this company, which says that there has been lower incentives when it comes to UPI. We have Harsh joining in with more details on the same.
At any point of time when payments revenue gets impacted, you will see that negative number with regard to profitability as well. Now, in terms of what Jefferies is saying, they've maintained their hold rating, 850 being the target price. Lower UPI incentive is the key negative here. They believe that merchant discount rates, which is MDR on UPI, is likely to potentially come or not come is really where the overhang is. Lower government incentives with regard to UPI means that your UPI incentives will fall and Paytm's incentives will fall proportionately. Adjusted EBITDA for FY25 may be 50% below their estimates, FY26-27 20 to 30% lower, PBT 15% lower. They'll watch out for the switch to MDR based charges for large merchants that may possibly lift profits if at all, and also improve predictability. So a possible upside, but currently negatives.
Right. Prashant, coming to you on Paytm, given the fact that there is a positive news and a negative news as well, the positive news being the banks are pushing for MDR to make a comeback, while on the negative side, the UPI incentives have been a bit lower than what the street was estimating. How are you looking at Paytm at this context, and any views on the valuations of the stock? Do you see that the valuations are quite attractive right now?
No, with respect to valuation, again, still very expensive. Call on the Paytm right now. See, first we should understand the industry of UPI. Again, it's very, very high competitive. I think every bank has their own UPI with respect to pushing their customers to use their own UPI and make their payments. Paytm being the largest, one among the lowest last 3 years, but again now they are losing a lot of market share as well. Second, again the cost of fund transferring and all, I think that is rising a lot. Margins will remain under pressure. I think in a medium term to long term, this stock may see some kind of pressure until unless there is a clear growth in terms of their strategies to get into any other businesses. So, but overall, from my side, I think it will be a neutral to negative view on the stock with respect to high competition.
Right. Another counter that remains in focus is the cable and the wire stocks. Now, as per UBS, this is sentimentally negative for the entire industry, and this is because Adani Enterprises, a wholly owned subsidiary, Kutch Copper, is planning to form a 50-50 JV joint venture with Pranitha Ventures Private Limited. Now, the joint venture's name will be Pranitha Eco Cables Limited, and it will engage in the business of marketing, manufacturing, distribution, buying and selling of metal products, cables and wires. Now, there are not much of detail that we currently have, but what we understand is that the investment in the share capital is just about 10 lakh at this moment. How this could increase also going forward, but as of now we do not have any details on that front. Separately, Kutch Copper also announced that it has joined the International Copper Association as its newest member. In fact, Kutch Copper will establish a copper smelter in Mundra, Gujarat for an investment of close to $1.2 billion, and this will enable the company for an annual production capacity of around 0.5 million tons in the first phase, and this facility will manufacture copper cathodes, rods and other byproducts also. So what we understand here is that the parent company will be manufacturer of copper, while the joint venture entity will be the manufacturer, marketing, distribution, buying and selling activity of metal products and cables and wires. And as per UBS, the competitive intensity in the cable and wire segment is expected to increase further, given that a second large serious player has entered the cable and wire space, that is Adani Enterprises. Now, the capex plan of Adani Enterprises are still not known, but it believes that this is sentimentally negative for the existing players like Havells, KEI Industries and Polycab.
Right. Well, Soumit, other two stocks which I'm going to talk about is, one is NCC, wherein, they've received orders of rupees 2,129 crore. Now, this is a contract from Andhra Pradesh Capital Region Development Authority, and the contract is for infrastructure construction in Amravati capital city. Now the work includes road, drains, water supply, sewage, utility, facts and plantation, and this construction needs to be completed in next 3 years. Now, if you read the last con call of NCC management, what they're saying is they're going to grow at least 20%, 20 to 25% of what they've been growing historically in the next 2 to 3 years. Prashant, just your view on NCC, are you tracking this stock, and considering the recent order win, how are you viewing this stock? Good opportunity to buy?
I think yes, very positive. I think March is a month where a lot of companies gets their order book into their books. So I think that would be the one reason why stock is sentimentally up. But the sector which is into is very need of the hour business. I think government is focused more on the irrigation, water building, and a lot of other environmental, electrical, mining segments. So overall, I think valuation wise very cheap at this point of time. Forward P is almost near 12. Price to book value is almost near 1 to 5%, 1.5x. So I think that would be the reason why the stock looks very attractive for me for a long-term investor.
Right, and other stock which is in focus, if we can pull up Dr. Agrawal's healthcare. The stock is up almost 4%. Now this is on the back of Motilal Oswal's note, wherein they've initiated coverage on the stock with a buy rating with a target price of 510 with an upside potential of 22%. Now what they're saying is that the company is a leading eye care franchisee with significant growth potential, and they plan to expand 40 to 50 centers annually, and the growth will be driven by increased surgical volumes and pharmacy sales. The eye care industry, if you see, is expected to grow at around 12 to 14% of CAGR when it comes from FY24 to 28. And Dr. Agrawal's hub and spoke model has increased patient accessibility, is what Motilal Oswal is saying in their note. And the strong historical and projected, so they are expecting a strong growth, which Dr. Agrawal has historically seen, and and going forward also they're expecting the same a run rate when it comes to revenue and profit growth. And the positive factors is actually supporting the company's valuation, is what Motilal Oswal is saying. Well, Prashant, are you tracking this stock, considering the industry itself, it's growing at around 12 to 14% of CAGR, and so your view when it comes to Dr. Agrawal's healthcare?
Very positive. I'm tracking this stock since the IPO has come. It's a leading chain in the eye hospital business. And obviously, eye is a very sensitive part of the body, and that needs very careful need. So I think this is growing very fast. I think the company is planning to expand more in the northern side also. It's currently very strong in the southern market. So with respect to capacity expansion, with respect to getting more franchises pan India, I think that would give a lot of good growth for the company. For a long-term investor, obviously, this is the one and only company which is focusing more on the eye care. So very good in terms of valuation, in terms of price to book value. Again, very comfortable, I think, with the growth what industry is doing and the growth what Agarwal has delivered from last 3 to 5 years. That will bring a lot of valuation comfort at this point of time. So overall, a bullish view on the stock.
Right. From Dr. Agarwal's to Zomato now, that's the stock that has been feeling the heat as growth has hit a roadblock and losses are widening. The stock has fallen nearly 26% from its record high after a heavy sell-off that hits the food delivery giant. Mahima is joining us with more details on what's dragging the stock and whether there's any scope for a turnaround going forward.
It's been a bumpy road for Zomato overall, and there are certain operational metrics where it is lacking, and of course profitability is a question mark right now because of the overall dark store addition that Zomato is trying to make. To start with, food delivery growth has gotten stagnant. If we check the Q3 FY24 YOY overall increase, that was at 27%, which has come down to 17% in Q3 FY25. The overall food delivery business fixed costs are also rising. Quick commerce fixed costs already are rising because of dark store addition. But even in food delivery space, the fixed cost has risen from around 3,600 crore in Q1 FY25 to around 4,200 crore in Q3. Moving on to the quick commerce space, overall customer retention in the quick commerce space, that is for Blinkit, is falling. As of December 22, it stood at around 100%, which has come down to 42% in December 24. In terms of quick commerce, the EBITDA, of course, is deteriorating, and this is, as I mentioned earlier, also on the back of dark store addition. It stood at overall a negative 3 crore number in Q1 FY25, which has gone to a negative 103 crore in Q3 FY25. Now, in terms of where Zomato is making its profit from, the question really is that whether it is from its core business or actually from treasury income. Because if we see the adjusted EBITDA for 9 months FY25 stood at around 1100 odd crores, treasury income stood at 700 odd crores, and from that PAT overall, including treasury income, stood at 488 crores. But if we remove that treasury income from the PAT number, there is a loss of up to 648 crores. So the profits are actually being made from the treasury income from Zomato as of now, and not from their food delivery or quick commerce business, or even the Hyperpure business for that matter. Moving on to losses, they've said that losses will continue in the next few quarters because dark store guidance for 2,000 stores has now been, the timeline has been pushed forward to 2025, which was earlier 2026. And overall, the elevated capex will also lead to losses from Q4 FY25. This is the management has come out and already said this. In terms of competitive intensity in quick commerce space, it's rising significantly. Discounts being offered by all of these players are on the rise, with highest of 21% by Flipkart, then followed by DMart of around 16%, then Zepto by around 12.3%. This is Zepto Saver. Then Swiggy and Big Basket stand at around 7.8% discounts, and Blinkit is last in line at 5.9% discount offering. So aggressive discounting policies adopted by competitors will also hamper growth for quick commerce where Zomato is concerned. Lastly, in terms of the quick delivery war, a lot of players have entered into the quick 10 minutes, 15 minutes delivery space. There's Zepto Cafe, there's Swiggy Bolt, which accounts for almost 9% of income for Swiggy right now. Ola has also started with its 10-minute delivery, and overall Zomato has also launched its 10-minute delivery, and Bistro also operates under the Blinkit banner. Lastly, in terms of valuations, where valuations were never cheap for Zomato, and they don't get cheaper even by 2026 estimates as per Bloomberg. Right now, the valuations are at around 528 times, which will go down to around 137 times estimated as per Bloomberg in 2026. So valuations never going to get cheap in the next 2 years for Zomato. Lastly, in terms of outlook, Blinkit gross order value growth over 100% for FY25 to 26 is what the management has guided. Overall, they remain confident for long-term growth going ahead, and margin should increase to 5% in the next quarters. But the question really is that when will this happen? They're also sitting on a cash of roughly 19,000 odd crores. And overall, to end this conversation with is that there are certain questions to be asked to Zomato management as to how the overall execution of additional dark stores will happen, how will competition pan out, and how will they be able to become a profitable business in the next few quarters and maintain their margins at 5%. So this is the overall view as to how things are faring out for Zomato.
Right. Well, Prashant, coming to you, do you think the weakness of quick commerce will continue to weigh on the share prices of Zomato?
Obviously, yes. Despite having high competition in the business and a lot of new players entering in the business to have a big market share, obviously the loser would be Zomato or Swiggy. That will have a reflection on the prices. With respect to valuation, again, obviously, rightly pointed with respect to high valuations because profitability is very much a blur in the near term. So obviously, with respect to capex they are doing and that no clarity on how they will be doing it, timeline, and also lot of questions to be answered here. But again, with respect to valuations, very much uncomfortable to have a very aggressive view on that. But industry is growing very fast. I think Zomato, Swiggy will continue to have that majority market share in the business despite having 3-4 new entrants in the market. But I am very positive on this stock for a long-term view, but short-term there will be a lot of pain coming in.
Pain when it comes to short term. Well, thank you so much, Prashant, for joining this conversation. Moving on, my colleague Agni Dev spoke to Kalpesh Mehta, who's founder of Tribeca Developer, which is the largest developer of Trump branded properties globally. He spoke about the company's new project in Pune, among other things. Listen in to the slides of that conversation.
So this is like you said, it's the first Trump office project in India and we're all quite excited about it. It's in Pune, in a neighborhood called Koregaon Park, which most of your viewers should know is one of the most prime addresses in Pune. It's a 4.5 acre land parcel on which we're building about 1.6 million square feet of office and retail. So it'll be 2 iconic towers of grade A luxury office building and a little bit of very high-end retail.
Right. So in an earlier interview, you had said that the project will see delivery in 4 years, so somewhere around 2029 or 2030.
Correct.
Is that still what you're guiding for?
Absolutely. Construction has already started. We will launch the project in June of this year, and delivery is expected in 2029.
So if I gather it correctly, the 2 towers are for separate purposes, right? One is for...
Correct. So yeah, great question. The reason we decided to do a Trump office project in India after having focused on residential is 2 primary reasons. In general, across the country, we find that there is a big gap of luxury office space, right? You've heard of grade A office buildings in India, but the global trend now is basically grade A luxury office buildings, which basically means the same level of amenities that you'd expect out of a 5-star hotel or out of a super luxury residential building, making those amenities available to the office tenants and their employees. It's a big trend globally, and it's about time that we caught up with it in India.
Well, these were the expansion plans when it comes to Tribeca. Well, this is all we have on this edition of Profit Top Trades. Stay tuned for NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. And quickly, the top movers at this hour, at this point, and top factors to look out for. Let's look at where the Nifty is around 1% plus higher. We're at the day's high, 1.2% up. And we look at the graph very quickly. Before that, heavyweights aid the Nifty 50. You're seeing HDFC, Reliance, as well as IT stocks aid the index. Talking about IT, FMCG, IT, both those indices have reversed and reversed fairly well after yesterday's losses. Both of these indices up 1% each. These were the only two sectoral losers in trade yesterday. We're seeing sharp reversals on both of those. All sectors trading in the green, so clear thumbs up there. Broader markets, while they're trading in the green, they're underperforming the index. So we're seeing a slightly less exuberant kind of move on both of those. 1.23% higher. All the cheer is on the Nifty. We're now clocking in 23,200 or nearing that point. So going to be an interesting point. Can we sustain that level will be the big question in this hour, last hour and a half of trade. 23,200 is what we're looking at on the Nifty. Let's look at the contributors, but before that, the heat map on the Nifty 50. Thereafter, the contributors. The heat map shows that it's a very solid breadth on the index, 2% plus on at least 10 counters that we're seeing, and 1% plus on nearly 30 counters that we're seeing at this point. So very good breadth, but Bharti is the one that's really standing out, nearly 4% higher. Titan's doing well. Bajaj Auto and the entire auto pack is also doing very, very well for itself. Auto and metals are the other two pockets outside of IT as well as FMCG, which are doing very well in trade. All four of those sectoral indices up 1% plus each. Hero Moto also up too. So you'll see some bit of FMCG, some flavor of auto in that basket of the first 10 stocks or the top 10 gainers. What's not doing well in IndusInd, muted move. Bajaj Finance also fairly muted in trade today. Asian Paints, Trent and Ultratech, no real losers to talk about. Let's look at the contributors as well. Bharti likely one of those top contributors, but obviously the two heavyweights leading the pack along with Bharti, and then comes the entire IT pack, which is doing fairly well in trade today. Bajaj Finance, IndusInd, Ultratech, Trent, just about 7 negative points in cumulative. So really no drag also on the index, which is why we're seeing the kind of move on the Nifty. Let's look at the advanced decline, because the story of this week has been that for a predominant part of the week, you've seen the breadth be good. Now the breadth not as good as it has been yesterday and day before, and this is indicative of the fact that broader markets are underperforming the index. So the index is doing very, very well, but broader markets not so much. 0.6% up on the Nifty mid cap, the Nifty small cap also up just about 0.9 odd percent. So broadly that's the texture. Let's just quickly point out sectoral indices, and within sectors as well. We've spoken about 3 to 4 major ones: IT, auto, FMCG, as well as metals. Those 4 sort of heavyweights are in some form or shape doing very well, and that's aiding the index up. What's underperforming is the Bank Nifty and the Fin Nifty. Infra is also standing out and doing fairly well for itself. No index trading in the red. PSU and Realty, I want to quickly call those out because those two have done very well through the week. Today, slightly taking a bit of a backseat actually. May not be underperforming in a major fashion, but still taking a bit of a backseat in trade today. 1% up on the Realty Index and 0.5% on the Nifty PSU Bank. But nothing to complain about, Neeraj. There are plenty of buzzers in today's market, but it's all green at this point in terms of the index as a whole.
Yeah, green in terms of the index as a whole. There are some stocks, of course, which have corrected, and Harsh marked all of them. Just before I go to Rajesh Palve, I just want to mark the Adani foray impact on Polycab, on KEI Industries, on RR Kabel, because that set of stock, cable and wire stocks, have looked very, very weak in the session today. Without much ado, let's quickly get into Rajesh Palve, SVP Technical and Derivatives Research at Axis Securities. Rajesh, great having you. Thanks so much for joining in. Good afternoon. How are you seeing the texture? Now it's what, 3 or 4 days that we've had a good run. Are we 23,200 here already? Are we set for more?
Good afternoon, Neeraj. Good afternoon, everyone. So yes, we believe the kind of recovery we have witnessed in the broader market, it gives us confidence that yes, there could be still further room to continue furthermore upside from the current level also. 23,200, 23,400 is the next level. So almost we are at 23,200. So I think another 200 point rally can be there in Nifty next couple of days. As put-based concentration is already moved higher. Now the major put writers are shifted their position at 23,000 level. So that level may act as a good support area in any kind of minor dip in the near-term perspective. Even on the Bank Nifty also, comfortably now trading above 50,000 mark. So I think that's the major call concentration area is already crossed by the Bank Nifty also. And we have witnessed a couple of large cap private sector bank has also shown good buying interest, be it like HDFC Bank, Kotak Bank and other banks are also ICICI Bank are also supporting this up move. So I think Bank Nifty is also contributing to this rally, and possible rally for Bank Nifty may extend to 50,400 to 500 at this juncture. 48,800 is 49,800 is the important support area for Bank Nifty, and we believe yes, one should trail their stop losses for Nifty as well as for the Bank Nifty to ride this rally, and we may see the another 200 point rally in the next couple of days for Nifty.
So you would go long, I presume, Rajesh, currently. You see another 200 points, you think risk reward is in favor of going long?
Yeah. So risk reward is almost 1:1 because our stop losses is placed at to 23,000 and we are projecting target of 23,400.
And Rajesh, keen to understand what's happening in IT, because that's the other pack which is abuzz. We spoke about cables and wires. I know we've not taken a view from you on that. So maybe cables and wires, IT, can you give your quick view as to what direction you see this headed in, and give us an understanding of how you view cables and wires at this point, KEI, Polycab and the like?
Well, I think after this announcement from the Adani, I think the major impact we have witnessed in most of these cable stocks. Earlier, we have seen the same kind of impact done because of Birla has announced the same kind of they are also pouring into this cable in business. So I think KEI has broken its previous support area. Swing low is already broken. So if it remains below to 2950 level, so we may see further more cut in KI, and I think short build up is already there in the system. So which is already keeping the pressure on the stock. So KI may correct further towards 2650, 2600. That's the next level for KI industry on the downside. If it's remain below to 2950 again. Polycab is also witness supply pressure in today's session, and almost stock corrected from its 20-day moving average. So I think for Polycab on the higher side, the important supply zone is placed at 5200. Until the stock not crosses those level, I think there could be again maybe consolidation with slightly bearish move we can expect in Polycab. Also on the downside, the critical support is placed at 4950. If it's break, then possible down move can extend to 4800, even 4750 level also.
Okay, and Rajesh, your picks for this afternoon?
So there are two picks where we are focusing. One is from the OMC space, that is BPCL. BPCL is looking strong. Stock now managed to cross its 50-day moving average in this pullback. The whole pack is also showing traction in terms of buying. So most of the OMC stocks are doing good. We expect a target towards 284 for BPCL. One can buy with stop loss of 267. The second stock that we like is from telecom, that is Tata Communication is looking attractive. There was underperformance, but since last couple of weeks, stock has recovered quite well, and now stock is comfortably holding about 20-day, 50-day moving average. In today's session, there is a long built up in the data. So we expect that Tata Communication can continue furthermore recovery from here onwards, projecting target towards 1665. One can buy with stop loss of 1580.
Okay. Rajesh, stay on, because I'm sure you would be delighted to listen to our next guest as well. He is somebody, for the uninitiated, he is somebody who famously foresaw the 2008 market crash as well. And in his recent interactions while he was in India for some private conferences, he's asked investors to double down on Indian equities. I'm talking about Jim Walker, who is chief economist at Alethea Capital, joining us right now on the show. Mr. Walker, thank you so much for taking the time out. This is Neeraj here. It's been a while, but good talking to you.
Thank you. Yes, good to speak to you, Neeraj.
And I hope I got the name correct. Is it Alethea Capital?
Yeah, that's good. I'm never very sure how to pronounce it either, so it's all the same to me.
Okay, fair call. Now, maybe we are talking to you a few days late than desired, because at a point of time when there was peak fear in Indian markets, you came out and said that this is the right time to buy. I would just like to take the clock back 15 days or 20 days, if you will, and ask you, what made you at that point of time think that India was a great market to buy into?
Well, as much as anything, I had visited people in India and listened to the stories about what was happening in the economy, what was happening with policy. And it really just confirmed my own view that policy has never been looking better in India in terms of the fiscal responsibility that's going on, good monetary policy, very well managed, very stable. And then when we look at our own metrics, and this is really critical for us, we try to follow the profit cycle, the credit cycle, the money cycle in the various countries that we look at. And in India, the best profit cycle in Asia is unfolding at the moment. And that really tells us that the springboard for a private sector capital investment cycle is about to really be hit. So all of the omens are really good for India just now. And to be quite honest, I suppose the pullback that happened from September last year was maybe just a bit of taking the overvaluation, if you like, the enthusiasm out of the market. But all of the good fundamentals were left there. And given how much India is a domestic economy in a world where the external economies are going to be much more badly hit, I think this is a great time to be buying India. Now, 15 days is nothing. To be quite honest, this is a call for the next 3, 5, 10 years. So we'll still be telling people to buy India in another 15 days, in another 50, and in another 365.
Wow. Okay. Mr. Walker, I heard you mention that some bit of it also had to do with the regulatory moves that were done. Now, what was done in the budget was one, but the central bank in India has been on a mission of sorts, easing liquidity, cutting rates, giving fairly dovish remarks. Is that one key reason which gives confidence to an international voice like you that the government and the powers to be are doing all that takes to get the markets and the economy in order?
Yes, but they're not doing too much, and that's really the key here.
Okay.
This is, as I say, the best stable outlook for Indian macroeconomic policy that I've seen in 35 years. And I've been covering India for 35 years. So I think from a perspective of stability and responsibility, and even though the central bank has been talking a bit more dovish in the last few weeks, it hasn't really been very dovish, and it's certainly not too exuberant in its monetary policy. If anything, I would say it's still slightly cautious. And there's plenty of scope for interest rate cuts to come. Our view is that there's probably another 75 to 100 basis point cuts coming this year. So they're, I think, hitting exactly the right notes of being encouraging for the markets, encouraging for the economy, but not too exuberant in their support for economic activity. The next big step is really for the government to do more on easing the costs of doing business in India. That's going to be the great enlivener of the next few years.
Okay, Jim, this is Harsh also joining in. Want your quick take with regard to what within India are you looking at as an opportunity? What pockets are you liking? And of course, names, if any, illustrative on how you're thinking of whatever it is that you're liking and buying.
Hi, Harsh. Yeah, I mean, I don't follow stocks. It would very much be unusual for me to be recommending stocks, but where we are in the private investment cycle is very early on, and therefore the kind of companies that I would be looking to be exposed to in India are certainly in the capital goods sectors, and indeed in the consumer staples, the durables. This is the early cycle for me in the Indian economy. We've had a very strong investment cycle from the public sector over the last few years. The private sector is now going to play the role of the engine of growth for the economy. So it's early stages capital goods and the consumer side that appeals to me most at the moment. And then maybe within the next year or so, I would be looking at financials as well, because the credit cycle will kick in on the back of that.
And Jim, if I were to just zoom out, because difficult to avoid the global picture at this point, what do you make of what the of all the comments with regard to the US FOMC, which has been held through this week? What do you think, what do you make of it? Because they're talking about upside risk to inflation, downside risk to growth, and yet they've not increased or reduced the number of rate cuts that they are anticipating. How should one view the global environment, and what therefore makes India stand out in your view?
Well, you know, this is one of the key things at the moment. The Fed has stood pat this week, you're quite right. But that was what everybody was expecting them to do, and they never disappoint the market, as it were, which I think is a really stupid thing for a central bank to take as their policy. But the outlook for the US economy is very difficult to gauge at the moment. As we all know, Mr. Trump loves to be the great disruptor. He loves to be unpredictable. He loves to say one thing today and then maybe change his mind tomorrow, and everybody pays attention and everybody's confused. So the one certainty that comes from that kind of behaviour is that uncertainty increases. And when uncertainty increases in any economy, the US, other parts of the world, investment goes down. Now, that's a really dangerous position for anybody to be in at the moment, and it's one of the reasons that the central bank hasn't changed its interest rate policy, because that uncertainty and the prospect of a weakening investment environment in the US is why they're standing pat. Because if they were looking at their inflation numbers just now, they would have raised interest rates yesterday. Inflation has actually been accelerating in certain metrics. If you look at the year-on-year, we're at 3%, but 6-month annualized, 3.6%, 3-month annualized, 4.5%. And it's really no surprise that you're seeing things like the University of Michigan expectations, or inflation expectation index for the next year. Nobody talks about this report anymore. And I'm not surprised that the markets don't focus on it, because inflation expectations in the US are at 4.9%. This is much higher than India. So 5% basically inflation expectations in the US. That's the kind of thing that would usually have central banks raising interest rates. But because of this uncertainty in the investment outlook, they're standing pat. And of course, for the rest of the world, it's the same thing. The more uncertainty goes up, the less investment takes place. But the great news, as I say, for India, and one of the reasons that we would be much more focused in India and China than any other economies in Asia at the moment, is the large domestic economy kicking in and, if you like, cushioning the blow of the external sector. So I'm really quite enthused about India and China in terms of the domestic contribution to economic activity.
Yeah, I mean, for China to do QE, I mean, that's quite something. But Mr. Walker, that was going to be my next question. The last few months, while the domestic flows have helped China, the global flows have moved into that market. And those markets, in terms of valuations too, have moved higher from being single digits to early double digits right now. Traditionally been a low valued market per se. Somebody was making this point that because last year, if a whole host of global fund managers had told their constitutions and boards that China was an untouchable market, it's very difficult to go and do a volte-face and just say, okay, we want to put money into China. How do you foresee flows into China now that it's moved up a bit, and India now that it's corrected a bit for the next 9 months?
Yes, this is a very difficult balance, because the big issue for fund managers in the global markets is that they're hugely underweight China. Now, my view is that they're not overweight India either, by the way. I think they've tended to have a bit more in India over the course of the last few years. But when we look at the actual numbers, in terms of macroeconomic numbers, the flows of portfolio investment into India have really been pretty moderate. They've been higher than China over the last 10 years in aggregate, but they've been pretty moderate. And I don't think that foreign investors are overexposed to India in any way, but they were certainly underexposed to China. And now this becomes, as you quite rightly say, a real difficult question for each quarterly meeting, if you like, of the fund management asset allocation teams and how they explain to boards and trustees and investors, oh, we told you that China was a basket case and completely off the map. Now we think we should have something in it. They're going to be forced to put something in it, Niraj, just because China is still a big weighting in the global emerging market indices. So the money will follow the activity and the fact that China is outperforming. But I don't expect to see a massive rush for exposure to China. I think it will certainly take at least another 6 months of outperformance there before fund managers generally will be convinced that that's the right thing to do. Whereas I think there's actually much more of an openness to putting money to work in India now that there's been a market correction.
Got it. Okay. So, Mr. Walker, then you are constructive India. Did I hear you say that it's a great time to invest for the next 3 to 10 years in India? You taking that longer view, would you believe it to be one of the key outperforming markets in the EM/Asia Pacific region?
Oh, absolutely. The best performing economy, and undoubtedly on the back of that, will be one of the best performing markets. I can't see any other country except perhaps Vietnam. And Vietnam isn't even in the emerging market index, but people sometimes take off index bets. But apart from Vietnam, there's no country in the region looks, from economic growth terms, from economic stability terms, anywhere near as good as India. And that's going to feed into corporate profitability, and it'll feed into confidence eventually, both domestically and internationally. So this is I think, just one of the best stories in the world.
Jim, great getting a perspective. Trying to also understand what role will metals as well as crude play in all of this. How do you view both of those sectors, and both of them have such a large role to play in the India story, metals on the infra side and crude, of course, with regard to the current account deficit?
Yeah, we've been a bit more focused on metals than we have been on oil. Oil is such, I think it goes back to my time as an oil analyst at the Royal Bank of Scotland in the 1980s, when, if I can remember rightly, for all the years that I was an analyst, I couldn't even get the direction of the oil price right, never mind the amount that it was going to change in any 1 year. There are so many factors in oil that it's so difficult to call, especially given the geopolitics just now. But metals, and in particular things like copper, and of course some of the rarer metals that go into the green economy, are bound to go much, much higher over the course of the next few years in terms of price, purely because the demand is going to outstrip any possibility of supply. And this is particularly true in electric vehicles, in terms of the power station requirements of copper and the cabling, etc., etc. That's going to take place as a result of this green energy transition. All of that is going to force copper much higher. Copper's one of our global strategy longs. Other metals, of course, will benefit as well. So we should be expecting significantly higher prices there. Although the metal that I expect to have the most outperformance is gold. And that's been one of our global strategy calls as well. It doesn't sound like a very clever call at the moment because, of course, it's gone up so much, but it's been there for a while, so we're doing okay. But I think it's got a lot further to go as well, partly, again, to do with the politics, but much, much more to do with the economics of the advanced economies, where I'm afraid fiscal expenditure has been so out of control that the likelihood is that it will continue out of control. And that means much lower paper currency valuations and much higher valuations for precious metals, specifically gold.
And Jim, so if I were to break this down, India, a bit of an overweight, gold surely also sounding overweight. What about US, both tech stocks as well as otherwise, with the broader S&P? How do you view that in terms of valuations? And also given the fact that the US 10-year is at roughly 4.3, 4.4, do you expect that to be the larger outperformer versus US market? So just trying to get your view there.
Yeah, that's a hard call, Harsh, on the US 10-year, because of course it's this balance of recession against inflation. And although we think there's a recession coming, I'm afraid I think inflation is going to stay high. So I suppose you might be putting me in the stagflationary camp, and that makes the 10-year Treasury call very, very difficult. But as regards the broader market in the US, here's where I really have a difficulty with the valuations that stand just now in the United States. We've gone through, and Neeraj mentioned right at the start that we had foreseen the 2008 financial crisis. That was actually just analysis of what had been happening in the investment cycle in the US. But what we didn't foresee was the willingness of central banks, and in particular the US central bank, to keep interest rates at zero for so much of the last 15 years, to the point where effectively a generation of traders, a generation of financial market experts, fund managers, stockbrokers have become absolutely convinced that interest rates will go back towards that zero level, maybe 1%, maybe 2%. That has never been our view since the Fed started raising interest rates in this cycle. We have said that they would get to 6%, they didn't quite get there, and they'll never go below 3% again. And I don't think the US equity markets are anywhere near understanding that the range for interest rates is now between 3 and significantly higher. It could go up above 6, if inflation really takes off. But 3, I think, is the lower bound. And at the moment, I think the market valuations in the United States do not reflect anything like that going forward. The interest rates are going to be above 3 for the next 25 years. So I think they're still expensive. When I come to things like AI, which of course is going to have tremendous implications for everybody's lives in terms of the way that it'll impact on productivity, etc., etc. But for all the companies that are spending huge amounts of money on AI, I think they're just absolutely nuts, because AI is going to become as available as air. And we know how much we pay for air. It's a very valuable commodity, but it's not an economic good, and it doesn't have any value, I'm afraid, in economic terms. That's going to be a big shock to these guys that are spending 50, 60, 70 billion dollars a year on AI investment.
That will be interesting to see as well. But yes, AI is certainly the talk of town right now. Jim Walker, before we thank you, we've taken enough of your time, but before we thank you, I just wanted to reconfirm something that you said. You did mention that India will be the best performing economy and the best performing market on the back of that economic performance over the next 5-10 years. So I heard that correct. But I also, I think I also heard you say that this is the best outlook for macroeconomic stability that you've seen in India, and you've covered India for the last 35 years. Did I get that correct too?
You got both of them absolutely correct, Neeraj. Okay,
that's good to know, Mr. Walker, because the Indian markets have seen a reasonable correction, and your words will be music to the ears and will certainly soothe some frayed nerves. So thank you so much for this conversation today.
Pleasure. Nice to see you again.
Yep, likewise, sir. And that's a very, very important global voice. Jim Walker. Music to the ears, Harsh.
Yeah, absolutely. And with so much conviction, when we quizzed him about China, US, within all of this, India really stood out in terms of commentary. So evidently clear.
Yeah.
I'm not sure how much of the bus has been missed, but yeah.
Yeah, if you heard a lot about the macro view. Now we dive straight into the micro, and we would love to get in Rajesh Palvia's comments on a bunch of things, but it's 2:30. So before we just get in the final comment from Rajesh Palvia, we have to do this, because I want Rajesh to comment on some of the things that Soumit will speak about on our segment Heard on the Street, because a lot of people tune in to try and know what is it that Somit is picking up from the dealing rooms. And Somit, what do you have today?
Well, before we get into the Heard on Street, we should actually mark EU Small Finance Bank, because we were the first one to get this clarification, and the stock was actually down 3% based on these rumors that the CFO might resign, and the stock is now up around 1% in trade. So clear recovery that we have seen post the clarification that came in, which clearly said that these are baseless rumors and the CFO is not resigning from EU Small Finance Bank. Well, apart from that, what we are hearing on street, first let's on Godfrey Phillips, and what we are understanding is that we are seeing some buying action on this counter after a very long time on the PMS desk. So keep an eye out for this counter, Godfrey Phillips. It's up around 1% in trade today. The other one is on AB Real Estate and ITC. Now, what we are picking up from our dealers is that there's a potential corporate development that is expected, and that is around the fact that AB Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but a bigger from AB Real Estate's perspective currently. Third on the list is Vedanta. Now what I understand is that large HNIs have been accumulating discounters. They're expecting the demerger's record date to be announced anytime soon, and that's the main reason behind this accumulation that we are seeing on the HNI desk when it comes to Vedanta. Then on the list is Punjab and Sindh Bank. We don't often talk about this, but what I'm picking up from the street is the fact that the bank might launch its QIP anytime by next week, and it could be around 2,000 odd crore rupees. That is what they are aiming to raise from the market. This QIP could be launched anytime till next week. And lastly, we have Welspun Corp. Now that stock has hit a live fight. It's up around 8%. What dealers are indicating is that there's a potential big order announcement that could come in for Welspun Corp, and that might be from US, so that their US subsidiary might win this big order. And on the back of that news, we are seeing this kind of a movement when it comes to Welspun Corp.
What a serious move. Thanks a lot for that, Somit. So, well, a lot of things out there. Rajesh, thank you for being patient with us. I would love to take some of the cues that Somit mentioned with you as well. EU Small Finance Bank, Rajesh, to start off with, the intraday recovery that we're seeing, would you believe it's worth trading?
So this is the third day of recovery in the stock, and stock is making higher high-low formation since last couple of days, which clearly suggests that there is a buying interest in the stock, despite a dip during the day. Again, we have witnessed a strong buying action, and almost stock has recovered all its losses of intraday. Looking at the near-term structure, stock is now negotiating with its 20-day moving average, which is placed at around 530-35 zone. So I think once stock crosses over 535, yes, there is a possibility that we may see furthermore up move towards 555 to 560 zone for the stock. So at this juncture, yes, one can buy with stop loss of 519.
And your quick take with regard to a Welspun Corp, Rajesh, because that's the other one flying away in trade.
So clear outperforming stock, and stock is now in uncharted territory. The way stock has shown strength in this volatile market, I think we may see furthermore, upward momentum in this stock. Though stock has already moved up around 9%. So if you get any, pullback towards 850, 840 zone, again, it would be the level where one can buy. Possible target, looking at the chart pattern, a possible target on the higher side 950 to 980 we may see in the near term to short term perspective for the stock.
Okay, thanks for that, Rajesh. We'll let you go on that note. Thanks so much for joining us, giving us all of those views and being super patient. You know what, we're going to slip into a very, very short break. On the other side, we're going to have a conversation with Mahindra Live Spaces. Stay tuned for that, and of course we'll talk stock specific as well. Plenty of buzzers in trade. I want to quickly highlight a few before we get into break, and we'll discuss some of those. Airtel, Bharat Forge is flying away. We're going to get you reasons why that one is so. GPT Infra, AstraZeneca, Tarsans, MCX, just some of the big buzzers in trade. On the downside, KEA and Polycab. We'll take a technical check on those as well. Stay tuned. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock. Well, it's been a very interesting chat on India Market Close today, trying to get the global picture, why India is looking bright. We've gone now micro, and let's talk about certain specific stocks. Bharat Forge zooming in trade. Cabinet Committee approves buying of ATAG systems worth 7,000 crore. Puneet joins us with more on this one. Puneet, what does it mean? Because 5% higher on Bharat Forge.
Well, Harsh, this particular order has the potential to literally re-rate Bharat Forge from this angle, because it's been a long time coming for the ATAGS orders to be approved by the Cabinet Committee. It's finally come through. The Indian Army had agreed to procure 307 ATAGS system guns back in 2023, and since then it was anticipated that this order will come, and Bharat Forge is the only listed player in India to have the design as well as the manufacturing capability for this particular order. Now, as you rightly said, the artillery gun system or ATAGS worth 7,000 crore order has been approved, and Bharat Forge will be the biggest beneficiary. Apart from that, we've seen that it is expected to enhance delivery systems going forward as well for the Indian Army specifically, and 65% of the components will be locally sourced. That's what was some of the key aspect of this particular order. Now, in DRDO had specifically shared the technological and manufacturing capability of the howitzer gun, especially this one with Tata Advanced System, which is a private company, as well as Bharat Forge. And this was expected, ATAC system was born back in 2013, but since then it's been a very slow approval process across this chain. Finally, in Q3 of FY25, the conference call, Bharat Forge had mentioned that the company is expecting an acceleration in its order book starting March itself, and this is a confirmation of that. We've not received any kind of exchange filing from the company yet, but should be around the corner as well. And they also mentioned that it's a 3-step process. First is, of course, getting this particular approval. The second is the first of production, which will be manufacturing of the process. And the third one will be the series delivery, which will start in the next 15 to 18 months. So I think more so the commentary in Q4 around the ATAC order will be something to watch out for. But it's a huge order for Bharat Forge, and specifically the Q4 commentary around this will be the center of attention going forward as well.
Thank you so much for that perspective, Puneet. Two guests joining us this afternoon, getting perspective from both of them on this one. Kush Bora, Vineet Bulinchkar. Kush, of course, founder kushbora.com. Vineet Bulinchkar, head of research at Ventura Securities. Kush, let me start off with you. This 5% move on Bharat Forge looking very interesting. But what's your sense with regard to charts?
Hi, Harsh. Good afternoon.
Hi. Good afternoon.
Well, good move. Definitely a good move. The stock has actually retraced from very deep oversold territory, 78% retracement from the rally that started somewhere early 2023. So taking support from those levels and rebounding. Off late, the volumes for the last 2 sessions, including today, have actually been staggering, practically double of what it has been over the last 20 sessions or so. So I think this is a good move. However, now around the 1200 mark, which is also technically a resistance level, and also typically you do see stocks resisting around these round figure marks because of the call congestion, that might act up. So if you've got a position, not a bad idea to hold, but any fresh position I would consider above the 1230 level, where there is a congestion and the supply that is about to come could well get exhausted. So fresh positions above 1230, but you have an existing position, continue to hold them with a stop loss around the 1175 mark. There is good volume action in this one.
Okay, fair call. Vineet, what do you feel about this recovery? I mean, do you reckon this will sustain? And will the players be different, or the beaten down stocks make a comeback?
So it's going to be a mix of both. And actually what is flying are the sectors which are going to be global dominating factors. One is the defense, and anything to do with the word DEF is going to be off the paddocks very quickly. And Bharat Forge is, been digesting that order coming through for a very long time, and it's coming through means that there will be more orders to follow after that. So very positive for Bharat Forge. The correction has kind of ameliorated the valuation concerns, and these are good entry points right now.
Okay, good entry points for select pockets. Harsh, that is very interesting. Now, well, since we spoke about defense, before we talk about other ideas, can I get an Anushi on the defense names? Because I think that's the bucket of stocks that, as the charts are showing, and as Vineet said as well, that with all that's happening in Europe and otherwise too, maybe defense right on the ball. Now, Anushi, not necessarily all the days have been good, but today has been very good.
Right, and this is on the back of a couple of order wins that we are looking at. Not just defense, we have something like infra also in focus, which is including the likes of GPT Infra. So if you look at GPT Infra, it has emerged as the lowest bidder. This is for a railway project worth about 481 crore. If you look at the expected order inflow target, now they are on its way to achieve this, which is at the size of 2,000 crores. So with this order, it roughly stands about 1,400 crore or so. In December 24, the order inflow stood at about 1,040 crore with an order book value of around 3,332 crore. But coming back to defense, where the focus has been over the day, Garden Reach is one. Yesterday, the stock had hit a upper circuit as well. It has signed a MOU with Nagaland for supply of steel bridges, and this is for supply of 8 sets of double lane modular steel bridges that we are looking at. This is a first ever MOU with Garden Reach and a northeastern state also that we are looking at. Just want to point out Garden Reach order book as well, which stands at 23,877 crore. Along with that, Paras Defense is in focus, and this is with a significant order win that the company has come out with a size of 142 crore, and this is from DRDO that they have received for laser solar module and beam control system on mobile platform. Again, this is a part of high power laser system for anti-drone and anti-missile application, with the order to be executed in the next 2-year period itself. If you look at the current order book, that stands at the size of 900 crore. So a couple of these order wins have been in focus. In fact, with Paras Defense, we had a chat earlier as well, wherein the management talked more about this order win and also the outlook forward for the company. So do listen into that as well.
This is the stream that contributes largely to the profitability of our company. Said that, defense engineering is also catching up, and defense engineering today, they both are 50-50 if you see the last quarter which went by. And in the future, we would want to inch the optical systems a little bit higher than defense engineering for the profitability perspective. We would not only sustain the profitability that we have been having for these many years, but we are hopeful that we will be able to better this profitability along with the revenues.
Vineet, curious to know, are you also positive with regard to the larger defense pack? And if so, how are you nitpicking?
So, I think one of the most expensive stocks, but with the maximum delta that is there, is going to be PTC India. So, it has got exposure to virtually all the sub-segments of defense, be it aeronautics, missiles, artillery, guns, small arms, and they supply the basic raw material for tungsten, and they also have a massive contribution in each of the missiles that are played out. So we think that this company should get a lot of multiplier effect in its revenue and profits as the numbers start flowing in, because the profitability is very high, and it's close to 60-70%, and it's not reflected in the numbers because this company is just on the edge of that growth. So we think that this company will do very well. It is expensive on a valuation perspective, but keeping in mind the potential that is there, this company can do really well. Other stocks that we like is Zen Technologies for the drone business, and we also like Solar Industries for the explosives. So I think these three stocks are what we think will do extremely well going ahead. While the other businesses have got a lot of orders, if you look at HAL, just today's news where they've started off another line, which will increase their capacity significantly, makes do for this stock to touch around 45 to 4,800 going ahead.
Very interesting. So, well, 3-4 names in defense, which seem to look very, very good at this point. So those are some names for you. But it's time to switch focus. We have Amit Kumar Sinha, MD and CEO at Mahindra Life Spaces, to talk to us about them partnering for a redevelopment project in Mahalakshmi, GDV potential of 1,650 crore, and they've also executed a lease deed with Nihon Packerizing India for 18.92 acres of land in Tamil Nadu. So those are two reasons why this one looks interesting. But Amit, let me come to you with regard to the redevelopment project in Mumbai first. Just talk us through it. How quickly do you execute? How quickly do you launch? What are the timelines looking like?
So thanks for having me. Mahalakshmi is an exciting project. It's in a way Ghar Wapsi or homecoming for us. We used to play in the past in the South Bombay, and this is our first project in a long time to come back to a market which is quite premium market. Most of our peers and competitors actually have done really well in that market. So we pursued that market seriously and found a nice project, and with a partner who will be a great combination. So this project is very close to some of the projects like Vivaria, which is a flagship project from Raheja. It's going to be very well located, and we are going to be launching this project formally over the next 9 months. We have got an aggressive timeline with our partner. We feel that we'll be able to achieve that. 1,650 crores is a decent size project for us with premium construction, premium clubhouse, nice 3 and 4 BHK apartment. That's how we're thinking about this project. So 9 months is our target, but given the approval, sometime take a little bit more time or less time, we'll keep you updated.
Got it. Understood. What about the guidance for FY25? How far away are we from clocking in that guidance? You've targeted a 12,000 crore GDV with the Bhandop land parcel and achieved 14,000 crore GDV in 9-month FY25. So talk us through what and how it's really stacking up.
So F25, in the past, compared to past, let me give you 2 data points. F20, our GDV addition was 1,000 crore for the whole year. F24, which was my first year, partial, we achieved, we got GDV addition of 4,400 crore. And this year we have crossed almost 18,000 crores. So we are really scaling up well in terms of our GDV addition. Now the big challenge or task for us is to bring all the GDV addition into launches. And that's going to be a key focus for us going forward in the F26 and beyond. F25 from a GDV addition and other raw material for making residential business successful is going to be a very solid year. Yeah, let me just stop at that.
Great. Mr. Sinha, Neeraj here. Good afternoon. Just wondering, the conversations with a lot of people who look at the space seem to believe that we are probably in the period from where the demand-supply mismatch doesn't quite stay per se. If anything, real estate supply might increase and there might be a pressure on prices. Do you second that?
Yeah, so I think it's a cyclical business. I think, and you'll always have great demand, and then looking at the demand, a lot of inventory will come in, which will increase the supply, and there will be a period when the demand will slow down, and there will be excess supply. So it's a cyclical industry. Typically, a upcycle lasts for 5 to 7 years. So we have seen 4 years of healthy upcycle, and upcycle means you have inventory overhang coming down. That means more demand than supply. And the pricing also gets a big uptick. And the last 4 years have been amazing from that point of view. And many of our peers, including ourselves, have benefited from it. The next few years are going to be a balanced growth phase, where the price increase is not going to be what we have seen in the last few years. The volume growth is going to be healthy. It will be driven by end consumers. Some market which are investor driven will see slowdown. But as we think about Mahindra Lifespaces and how we play in the market, we are playing in what we call mid-premium and premium market. We are not playing in affordable anymore with new launches. We have a lot of commitment that we are fulfilling. And the market that has a lot of cyclicality or swings is the luxury market. By volume, it's only less than 1%, but by value, it's 10% of the market. Our sweet spot is mid-premium and premium, which is 49%, 50% of the market, but by value, that's like 67%, 70% of the market. And if you provide right value proposition, right ticket size, right size of apartment, right project amenity at the great locations, we think that we'll have enough buyers for our kind of product and value proposition that we provide. So while there might be slowdown in pockets in terms of pricing and in terms of exuberant volume growth, but we'll still have a lot of takers for our kind of product.
And Amit, you spoke about how the cycle typically plays out in 7 years. We're in year 4 at this point. Do you believe that this time around it will be different? Is that the sense you're getting, or do you believe that we're on course and maybe in the next 2 to 3 years we will see a bit of a down cycle?
So, yes and no. I would say that each market is very different. So Bombay, I looked at last 20 year of data, and I found that Bombay, which is the largest market, residential market from India perspective, there is continued volume growth in the leanest patch. Let's say 2014 to 2020 or 19, excluding the COVID year, the price increase was 2% CAGR, compounded annual growth rate. So the volumes were steady, but the pricing came down significantly. But if you look at tier 2 or tier 3 developers, they felt the pinch a lot more. So over the last few years, we have seen the market getting more and more organized. Customers love branded players. So there is a shift that's happening from a unbranded, less branded players to trusted branded players. And even though market slows down, the benefit of that, at least some of us actually enjoy that. So we expect that same thing to continue even when the next 2-3 years, the market may go up and down a little bit. From a volume perspective, we felt it will be healthy. Pricing point of view, it will slow down. The pricing growth will slow down, but the healthy, it will not have a correction. But few markets will be quite different. But branded players will continue to benefit in our opinion.
Okay, thank you so much, Mr. Sinha, for coming in, speaking with us, and giving us that perspective. Mahindra Life Spaces, now, well, nothing much on the stock, but they've crossed 18,000 crore in terms of GDV for the year when the guidance was just 14,000. So very, very positive in that sense. Vineet, positive with regard to real estate, and if so, how would you play real estate?
So, we are avoiding few pockets, that is Pune, micro markets of Pune, Bangalore, and Gurugram. The reason is that we expect a significant backlash from the US economy in terms of jobs on the IT front and back office. So these are not the markets to be in. Mumbai will be a very normal market because it doesn't have too much exposure there. But I think the lower and mid segments are going to do well. And, the corporate names like Godrej, Mahindra, which evoke a lot of trust, will be able to withstand this much better than the other real estate players. As he pointed out that, it's going to be a market of volume and not a price growth. So, when you're buying something and you have a good pricing price point, that is where the flood of money will go. And it will be supported by the brand names. So we think that Mahindra is very well suited for these markets.
Okay, so Mahindra well suited for the way in which things are going to evolve in the real estate space. Kush Bora, want your call first on the index. We haven't taken that. So give us your view. 23,200 now is what we've touched. I'm not sure if we've just come off that, but likely we have. What's next for indices? 23,000 was your call. We've done that, and we've done it comprehensively. So what next?
Yesterday we spoke about partial profit booking. Today would be a good day to book it out completely. If you do have that long position from lower levels. Yeah. No, I'm not saying that the rally is over or the recovery is done and dusted. None of that. It's just that from a technical standpoint, a couple of things have happened. One is that Nifty has actually gone deep into overbought territories. Now, typically when that has happened, it's not been it's not been a good following month or month and a half for the Nifty. But for now, let's just stay in the present. So it's gone into deep overheated territory. So some profit booking is par for the course. That is from a technical standpoint. Derivatives also 1.38 PCR. That is typically where you call overheating from a derivative standpoint. There's a couple of factors indicating that the recent rally, the current rally, is overstretched a bit from a near-term perspective. So some pullback cannot be ruled out. So yeah, I would book out completely and wait for a dip closer to the 22,900. Perhaps even 22,750 kind of levels before entering again, on the Nifty. Very similar views for the Bank Nifty. The levels obviously will be slightly different. Any dip closer to the 48,800, 48,800 mark or 48,500 zone should be taken as a buying opportunity afresh. But for now, not a bad idea to book profit on either of them, or both of them, in fact.
So your picks, Kush, therefore skewed towards the short side?
Surprisingly, no. And it's just purely incidental that both of them happen to be from the power space. There's Tata Power and Torrent Power. So we've seen traction in both these names and the entire space as well. While Tata Power is a little muted today after 2 days of good strong rally, the good thing is that on the way down today, the volume isn't even clocking 75% of the average monthly volume. So you could still consider this mild consolidation as a launch pad for the next rally for targets of 377, 382, 367 is where you place that stop loss. Torrent Power, on the other hand, continues to make those higher low formations. Volumes fairly decent on this one. For targets of 1475, 1495 with a stop loss around the 1435 mark, Torrent Power can still be considered as a long trade.
Okay, so some power names in focus as well, but you know what? We're going to slip into another break. On the other side, we'll get you top BTST ideas, but along with it, we'll also talk about some stocks, NBFC counters. We'll have Parag Thakkar coming in and giving us his views with regard to that. He seems to be very positive, and we'll take some of his views as to why that is so. Also a Z, Interglobe, Dr. Agarwal's Health, some of those really flying around. So we'll take perspective from, of course, our analysts in-house as to why that is so, and get perspective even from our guests. Stay tuned. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Back with India market close, and something that Harsh didn't do but I'll do. Belated birthday wishes to our producer Meghna.
Yeah, absolutely.
I got you on that one.
Apologies, Meghna, for not wishing you yesterday, but yes, I hope you had a really good day, and yeah, wishing you very happy birthday.
Meghna, now you know who your favorite anchor is. But I'll tell you, one of our favorite guests is Parag Thakkar. So we have got three great guests today. Vineet Bolinchkar, Parag Thakkar, Kush Bora. And Parag joins in right now on the show to try and talk about one particular aspect, which is around NBFCs. Citi in their overnight note has upgraded NBFCs. Some of them have moved really strongly. And Parag bhai, I wonder if you are constructive on NBFCs at the current juncture.
Yes, Neeraj. As you know, we had already discussed Bajaj Finance at around 6,800 some time ago. Then we discussed Piramal at around 840, 850. And now, basically, I have been very constructive on this sector because there are structural tailwinds for the sector emerging now. Cost of funds will peak out very shortly, in my view. As we move into April and the liquidity available in the market, and with RBI reducing repo rates, the cost of funds for the sector will go down. Credit cost, what I am hearing on the ground is that after government has started spending from December, a lot of the pain in the loan book is now getting addressed, and at least the asset quality on the unsecured side is also not worsening. So this is a great news for NBFCs, that the cost of fund and credit cost both are likely to peak out and now reduce from next year. And typically for a NBFC, which I am going to talk about today, which is there in my portfolio with a disclaimer that investors should buy with 1 or 2 year view only, which I am going to talk about is Aditya Birla Capital. Of course, it's a Kumar Bangla Birla run company, so promoter is great. Most importantly, the CEO, after she has come, Mrs. Vishakha Mule, has done a wonderful job in terms of calibrating risk whenever it was required. For example, whatever digital or unsecured loan was there, they ran it down from 20,000 crore to 15,000 crore. And now they are sitting very comfortable. I think ROAs have bottomed out in Q3 at 2.1%. ROAs can only inch up. So if I just summarize, 45,000 crore is the market cap of the company. 20,000 crore is the value of their stakes in, say, Birla Mutual Fund or Birla Life Insurance, Birla Health Insurance. So the lending business itself is available at only 25,000 crore, and that is sustainably going to make 3,000 crore PAT. And this 3,000 crore PAT will grow at 25% according to their guidance. So in my view, it is a 8 to 10 PE stock with 25% growth potential, with all the structural tailwinds in place. So I would say that's a very, very good long-term buy, and great management and absolutely great CEO and the team.
It's interesting, Parag bhai, Harsh also joining in, that on the same day that you've come out and spoken about this one, we have a Macquarie note as well, which talks about AB Capital. They've maintained their outperform. 59% upside is what they see from here. Largely 260 being the target price. One of their top picks, on track to double in the next 3 years. The book size, recent underperformance offers good opportunity, they say. Key catalysts: rising margins, falling rates, growth in higher yielding unsecured, and falling credit costs leading to higher ROAs. And valuations also a big support, all of which you have spoken about, Mr. Thakkar. But also want to understand from you, do you believe that the unsecured and microfinance cycle, in terms of asset quality, are the concerns behind us? Because one thing is margins, the other piece is the other engine which really needs to start to improve is the asset quality engine. Do you believe that the worst is behind us and probably Q4 will be the worst quarter?
So I'll tell you, AB Capital does not have an exposure to microfinance.
Correct.
That is the reason why I have bought that in my portfolio.
Right.
And that entire credit goes to, again, Mrs. Vishakha Mule, who is the CEO, who took that decision, because that was very juicy segment to lend, right? Because you earn very high interest rates there. And so margins and ROA look very good optically, but afterwards there's a pain. So I would say that up till now, I have not ventured into any microfinance company. I would like to stay with, as I told you before, Bajaj Finance, then Piramal, and which has a 1,200 crore exposure to microfinance only out of the 70,000 crore book. And AB Capital does not have exposure to microfinance at all. So I would not like to venture into microfinance, although things might be turning there also. And as you rightly said, in Q4 it might peak out. But I would like to stick to these lenders which are well established, well entrenched, and who have taken a very calculated risk. See, in leverage business, you have to take risk. But who have taken a calculated risk, who have calibrated the risk by reducing, I would say, the loan book size to, say, unsecured loans. And now they are in fantastic shape. And as I said, cost of funds have peaked out. And credit costs have also seems to be peaking out because from December, you have started seeing that credit asset quality is not worsening. At least in the segments where AB Capital or Bajaj Finance or Piramal kind of guys are lending. And another one aspect which I would like to add, that I explained to you on PE basis, that is 8 to 10 PE for a lending business, which is going to grow at 25%. At the same time, price to book wise also, the lending piece is available at below book value, 0.8 times, while the sustainable ROA is about 2.2, 2.3%. In Q3, it was 2.1, which was the bottom. So I would say that next year ROA is definitely going to improve because, as I said, cost of fund is going to come down, which will improve margins. Credit cost is stabilizing or looking better. And third one is that their housing finance book, their book is 26,000 crore, but they have incurred all the expenses for 50,000 crore lending book. So there again, the profitability, there is operating leverage there.
Right. Right, Mr. Thakkar. Thank you so much for coming in, speaking with us. Great perspective as always. AB Capital is the big one. Kush, let me quickly take your view on this one. Flying away in trade, 3.5% higher.
Oh, well, not a bad move, at all, this one. If you see the last, 15 odd sessions, that's when the base formation, positive divergences, volume action, all of them, started to pick up. 20-day moving average surpassed a few sessions ago. Yesterday, the 50-day moving average was also taken out. So I think it's got a few things going for it. I think from a near-term perspective, you're looking at targets of about 185, and once that is taken out, perhaps even a 190, 92 kind of, a run-up. So yes, if anyone is looking to, get into a momentum-based stock, an NBFC in particular, AB Capital, not a bad trade, and the stop loss for this one comes in at 170.
Vineet, the other segment to focus on, you have to argue is metals, right? The duty yesterday, in today's session, everybody thought there will be profit booking, and maybe there is, but there is some uptick there seen today as well. Are metals good to go long on now? China is also doing a QE?
So, there are two things, a QE in China and a QT in US.
Yes.
That's very, very strong. And these are strong macros that are juice for metal stocks. We expect metals to do well. And Vedanta is one of our good picks because we think that there's a very lot of value unlocking happening there.
Okay. So, value unlocking happening. Anil Agarwal has gone on record saying that the value could be XYZ over the next few years. So, a lot of things out there. Keep an eye out for Vedanta. Keep an eye out, I say, for Z Entertainment as well. Now, we saw this morning that CLSA was bullish on Z Entertainment. I believe Harsh spoke at 9:05 about that. Now, CLSA would have its views as to why is it that they are constructive on this one. But let's also bring the bear view because, Puneet, I would guess that if one looks at history, giving the bear view is the easier part.
And we're going to take the first, as you rightly said, the key trigger from CLSA as one of the key triggers to do this today, highlighting the bull view. Of course, they mentioned valuations to start with at 8 times price to earnings. It's the lowest that it has been over the last decade. So definitely something that's attractive. They have a target price of 170 rupees per share, but the stock has been down roughly about 19% in the last 6 months, similar rate in the last 3 months as well, and that's purely because of fundamentals, because while the company has been waiting for subscription growth as well as ad growth, that has not transferred in the numbers as well. When you look at the second bull and bear case, it's taking a point from the CLSA note again. It's a zero debt company, 1700 crores of cash, and market cap of 9,800 crores. So that's the key aspect that they are mentioning. But the margins have been range bound over the last 6 quarters or so, and ever since COVID as well. Between the 10 to 15% range has been the disappointing part for something like a Z Entertainment. And while the sector as a whole has been impacted, its peers have been doing much better than the company. And so as to say that it's boiling in its own water because of itself as well. When you look at the third key point, which is the bull and bear case, is of course the advertising-led revenue. CLSA is expecting that growth will be one of the key segments, and advertising will lead to valuation re-rating as well. And the environment seems to be in the summertime, very big for FMCG companies, especially and auto companies, and also IPL being one of the key competitors there. If that will translate into numbers is somewhat to watch out for. The Reliance Disney merger will also intensify competition. That was another key aspect that CLSA had pointed out as well. But the promoters have also bought some stake in this particular time frame. In March, they bought 27 lakh shares, trying to restore confidence. But the stock is down 28% in the last 5 years. And if you look at some of the peers such as Sun TV, they've jumped 90% actually. So it's a very big divergence versus peers, and something that the market has not taken very kindly. And finally, I want to just put out the last bull and bear case as well, which is essentially the failed merger talks with Sony. That has really hampered the sentiments. Whoever was waiting for that to happen, once that barrier was shut and that deal was gone through the table, it's not been a very pretty picture for investors who were waiting for that deal to happen. That's the final bear case. But of course, some brokerages like Nuvama have mentioned that gaming is another big opportunity that the company has been waiting for. But that doesn't seem to be something that might drive the stock price as well. I just want to highlight one last point as well, where they mentioned, CLSA had mentioned that Z's market cap to sales is at 1 time currently, which is a 60 to 80% discount to peers such as Reliance Disney joint venture as well as Sun TV. But it was a stock of 56 rupees back in 2009. After the fall, it went all the way to 550 in 2018, and it's down in the doldrums again. And it might look at value, but it'd be very important for investors not to get in stuck in stock just because of valuation. So fundamentals will be something that'll drive Z, but the historical performance, not something giving confidence.
Very, very interesting, Puneet. Thank you so much for that one-time sales, Neeraj. And that's one thing that's stood out for me since the morning, because it's at a deep discount. Now the question, and I'll point this to Vineet maybe, is even if top line growth does not come, do you believe that margin expansion will happen? Because we've seen margins recover in Q3. Is that recovery, in your view, sustainable? And therefore, is there real value left in this one?
See, to my, we don't track this stock, but to my mind, I think, that this, curbs in spending can lift the margins. But it's important to get the eyeballs, market share, and as well as, top line, because ultimately that is what is going to drive your business. And today, I think Z without a big money muscle is kind of a stranded stock. And so for me, it doesn't make sense to buy into it, although there's a lot of value there.
Kush, your take?
Have been avoiding this for the last few years, continue to do so. Nothing's changed for me to change that view. So these and avoid.
Is an avoid for Kush. All right, Kush, what about BTST, STBT?
Sure, Harsh, before that, just a quick update. Kaveri Seed is a stock that we discussed, I think, 2 sessions ago, or in fact, just yesterday, for targets of 1186, 1226. The stock's up and flying today as well. And, that is after a good move of 4 to 5 sessions, with the stock actually gone from 1,000 odd levels all the way up until the 1250 that it is at right now. So if you have a position, now would be a good time to book it out and take some money home, maybe start an early weekend celebration. As far as the BTST idea for today goes, it is Narayana Hrudayalaya. We had the stock in the morning as one of our calls, but the kind of move that it's showing, not a bad idea to continue to build on to positions in Narana Hrudayalaya for targets of 1749, the stop loss around the 1650, 1660 zone. A very good move on this one. This is a good positional bet as well, but with the kind of momentum, if someone wants to consider from a near-term perspective, then to 1749, 1660 at the levels.
Okay, Kush, I'm definitely joining you this weekend. And if you're doing it early, then let me know. I'll be there today. Anyway, let's quickly look at Paytm because that's the other one in focus. Now with everything that's happening with regard to MDR, Vineet, we've seen a decentish correction on this one. And we had a Jefferies note not so positive with regard to where they see Paytm go. What's your quick take? Do you believe that there's good value now? It's fallen quite a bit from those highs of 1,020 plus even in December. You're seeing a good sizable near 30% correction.
So I think they will evolve their business model and they'll get more into the lending part of the business. So while MDR is down, I believe that their model will shift and maybe a little bit of more correction is anticipated in the stock. But I think the kind of network that they are best primed for micro lending, and I believe that is the future of the company.
Okay, and the other thing, I mean, I would love to get Vineet's view on this as well as Kush's view, but here's the thing. I think today the cable and wire segment has hit rock bottom. Now I just tried to do some look into history, and this is what's happened to the cement companies ever since the Adani Group made an entry into cement on April 20. I've taken April 29. They did it in May, so I've taken April because the weekly number April 29 was one of the weekends, so I've chosen that. It could have been May as well. Doesn't matter. Wouldn't have changed too much. But the point is, since then, Shree, Dalmia, Aramco, look at the total returns over in the last column. 9%, 12%, 7.3%. Ultratech has 63, but that's over 3 years. Keep that in mind. Now, the difference is that Adani has had a ready cement operation and therefore they impacted the market immediately. In this case, that won't be the case. But there are two large players who are making the presence felt in cables and wires. Vineet, we spoke to you back then when Ultratech made an entry. Now you also have Adani's making an entry. Are upsides in this sector capped, even if there are no further downsides? Or do you believe there are downsides here?
So I think there will be downsides because, what I think is that with large players coming in, they have, and with deep pockets, they have a power to price these guys, shrink their margins. And so definitely, all these stocks are going to come in for a little bit of a correction. But more than that, I believe that there is a large export opportunity. We are very cheap in terms of cost of production. Today, 10% is the average sales of the Indian industry. And wires and cables can become a very good export option for all these players. So the sooner they develop alternate markets, better for them. And all these, I've spoken to all these players. They are very, very positive about the Indian economy. India is doing well. What is the need to go out? And now definitely that now need has arisen. So the people who migrate their model to an export plus domestic will do better because the margins in exports are far better than in India.
Kush, what do the chart suggests? All the three, Kabel, Polycab, KEI.
Well, not too encouraging, as you would guess. Something like a KEI has actually given up all the gains, of the last year or so, maybe a little over than that, on the back of very strong volumes, I might add. So not looking, very positive, very hunky-dory. I wouldn't really go out and buy just because, there's been this big dash, big correction in, an erstwhile favorite name like a KEI or a Polycab. So yeah, not a bad idea to wait this one out. KEI was actually attempting a base formation around the 3,000 mark. That's also given way. So don't be in a rush. Let the dust settle. It's too early to call shots on any of these. I think perhaps some more pressure on these names cannot be ruled out. So perhaps a KEI could retrace to 2600 levels. Polycab is very delicately placed at the 78% retracement of the early 2024 rally that began. So it could retest some of those levels close to the 4200, 4300 mark. I think some more pain is in the offing for some of these names. So perhaps to just wait this one out.
Couple of real buzzers in trade, and Kush, I'll stick with you. One is a Marksons, one as an AstraZeneca, both from the pharma space. Looking interesting. What levels to look out for now?
Higher order expectations is something that we've already spoken about.
Kush.
Yeah. Marksons Pharma, well, again, had quite a bit of, a drubbing. There is an uptick for sure today, positive divergences. So I won't rule out further up moves on this one for levels of 228, perhaps even 240 thereafter. So this is the one that I will have on my radar with a stop loss around the 205 mark. AstraZeneca, good move, but very sharp moves, and this stock is no stranger to sharp moves on either way, up or down. In fact, even today, if you see, the stock has hit a high of nearly 8,900 and retraced from there. So this is the one that I would avoid. If you have a position, you might as well hold it with 8,000 as your stop loss. But if you want to create fresh positions, then Marksons Pharma is still setting up nicely.
Vineet, on MCX, now offering gold futures at a far lower quantity. Stock up 3% odd. Is this an interesting one? And what do you think is the impact of this?
You're asking me?
Yes, please, Vineet.
So definitely a positive for MCX because the contract size had become a little contagious, difficult to buy for everyone to buy. But with smaller lot sizes, more people can participate, and that spells very well for MCX.
Very good. Okay, last few stock and Kush very quickly. From amongst stocks that are really doing well, I saw Mrs. Bector's Keystone Realty as two, which have really surged in the last few minutes. Anything on either of them?
If I had to pick, I would pick Mrs. Bector, but this too has a resistance around the 1600 mark. So no fresh positions. But if you do have, then you could continue to hold Mrs. Bector with a stop loss around the 1525 mark. Keystone Realtors has given up, pretty much quite a few gains that that it made during the day, so that's an avoid. But as I said, Mrs. Bector, 1525 is a trailing stop loss.
Kush, just 20-second view with regard to Bharti Airtel. Wonder what's happening there.
So Bharti Airtel is a buy. Resistance near the 1700 mark. That could be taken out with the kind of moves and the volumes that you're seeing. But Bharti Airtel is a very firm buy from a near and a medium-term perspective. On the upside, 1755, 1795 are the targets, and the stop loss is at 1665.
Okay, thanks so much, Kush, Vineet, for coming in, giving us all of those views, as well as highlighting some last-minute buzzers and giving us your take. Well, 40 seconds to close. Let's quickly pull up the Nifty. Not a bad day at all, 1.2% higher on the Nifty 50 index. We've come off the highs of the day for sure, but nothing to complain about per se. The Bank Nifty too, we've come down from the highs, just about holding 50k. You may want to be looking at whether we can hold the 50k mark today. It looks slightly on the dicey side. Let's look at the Nifty 50 constituents, the heat map, and what we're likely going to see is a sea of green. Bharti Airtel and Titan continue to lead the way, 4% higher nearly for both of those. You're seeing some of the heavyweights also contribute. And HDFC Bank is closed 1.3% higher. And then you have auto, FMCG, as well as a bit of IT, which is the flavor of the day largely. And that's what's leading the index higher. Let's look at the contributors, get a sense of that. Not sure if Infi closed in the top 4, but yes, it has. So some of the heavyweights really chipping in. Bharti 40 points to the index in terms of contribution. Losers far and few, frankly, nothing to complain about whatsoever. Let's look at sectors as well. Let's pull up the sectoral heat map. Defense in focus, 1.7% higher. Auto, infra, FMCG, we've spoken about some of these. IT as well, 1% higher. Come off the day's highs. So a bit of a comeback where FMCG and IT is concerned, because those were the two laggards in trade yesterday. So a bit of a bounce back that we've seen there. PSU Bank, Nifty Private Bank and Nifty Bank underperforming overall, but in the green nonetheless, and some heavyweights also pulling the punch over there. Pharma up 1% or so as well. Realty doing okayish, 1% up as well. But the way PSU Bank and Realty have done this week, no complaints with that kind of a performance today. Everything in the green, and that's the big key positive as well. Let's look at the advanced decline and thereafter try and break down what broader markets have done. Advanced decline, a slight bit of taper towards the end, not as good as what we've seen yesterday as well as day before yesterday in trade. So that's the one key piece. Going to be interesting to see how this shapes up tomorrow. What also in terms of how the broader markets have done, they've underperformed the Nifty, 0.6% odd, marginally underperforming, and the small cap index 0.8% odd. So that's how they've closed. Nifty, of course, up 1.2 odd percent. Let's last off look at some big movers in trade today. Those are some of the top gainers and losers within the Nifty 500. And within that pack, KEI Polycab, no surprises, with foray by the Adani Group possibly into the cables and wires segment. So that's one. You also have Uno Minda, Finolex, Tanla, some of those under pressure. Paytm on the back of that Jefferies note. AstraZeneca up 6. Welspun Corp up 7.5. We've spoken about some of these as well on our show. Top takeaways from today. One, you had the index, which is up 1% plus. So we've outperformed where the Nifty 50 index is concerned. Broader markets, slight bit of underperformance. All sectors in the green. And you had some outperformers, an IT, an FMCG, as well as an auto, which really stood out in trade. Now, what to watch for tomorrow, because that's going to be another key factor. We've got Bank of England coming out with its rate decision. Not a major mover, but something that you will want to keep your eye out on. The US current account, the US existing home sales, to also determine how the US economy is doing. Japan inflation rate, and then we have certain corporate actions. And let's go straight to those. Some dividend announcements or record dates to kick through, nothing material per se. And then we'll have Green Lamb Industries, where you have the bonus issue 1:1, which will come through as well. It's the record date tomorrow. RR Kabil, in terms of shares to exit lock-in, 20%. That's something that you want to keep your eye out on, given that cable and wire stocks are in focus. EOGM for Delta Corp and Imami Realty. So those as well in focus. But yes, to kind of wrap it up, that's all that we have for you. Thanks so much for tuning in. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. US benchmark zoomed to end higher for fourth straight session. The Nifty ends above the 23,100 mark, whereas the Sensex jumps over 800 points to rally above 76,300 mark. Broader markets fare mixed. All sectoral indices in a sea of green. Auto, FMCG, IT, media, metals and realty contribute to the market rally with gains of over 1% each. Rupee strengthens, gains by 6 paise to 86.38 level. The currency hits a 2-month high, boosted by dollar sales by foreign banks and the culling of bearish vaggers as seasonal inflows propped up the currency. Tech giants make a stellar comeback on the Lal Street, zooms over 1.2%. The space was buzzing after IT companies' partnership with NVIDIA. Wipro to partner for AI-based solutions, whereas Tech Mahindra unveils an autonomous PV solution. Globally, one of the key reasons is the decision post-FOMC meet where the Federal Reserve signals 2 more rate cuts this year. The decision can push discretionary spends by clients, which is positive for the Indian IT. Citi's shopping cart adds Zomato and offloads HUL, citing growth reasons. Now, the research firm maintains bullish stance on Citi Research. The brokerage has retained Nifty's December 2025 target at 26,000, suggesting a 14% upside potential. Citi's constructive view is supported by several positive macroeconomic factors. Now, the key metrics like the current account deficit balance of payments, inflation, and GDP growth are on track. It said IT expects India's GDP growth to reach 6.5% in financial year 2026, up from mid-single digit growth in the time period. S&P Global says that India's low US exposure reduces tariff risk. Now, says indirect effect of US tariff may hit India's steel, chemical sectors. Indian companies are protected by robust growth, strengthened credit quality. Most rated Indian firms can withstand temporary earnings slowdowns. Nuvama is mixed on the steel sector on the back of 12% safeguard duty. It believes that safeguard duty recommendation will help limit imports. Additionally, the recommendation increase has potential for a 1,500 rupees per ton price hike. Indigo stock soars post the company's analyst meet. BofA maintains buy and hikes target price to 5,600 rupees, cites a stronger pricing environment in Q4 and a steady demand driving Q4 unit revenue surprise. Now, the Goldman maintains a buy on Indigo as well. Cites Goldman says that strong domestic and international position to drive growth. Kutch Copper, the copper arm of Adani Enterprises, completes the incorporation of Pranitha Eco Cables, a joint venture company with Pranitha Ventures. Now, the shareholding ratio for the joint venture is 50:50, divided between Pranitha Ventures and Kutch Copper. The authorized and paid up share capital is 10 lakh rupees divided into 1 lakh equity shares worth rupees 10 each. Now, the objects and effects of the acquisition include manufacturing, marketing, distributing and selling metal products, cables and wires. Voltas says that it aims to grow ahead of industry in summer. In its analyst meet, the company says that it has misplaced concerns over recent market share loss in January and February. It expects the Chennai facility to reach optimum utilization levels next financial year. Utilization levels in Chennai facility are 40 to 45%. Now, market share lost during January will be recouped during summer. Now, the company is focusing on absolute profit growth. Axis Capital initiates buy on MGL with a target price of 1,580 rupees and an upside of 18.5%. The new geographical area and initiative seems to be improving the growth outlook of the company. Jefferies cuts FY24 EBITDA EST for Paytm by 50%, maintains a hold on the stock citing lower UPI incentive. Says will watch for the potential merchant discount rate on UPI. Lower government incentive implies incentives falling from 20 BPS to 6 basis points. Prince Pipes launches its 8th plant in Bihar. This as a part of expanding presence in high-growth eastern market. Facility will have a total capacity of 60,000 metric tons per annum. Phase 1 will produce PVC and CPVC pipes and fittings. Dishman Carbogen's wholly owned subsidiary Carbogen AMCIS SAS France has received a certificate of GMP, that is the Good Manufacturing Practice compliance for its Saint-Bézy site, France, from the National Agency for the Safety of Medicine and Health Products. In a strategic move to strengthen its presence in Europe, Indegene, a digital-first life sciences commercialization company, has announced the launch of a new center in London. Now, this expansion is part of the company's broader growth strategy, reinforcing its commitment to supporting life sciences organizations in the region with advanced commercialization on solutions and AI-driven innovations. The newly established center in London will serve as a key hub for Indegene's Europe-based clients, enabling them to modernize their operations and enhance their market strategies. Elon Musk's X has filed a petition in the Karnataka High Court against the government's use of the IT Act and the Sahyog portal, alleging that they create an unlawful censorship mechanism that bypass statutory safeguards. The IT ministry is in contact with X after reports surfaced of its AI chatbot Grok responding with Hindi slangs and abuse. Officials are investigating the issue and engaging with X to understand the factors behind the chatbot's behavior. Now, Grok, developed by Elon Musk's XAI, offers different conversational modes, including an unhinged mode, which is described at its most candid and unrestrained setting. Marksans Pharma rallies after its manufacturing facility in Goa received approval from Australia's Therapeutic Goods Administration. The company's Goa-based facility in Varna has been cleared by the Australian regulator to manufacture solid dosage forms, including tablets and hard capsules for the Australian market. GPT Infra surges after announcing that it had been declared the L1, that is the lowest bidder, for an order worth 481.11 crore rupees from CAO Construction, Southeastern Railway, Kolkata, for construction work. Now, the order entails the construction of an important bridge number 57 over the river Roopnarayan for the down and middle line. KPI Green rises over 3% after subsidiary Sundrops Energia received letters of award. The letters of award is for development of solar power project with a total capacity of 14.90 megawatt under the captive power producer business segment. The projects are tentatively scheduled to be completed in the financial year 2025-2026 in various tranches as per the terms of the order. Maharashtra Chief Minister Devendra Fadnavis meets Microsoft CEO founder Bill Gates. This is to discuss potential uses of artificial intelligence in governance, officials said. Now, the meeting took place at the government guest house Ayadri. In fact, after meeting Finance Minister Nirmala Sitharaman, Bill Gates said that India's efforts to expand financial access and economic opportunity for women and the latest on the country's leadership on DPI, public finance management and AI for social good. Adani Green announces the successful commissioning of a 250 megawatt solar power project in Rajasthan's Bhimsar. Now, the project was undertaken by the Adani Green Energy 24, a wholly owned step-down subsidiary of the company. In a consultation paper, the Securities and Exchange Board of India proposes changes to disclosure and employees benefit regulations. Now, it proposes a clarity on minimum holding period for OFS, allows exemption for convertible securities from approved schemes. Now, says founders can keep ESOPs granted before DRHP filing. Nitin Gadkari has good news for Indians. Government to announce new toll policy soon will give reasonable concessions. Additionally, it says prices of electric vehicles will be equal to those of petrol vehicles in the country within 6 months, Union Road Transport and Highways Minister Nitin Gadkari said in a statement. Defense stocks charge on the back of a series of factors, huge focus on indigenization and domestic procurement. India-US defense ties are expected to improve. There are higher order expectations from larger programs in 2025. Eli Lilly has launched its blockbuster diabetes and weight loss drug Mounjaro in India following approval from the country's drug regulator, it said on Thursday. A 5 mg vial of the drug has been priced at 4,375 rupees, while a 2.5 mg vial will cost 3,500 rupees. Now, the global demand for Lilly's diabetes and weight loss drugs has soared, with the launch presenting a big market opportunity for the US-based drug company, as India, world's most populous country, is seeing increasing rates of obesity and diabetes. SEAT can become India's #1 car tire maker in 3 to 5 years' time, says CEO of SEAT. Plans to undertake small price hikes from time to time, raise its gross margins to 40 to 41% from 35 to 36% at present, CEO Arnab Banerjee says. Rough terrain for Ola Electric. The company's stores come under scanner. The Maharashtra government expands inspection of Ola Electric stores, mounting troubles for the EV maker led by founder billionaire Bhavish Agarwal. In fact, not just Maharashtra, even Madhya Pradesh government initiates probe. Tata Communications Vayu, its next-gen cloud fabric for enterprise with a unified purpose-driven architecture. It tackles rising cloud cost, multi-cloud complexities and AI infrastructure demands. Macquarie maintains outperform on AB Capital with a target of 260 rupees. The company is one of its top picks and on track to double in 3 years, says the recent underperformance offers a good opportunity, highlights big support from valuations. Air India and Air New Zealand sign MOU to develop tourism and business links between India and New Zealand. It's starting off with a code share to put each other's airline code on each other's flights so we can increase visibility and get more people to travel between the two countries. Copper climbs above $10,000 per ton on LME, highest since October. The reasons come from weeks of global trade dislocation. Now, US copper prices are gaining since a probe into US copper imports. Higher copper prices are positive for Hindustan Copper. Amazon and Flipkart in a soup. The Bureau of Indian Standards found multiple items which lacked necessary certification during raids in various warehouses of e-commerce platforms Amazon and Flipkart. Now, this comes after a similar operation in February 2025 at an Amazon warehouse in Gurugram resulted in the seizure of 58 aluminium foils, 34 metallic water bottles, 25 toys, 20 hand blenders, 7 PVC cables, 2 food mixers and 1 speaker, which were all non-certified. Prudential Group Holdings is partnering with HCL Group's Vama Sundari Investments to launch a standalone health insurance business in India. Now, Prudential will hold a 70% stake while Vama Sundari will own 30%. Amar Joshi has been named CEO designate subject to regulatory approval. This joint venture marks Prudential's expansion into India's growing health insurance market. D. Sridhar Babu, Telangana's Minister for Information and Technology, Electronics and Communications Industries and Commerce and Legislative Affairs, launched GramPay at Viona Fintech's headquarters. This new service aims to improve digital financial access for people in rural areas. Now, GramPay will help connect people in villages with secure digital payment options and support local businesses. GramPay focuses on village-level entrepreneurs model. Now, in this model, trained individuals help their communities by promoting digital payments. Google has officially unveiled the Pixel 9a for $499, featuring a sleeker design with a domed camera housing instead of the signature camera bar. Now, the phone comes in new colors: iris, that is pale purple, and peony, vibrant pink, alongside porcelain and obsidian. Elon Musk's social media platform X has regained its $44 billion valuation, marking a significant turnaround from its previous lows. Investors recently valued the company at this figure in a secondary deal, a stark contrast to Fidelity Investments' $10 billion valuation just months ago. Now, Musk, who acquired the platform, formerly Twitter, in 2022, has faced financial struggles following major advertiser exits due to his relaxed content moderation policies. However, his alignment with Donald Trump and aggressive legal action against advertisers have played a role in X's resurgence. Now, X is also raising $2 billion in fresh capital to pay down debt. The Union Cabinet has approved a 1,500 crore rupees incentive scheme for UPI payments below 2,000 in 2024 to 2025. Now, banks will receive a 0.15% incentive with a portion tied to maintaining infrastructure performance. The scheme aims to boost UPI adoption among small merchants, as UPI currently charges no merchant fees unlike card transactions. Payments above 2,000 will not be incentivized. This move is expected to encourage retailers to accept smaller transactions without extra costs. US President Donald Trump, in an interview with Breitbart News on Wednesday, said he believes India would reduce tariffs on American goods. I believe they are probably going to lowering those tariffs substantially, but on April 2, we will be charging them the same tariffs they charge us. Now, Donald Trump was quoted as saying, reported Reuters. The Federal Reserve kept its benchmark interest rate unchanged on March 19, signaled that it still expects to cut rates twice this year, though it said the outlook is more uncertain. The Fed also now expects the economy to grow more slowly than this year and next than it did 3 months ago, according to a set of quarterly economic projections also released. China kept its key lending rates unchanged on Thursday as Beijing juggles propping up growth and stabilizing its currency amid mounting trade frictions. The People's Bank of China held the one-year loan prime rate at 3.1% and the 5-year LPR at 3.6%, where they have been since a quarter percentage point cut in October. The H-1B visa program is undergoing an overhaul, with the Foreign Labour Access Gateway preparing to delete old applications from March 20th. Now, simultaneously, the US Citizenship and Immigration Services is set to introduce a new system aimed at refining the application process. Employers in the United States who rely on FLAG for managing visa and labor certification applications have been advised to secure copies of their records before March 19 as the system prepares for large-scale data removal. Israeli strikes killed at least 58 Palestinians across the Gaza Strip overnight and into Thursday. Now, according to 3 hospitals, the strike hit multiple homes in the middle of the night, killing men, women, and children as they slept. Nvidia will spend hundreds of billions of dollars on chips and other electronics manufactured in the US over the next 4 years, its chief executive has said, as the company tilts its supply chain back from Asia in the face of Donald Trump's tariff threats. The huge spending projection from the world's most valuable semiconductor group follows multi-billion-dollar US investment plans announced by other technology companies, including Apple, as the impact of Trump's America First trade policies ripples through the global economy. A North Dakota jury has found Greenpeace liable for defamation, ordering it to pay over $660 million to Energy Transfer for its role in the Dakota Access Pipeline protest. The company accused Greenpeace of leading a violent and unlawful scheme to harm its business, while Greenpeace insists it only supported peaceful demonstration led by indigenous groups. The environmental group plans to appeal the ruling, warning that it could face bankruptcy. Well, viewers, with that, it's a wrap on Market Express. Stay tuned to NDTV Profit as there's more lined up ahead for you all.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Benchmark indices extended their gains for the third consecutive session, reflecting a revival in investor confidence as the Nifty surged over 1%, reclaiming the 23,100 level, while the Sensex rose by more than 800 points, signaling robust market momentum. All sectors end in a sea of green as Nifty IT reverses losses to inch higher over 1%. This as the Federal Reserve keeps interest rates unchanged, while tech giant Nvidia partners with tech companies driving gains. Defense stocks see recovery in the past 2 days. Major stocks buzzing in trade today. Paras Defense up more than 5%. Now this comes amid renewed focus on indigenization and domestic procurement. Troubles seem to be only mounting for Ola Electric as the Ministry of Heavy Industries flags discrepancies in Ola Electric's February sales claims. Ola Electric claims to have sold 25,000 EVs in Feb, but only over 8,000 were registered.
After a series of operational failures and service-related controversies, Air India in the news again as actor Lisa Ray criticizes Air India for denying a medical waiver for her 92-year-old father who is unwell, despite submitting a doctor's letter to support her request. Monjaro launched in India, a first-of-its-kind treatment for obesity and type 2 diabetes. The drug is now available in a single-dose vial that costs 3,500 rupees. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets, but as well as national and international news. So let's take a quick roundup of what happened in the markets today. It's the fourth consecutive day of gains for the markets. In fact, the Nifty closed above the 23,000 mark after 22 sessions. All the sectors ended in the green with auto, FMCG and IT leading the gains. My colleague Harsh now joining us with the wrap of all of the action.
So good day of trade. We breached 23,000, which is the big positive. A couple of indices made a bit of a comeback after yesterday's muted move both on IT and FMCG. Both of those indices up 1% plus in trade today at close. Of course, off the day's highs where IT is concerned. But nonetheless, a very positive move there. The heavyweights really chipped in and contributed. Bharti Airtel contributed nearly 40 points to the Nifty. The heavyweights and Infi and HDFC Bank and the like, all of which together really contributed to the Nifty's gains. The losers were far and few. It was a very, very strong breath on the Nifty 50 in particular. 42 plus stocks in the green. So overall, you saw a very, very good breath in terms of how the market shaped up. IT and FMCG we spoke about, but outside of that, even auto did very, very well in trade. Something like an M&M was up over 2% odd, and some of the other stocks like a Hero also contributed well on the index. Where the breadth is concerned, the breadth was slightly weaker than yesterday, and therefore indicated that both the Nifty mid-cap and small-cap indices have underperformed the Nifty 50, at least in trade today. 0.8% up on the Nifty small-cap roughly, and 0.7% on the Nifty mid-cap. That's how it eventually closed for the day. In terms of other sectors and pockets, a realty index which has done well over the last couple of days, up 1%. You also saw a slightly muted performance in comparison to how the rest of the street has done on something like a Nifty PSU bank, a Nifty bank, a Nifty private banks. Those pockets were slightly more muted in that sense. But overall, a very, very strong day of trade. The breadth slightly turning difficult. Can we sustain it? We also hit 23,200 plus and we came off those highs. Can we go beyond 23,200 and can we sustain will be the question for tomorrow.
Absolutely. Can we sustain? All eyes on the markets tomorrow, where the IT space today was the star, advancing after a sad day of trade yesterday. The FOMC meeting, the partnership with NVIDIA, and some of the factors that drove the index higher. And to tell us more about what's causing this uptick again, my colleague Mahima now joining in.
There are 5 key reasons as to why Nifty IT is buzzing in trade today. The first one is that a couple of IT companies have partnered with NVIDIA. Wipro announced its partnership with NVIDIA for AI-based solutions. This is for various industries to empower nations, and this is to take place across the globe. Tech Mahindra has also unveiled an autonomous PV solution powered by NVIDIA AI, and this is to enhance drug safety management. The second reason is the FOMC outcome, as well as the kind of commentary that came in. The US Fed projects 2 more rate cuts this year. This could push discretionary spends by client, and this could be positive for Indian IT. The third reason being short squeeze being seen in the entire IT space. Shorts have been built up around IT stocks, and dealers indicate that short squeeze is moving up the IT index in trade today. IT index was down by about 2% overall in month to date, and IT was the only index that has been down in fact month to date, as compared to the other sectors. The fourth reason being overall Accenture results have been announced today, and Jefferies has come out with their expectations as to how Accenture results will pan out. Full year revenue guidance to be lowered to bottom half of the current range of 4 to 7%. Managed services to continue to drive growth for the company. They see solid deal bookings and recovery in consulting gets pushed out, and clients potentially take additional time to evaluate discretionary spend. These are the kind of commentary that Jefferies is expecting from Accenture results, which will be announced today. So these are the reasons as to why Nifty IT is performing well in trade today.
And another sector that was in focus today was defense. With a renewed focus on indigenization and domestic procurement, the India-US ties that are on the path to improvement. Now, defense stocks were in the spotlight, and my colleague Anushi joins in with key things to watch out for in the space.
Defense sector has been in focus now, not just today, even in yesterday's session we saw some strong gains coming in for the company, and this is also on the back of the recovery which is happening in the overall market. So some positive sentiment is something that we are seeing across the defense counters which are there. Again, if we look at what has been happening in the past few months, we have seen strong corrections in majority of these counters, so some positive sentiment coming back for these companies, but there are some couple of key things that we should still be watching out for. This includes whether the recent stock corrections are favorable for the fundamentals of the business which are there. If you look at 2025 as a year, there are higher order expectations, especially for a Q4 of this year, and there are larger programs which are going to be happening, through which there are high order expectations as compared to last year, which is FY25 as compared to FY26. Again, the focus has remained on indigenization push and domestic procurement for the company, as stated in the budget also. That is a second factor which is in consideration. Other than that, now another area that the companies have been focusing on, and even as a sector in general, is the India-US defense ties, which are expected to improve. In fact, if you look at the India-US defense ties, the mix has gone up considerably. So that is one favorable factor acting for the defense sector. Higher order expectations is something that we've already spoken about. Coming back to the budget side, defense budget capex capital outlay stood at about 1.8 lakh crore. Also with this, there is Maritime Development Fund, which was set with an investment fund of about 25,000 crore, and India and France have completed negotiations for Rafale Marine fighters as well. So a lot of high order expectations for the business and major contracts that are expected to due in near term. This includes additional Tejas aircrafts as well, 307 tanks worth about 8,000 crore as well. Just quickly going through some of the counters, Centec, BML, HAL have corrected about 10 to 49% year to date, while BEL has remained flat, but there's expectation of 25,000 crore of order inflow by the end of years. And solar industry, Moscow Dock on the other have seen gains of around 5% and 17% year to date basis. So this is the overall picture and overall expectations that we are seeing from the defense sector.
This is the stream that contributes largely to the profitability of our company. Said that, defense engineering is also catching up, and defense engineering today, they both are 50-50 if you see the last quarter which went by. And in the future, we would want to inch the optical systems a little bit higher than defense engineering for the profitability perspective. We would not only sustain the profitability that we've been having for these many years, but we are hopeful that we will be able to better this profitability along with the revenues.
And moving on, Air India, once the pride of Indian aviation, now finds itself at the center of relentless passenger outrage, plagued by poor service, old aircrafts and repeated technical failures. From broken, clogged toilets to malfunctioning engines and emergency landings, the airline struggles are both shocking and persistent. Even public figures aren't spared from Air India's convenience turbulence. Actress Lisa Ray slammed the airline for refusing a medical waiver despite valid documentation. In fact, even Union Minister Shivraj Singh Chauhan questioned whether Air India was cheating passengers after being given a broken seat. Despite these promises of fleet upgrades by mid-2025, passengers continue to suffer subpar experiences. Now, joining me now is Lisa Ray to voice her concerns. Thank you so much for your time, Lisa. And if you can describe for us the circumstances under which Air India denied the medical waiver for your father.
Thank you so much for having me. And I want to make it very clear that
my intention was never to slam Air India. I'm a champion of anything that potentially uplifts India's profile. But, I'm in despair right now, to be honest. I'm going through this very difficult time with my father's health issues. He's 92. I had planned a family vacation, taking my twin daughters to Udaipur. I was very excited, but my father's ailing health meant that I had to cancel these plans, very sadly. So very naturally, I got a medical waiver from his neurosurgeon and submitted it through my travel agent to Air India. I was also canceling flights on Emirates as well from Dubai to Bombay. That went off very smoothly. My waiver was accepted. But Air India, for some reason, first of all, didn't reply to my travel agent. And secondly, when I finally tweeted, because on many people's advice, that seems to be the only way to provoke the airline to actually respond in a timely manner, I received, I received a gracious reply, but one that actually ultimately wasn't helpful, because they said, well, actually, your ticket isn't refundable, which is a completely different issue. And by the way, I double checked, my ticket is fully refundable. So they said, first of all, your ticket isn't refundable. Second of all, this medical waiver, first of all, they asked for more documentation in terms of establishing my relationship with my father. I submitted my birth certificate. I submitted everything in good faith. Then I received a reply that we're very sorry, you can rebook this flight, but we will not offer you a refund. Now, also in the rebooking, they mentioned that you will have to pay the difference in flight as well whenever that comes up. It was one issue after the other. When I'm in the middle of these very harrowing personal circumstances, I'm sure that people can relate. When you're going through a medical emergency with an elderly parent, you're already very, very emotionally distraught. And this definitely didn't help. I'm still puzzled because no final reason was given as to why my medical waiver was not accepted. It was simply kept very vague. Now, if I cancel the flight, even though my flight is refundable and my flight fare was 5,500 rupees from Mumbai to Udaipur, the cancellation fee is 4,000 rupees, which is an absolute joke if you think about it. And at this point, the reason why I appreciate this platform is because this is not an issue of money. This is an issue of enlightenment and sharing passengers' woes and enlightening the public as to the treatment that Air India, the way that Air India treats its passengers, the lack of transparency and the lack of empathy. I'm sure it's not just me. I'm sure many, many other people have been put in this similar circumstances, whereas most airlines will accept a medical waiver, a medical emergency without question and be able to refund the full amount of the flight. So I'm still appalled. I'm still struggling with this. And the reason why I took both to social media and why I'm speaking out about it now is I think everyone should know, and you should know your rights. And it's still not very clear what the rights are. I want to add one more thing that my travel agent shared with me is that in their experience, it's very erratic. They said it depends on who the customer service representative is, whether you will receive a refund or not. In their experience, some people have received a medical waiver refund and other times a strong no. This is not how you run an airline, Air India. It's simply not, and it's not acceptable.
Lisa, so just to clarify, you're saying that you're still struggling with this. So am I to understand that they haven't yet reached out to you after this very public statement that you've taken to social media, trying to understand what was their response? So they haven't reached out after that at all and you've not heard from them? Is that what you're saying?
No, as I said, there was a particular social media manager from Air India who reached out to me via Twitter.
Okay.
We've been in communication on WhatsApp, but her last communication was, we cannot accept this as a medical waiver, so we will not refund the full amount, but we can offer you a year's, the opportunity of being able to rebook this for a year, but you will have to pay the difference in fare, whatever that may be. That is not enough. And as I extensively, sort of tried to clarify, I will not be traveling. I don't know when I'll be traveling next with my father in frail condition, and certainly not to Udaipur, where it's not easy for me to return for a family emergency. That was the main issue. The point is, why do I have to clarify this extremely delicate family situation again and again? In general, I tend to be rather private about these things, but I have chosen to make this public because I'm sure it's not just me going through this. I'm sure there are many other passengers, and it's simply unacceptable, particularly when it's a legitimate complaint, when I provided the sufficient documentation, and also, when other airlines have unquestioningly offered a refund. If you go onto their site, it's very, very vague as well. It's very, there's no transparency around, the fine print in these situations. But in general, even if you do a casual Google, in the case of a medical emergency with a medical waiver, should an airline refund your fare? And in general, almost all airlines do that unquestioningly.
So Lisa, let me ask you this, because, you said that you're probably not the only passenger, and we've actually been following this very, very closely to look at whether it is operational issues or service-related hassles. Do you believe that this incident reflects a larger issue with customer service with Air India?
I will have to very sadly say yes, because as I said, I have been trying to champion the airline. I have had mixed experiences, and I do tend to travel fairly extensively on Air India. I've had good experiences. I've had not so good experiences. I had an experience a few months ago that where a personal item of mine was actually stolen from the baggage carousel. And Air India was very unhelpful until I took to social media and tweeted about it. And then they actually stepped up and checked the CCTV cameras for me. But why should we have to always resort to that, to making it a public issue? I don't want to have to lean on whatever profile I might have. Every single customer should be treated the same way. And this is what we expect out of a national airline, an airline that carries India's name.
Absolutely.
And India's pride.
Absolutely. Lisa Ray, thank you so much for your time, and hoping that this issue is actually resolved for you soon, and hoping that Air India also kind of gets back to you and the droves of other passengers that have been having issues for the past many weeks now. Thank you so much.
Thank you. I really appreciate that. And again, I want to say that is the reason why I wanted to come forward. It's not just about me. It's not about the money. It's about alerting people to a larger issue at hand.
Absolutely.
That's what it is.
Thank you so much. And moving on, Ola Electric is once again under scrutiny, and this time drawing the attention of the government. Sources are in fact telling NDTV Profit that the Ministry of Heavy Industries has sent a letter to the company questioning significant discrepancies between its reported sales figures and actual vehicle registrations. Let me quickly go across to my colleague Tushar now, who's joining me. Tushar, NDTV Profit has been chasing this story very relentlessly. What are your sources now telling you within the ministry?
Hi, Sanjana. So, sources within the ministry have told me today that a letter was sent to Ola Electric on the 11th of March to explain the mismatch between the numbers of sales figures that the company reported for the month of February. In an exchange filing on 28th February, Ola Electric said that it has clocked sales of 25,000 units, but it could register only a third of those at about 8,652 units. Now, that is a discrepancy because every automaker has to register its vehicles so that a number plate can be issued against that vehicle. As per Indian laws, a person is not allowed to ride a vehicle without the number plate. So how did these vehicles get out of the showroom is anybody's guess. So there's where the mismatch lies. According to Ola Electric's RHP actually, Ola Electric counts as sales only those vehicles that are delivered. So how is it now claiming 25,000 units sold but only 8,600 registered? Remember, last month the company also severed ties with Rosmerta to process vehicle registrations in-house at a fifth of the cost as what Ola Electric claimed. Subsequently, Rosmerta has gone ahead and filed an insolvency petition against Ola Electric, claiming dues of about 20 crore rupees. A second insolvency petition has also been filed for claiming about 2.5 crore rupees, but Ola Electric has not informed the stock exchanges about this particular insolvency petition. So that is the picture that is emerging around the sales figures that we are getting right now.
Thank you so much, Tushar. But, just stay with me, because as we have been reporting, the regulatory scrutiny surrounding Ola Electric has also intensified, with raids now expanding to 2 states. We've seen recent operations in Madhya Pradesh that targeted at least 6 Ola Electric stores, 2 in Jabalpur, 4 in Indore, resulting in the impounding of, I think, approximately 14 scooters. Tushar, these actions come in response to ongoing concerns regarding compliance with the Motor Vehicles Act, particularly the lack of required trade certificates at a majority of Ola showrooms. Isn't that correct?
Yes. So you have to look at it from the point of view of what is happening at the ground level. A big expansion happened in the month of December, but all of this expansion now appears to have been done without the proper paperwork in place. So if you have to setting up a showroom, you have to get a trade certificate. But when a massive expansion happened just over a fortnight from 800 stores to 4,000 stores, it now seems like Ola Electric did not procure the trade certificates which are mandatory to sell or display a vehicle. Now, raids have been conducted across the country. We can confirm right now that such raids have happened in Mumbai and Pune, as well as in Madhya Pradesh, Jabalpur and Indore. 26 stores are in the dock in Mumbai and Pune, 6 are in the dock in the state of Madhya Pradesh. A bunch of Ola Electric scooters unregistered have also been confiscated, and a notice has been served to these stores to explain why they were selling scooters without registration numbers as well as without a trade certificate. It's an evolving story. We are coming to know of more states who are taking action. We'll update you as soon as we have more information.
Right, Tushar, thank you so much for tracking that story very closely, and we'll keep sending you updates as we get them. Meanwhile, NDTV Profit has also written to Ola Electric but hasn't received a response just as yet. Moving on to some other blockbuster news coming in today, India has made a significant entry into the global weight loss drug market with the launch of Mounjaro, a groundbreaking medication by American pharmaceutical giant Eli Lilly. Now, designed to treat both obesity and type 2 diabetes, Mounjaro is priced between 3,500 and 4,375 depending on the dosage. It's significantly cheaper than its US price of over $1,000 a month. This affordability, as you can see, now opens up new opportunities for millions of Indians that are battling these conditions. My colleague Varsha will share more insights on this.
Eli Lilly launches their drug called Mounjaro in India. Now this is used for weight loss and diabetes. Now India has the world's 3rd largest obese population, and this drug Mounjaro is available in single dose, that is 2.5 mg for rupees 3,500 rupees and 5 mg for 4,375 rupees. Now this drug is usually taken once a week, which will cost around 14,000 to 17,500 per month depending on the dosage recommended by the doctor. The average monthly price of this drug in the US is around $1,000 to $1,200. Company aimed to increase access to India specific pricing, and this gives Eli Lilly a first mover advantage when it comes to competitors. India has 200 million people with diabetes and obesity is linked to various numerous health complications. A key drug in this class is called semaglutide, which is set to go off patent in March next year, and a lot of Indian companies are actually coming up with the generic version of this product, which includes your Dr. Reddy's, Biocon, Glenmark Pharma and Alkem Labs.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
the DSS is,
Thanks for tuning in to Talking Point Unfiltered, and tell you what, with the markets the way they have been in the last couple of months, the conversation has to be unfiltered. But I'm duly glad to be doing this conversation with somebody who I can truly have an unfiltered conversation with. Our guest today is Vikas Khemani of Carnelian. a very, very dear friend and a brilliant mind, more importantly. And Vikas, so good to be talking to you today. Thanks for agreeing to do this.
No, it's my pleasure, and it's always great to chat with you, Neeraj.
Yeah, but Vikas, a lot of people in the markets. I mean, there are two memes which are the most famous. Donald Trump has taken over right now, but otherwise, के market में सुबह उठो, खाओ पियो, धो जाओ और शाम को घर पे जाओ was the mantra for the last 2 months. Have been very rough. Is this unlike what you may have seen in the recent past or in the last few years, or have you seen this tape play multiple times?
No, I mean, if you sort of take your time horizon longer, 20 years you've seen it multiple times. But I think this kind of correction we have not seen for at least last 2-3 years. The only period again which reminds me, forget very often, is that 22 was also similar period. 21 was a great year, and Nifty had touched almost 18,500, and then Ukraine war had started. And if that time every day, geopolitical, inflation, oil price, and I'm sure, with the initial reaction that 2 weeks war will be over, and then it kept getting extended, and most people ended up giving up. And that, by the way, the first half of 22 also was very rough. So time and again, these kind of situations come. I feel that these are not reasons will come, but these are, in my opinion, natural cleansing process, correction process, whatever you want to call it, or bringing down to the levels or normalization process. Every 2-3 years, you see some sort of correction. Now, whether it will degenerate into a big one or not, that only time can tell you, because given the fact that there are uncertainties around Mr. Trump and all what he does, who knows? But my own view is that I think this is not a big one. I think it'll probably, settle somewhere here. Like Ukraine war looked very big. In fact, I remember some point in time people started talking about it can lead to world war kind of thing. I mean, there were all kind of conversation was happening, right? So in the negative times, people tend to pronounce or extrapolate more negativity. In positive time, positivity is more pronounced, and that is the normal human psychology of moving between fear and euphoria, and that's what it is.
Yeah, I mean, the sentiment was very low, right? Somebody from Nuama was pointing out that some 86% of the stocks below some 200-day moving average, etc., not seen such times. But is this because of growth issues in India as well, or is this got to do with tariff tantrum? Because I was talking to we had a conclave, and I was talking to Rhythm Desai, and I was asking him, FIs वापस कब आएंगे? 5 straight months of incessant outflows, right? And he was saying that his view was that this is a growth issue of India, which will resolve itself once growth come back. And then, sorry to extend this question, but my mind took me back to a clip of yours, जो बहुत viral हुआ था, जहाँ पे you spent 5 minutes explaining how India is almost like a Teflon coating, कि CAD हो गया ठीक, growth ठीक है, politics ठीक है, कहाँ पे और ये सब combination है, and therefore we will probably not see too many tumultuous periods. Do you still stick by that?
No, absolutely. The point I made that point in time was there are no structural issues in India.
Right, agree.
There are no, I didn't say that growth will not temporarily slow down, right? Yeah. There are no structural issue. Our big structural issue comes from current account deficit, fiscal deficit, weak banking system, inability to manage inflation, excessive leverage. None of them are there right now today in economy, and we think they are addressed also in a reasonable good way. But there will be along the way journey, like why to growth slow down? If you see last year, RBI had tightened liquidity in the system beyond measure in order to defend rupee. RBI sucked out liquidity, and we were, for a large part of the year, we were running 3.5 lakhs rupees kind of negative systemic deficit. And then we had that clamp down on the unsecured loan, and it got coupled with governments, because of elections, slow down in the government spending, release of payment by the government. So you have suddenly, in a very short period of 2 quarters, you had squeeze on the liquidity. And liquidity is like blood in the body. If you squeeze blood out, obviously you will feel weak. So that played in the corporate earnings with 2 quarters of lag. Now, if you fast forward today, if you see both policies are pivoted, right? RBI is now pumping liquidity back into the system. They have, stopped defending rupee beyond requirements. Unsecured loan weightage has gone down. NBFC weightage is down. RBI has put more accommodative stance. Government has started spending. Government's, the release of the increase of tax limit of 12 lakhs rupees is a very big measure. So I think if you see, all those things will start impacting with a 2 quarters lag.
Okay.
So both ways it does same way, right? So I believe that growth story will get addressed more or less in a quarter or two. I think 15-16% earning growth of India is not in question according to me. It's not.
You don't think that's FY26? You think 15% growth might happen?
I think so. I don't see much risk to that.
Okay. Just one quick follow-up there, right? A lot of people said that, chalo, December se...
and remember this conversation and play that video in 26.
Agree completely. Agree completely. No. But hence the idea of talking to you, right? Because somehow in a lot of your tweets or our conversations that we have, right? You have this deep passion for the country itself. It comes out in your tweets per se. And therefore, I try to corroborate that, that bhai, aapka passion for India, is it coming in the way of your judgment about earnings?
बेटा है कि खाली patriotism है. एक पूछ रहे हो ना भाई. See, पैसा patriotism से नहीं बनता है. Right? Of course, I am a patriotic. I am a hugely nationalist at the core. But also, I run a family, I run business. I have clients to address. So, never confuse two things beyond a point. Right? I might be patriotic. I am patriotic. I am nationalist. But money will not be made by that. My business will not survive on that. So I have to do justice to what I do, right? So let's never confuse on that.
No, in a good way, I'm saying that I believe that I'm a shark, you are a bigger shark. In a good way, I'm saying that. It's a compliment.
Absolutely fine.
From a market's perspective, it's a compliment. So, theek hai. Okay. So, just a quick word. I know you look at long term now in a big way. In the last 5-6 years, you look at very long structural stories. But just to focus on the short term, there's a lot of question marks around growth. Quarter 2 ke end mein, even quarter 3 6.2, okay, nothing too great, but capex rebound a little bit in December, government capex, etc. Jan conversation was okay. In your conversations with your private investee companies or your fund investee companies, do you sense that the optimism is back, whether on capex or on growth or on both?
No, see, it is not a switch, it's a dial, right? Like it changed other way around last year, like I said, everything moves with the 2-quarter gap. Okay. See, liquidity ka answer is nothing, but liquidity. It's like,
That's true.
Right? So, like we took out liquid. Last year, why the interest rate went up? The RBI did not increase interest because there was no liquidity in the system. Deposit growth was not happening for the banks, right? Today, with 12 lakhs rupees minimum, no tax, your post-tax returns become 8.5%, which is a great money for very wide middle class. So you will start seeing deposit flow back. So I think these pivots we are ignoring. These pivots both on the liquidity, a dovish commentary by regulator clearly tells you that we have shifted from risks to growth. Government is clearly moving to growth. So I think all those things like I said, it's not a switch, it's dial. So as you will start seeing people, and people feel more with numbers. As numbers come out, as markets do well, we will feel more and more confident. It is a human psychology.
Yeah, that's true. Actually, 2 days ago, Vikas, I put out a tweet as well, wherein I said that when this tide eventually turns and people look back, people will realize what a crucial role the Reserve Bank of India has played in the last month and a half, right? The measures that they've taken, not too many people anticipated it. People were talking about it, but not many people anticipated one after the other kind of moves that they've done. Pretty strong, right?
In a good bull market, and if the sentiments were good, this would be cheered beyond measure. Yeah. In a bad sentiment, markets have ignored it. Yes. That's a beauty that is giving you opportunity to buy in a great developments and giving the right price to buy. But markets are saying, okay, big deal. But if you understand the meaning of these macro changes, these pivots tend to people will say, okay, pivots kiya, but what happened? Nothing has improved. It does not happen automatically, immediately. It takes 2 quarters lag. So it will happen.
It will happen. Okay.
Unless something goes wrong globally and, which is, some major chaos happen. Big risk comes from obviously right now from US that we do not know.
Yeah. Are you worried about the tariffs and the impact it could have on selective growth or sectoral specific growth?
See, sectoral can happen. We don't know. You don't know. But see, a big thing about here is that if Trump is going to put tariffs on everybody, then everybody is at par. But I think the real battle US has is with China, not with India. India is either a collateral damage or it probably politically he has to keep making noise so that he does not seem to be favoring India. In my opinion, I think India will come out a better way because there will be some deal made. You import LNG, we will do this, and India anyway has to import energy. So I'm sure there'll be some deal made. In next 2-3 months, it will all settle down. I don't think given India-US relationship strategic importance, and given the US and China, how China has reacted to this, there's no easy answer to that. So I don't think net India will be major negatively impacted. But some sectoral here and there can happen. Who knows?
Yeah. So is this the market that invites you to really put money to work, Vikas?
See, yes, in my opinion, like I said, Ukraine war, Nifty came down from 18,500 to 15,500, almost 20% correction. Look at what happened after June 22. Second half of 22 was good. 23 was great. First half of 24 was great, right? Same way now, Nifty came down from 26,500 to 22,000, right? So almost 18-20% correction. Very similar kind of situation. I think second half of this year will be far better than first half. Now, whether it turns in April, May, June, who knows? I don't know at least.
Yeah.
But I tend to believe the risk reward of investing, committing money from here is favorable. 80-90% of the damage is done. Last 10% nobody can tell you when it will happen, both in terms of time and value. Nobody can precisely predict. So risk rewards are turning favorable. I think if you have to allocate money, you have to put money over next 1 to 3 months. Next 3-4 months, I think is a great time.
सब लोग बोल रहे हैं large caps में डालो.
I think I personally am not a big believer of large cap, mid cap, small cap. I am a believer because for a long term investor, caps don't matter. What matters is the market cap, matters the management and the business model, right? And your ability to withstand, in mid and small cap, the volatility risk is very high.
Yes.
But, I always say that if I like a management and a business, I would rather buy it small than buying, right? That's a very simple, right? So large cap, the people who say large cap, mid cap mein dalo, they come from the managing volatility perspective. They come from the short term perspective. People who have 5-10 year horizon, they know that big money is made in mid and small cap. I'm not saying large cap mein nahi banta hai. I'm not making that point. The big, beat or the supernormal return, if let's say large cap or index is going to give 15%, you can make 25% return also by investing into mid and small cap over a long period of time. Right? That's possible. So again, you choose what kind of the risk appetite you have for the volatility risk, and then you invest.
Have you done that right now?
No.
Chosen mid cap, small caps right now in the last 1 month.
Nothing has changed now. Investment.
नहीं, वो तो आपका पहले वाला investment रहा. But if you had incremental money, have you put it to work in mid caps and small caps?
See, we have multiple strategies. We have multi-cap strategies. We have small cap strategies.
Yeah.
Mid also. So we do based on what our mandate of the strategy.
Okay.
It's not like we are deviating significantly here and there. There are mid caps which are finding interesting. There are large caps we are finding interesting. In fact, we recently during the Ukraine war time, we had launched a contra portfolio strategy, right? That strategy, we said we'll beat, because that time nobody was ready to listen. So we said we'll beat inflation by the fixed income by 2-3%. So it guided for 12-13% kind of returns. And that strategy has delivered almost close to 36% return in the last 3 years. We had closed for subscription. Now we opened it again because we think it's a time to get money back in that. Now, whether it will give 15 or 20, I don't know. But the fact is that right now risk reward is finding favor, and hence we opened it. So that tells you, but that's a largely large cap strategy. 60-70% large cap, balance mid and small cap. Again, their philosophy is, so I am more guided by the approach philosophy rather than cap. We have made 5x return in large cap also. We made 5x return in small caps as well.
Maybe the other reason why I asked this question was that I remember a newsletter that you guys wrote at the start of the year, maybe, that this is a year not for hitting sixes. I mean, not paraphrasing it, but capital conservation will be as important as well, which is why my question.
So no, we said that, keep the expectations low from this year.
And you're still keeping it low?
Yeah, we're keeping it. See, anyway, in general, we should keep in life expectations low. But we were like, since we are in a business, we have to keep, give all kind of views. So I think this year will be a, challenging year. It will be a difficult year. We expected that to be. Now, that is true for large cap. That is true for mid and small cap. Mid and small cap tend to take more beating in a bad market, but they tend to also run up very fast in a good market. If you go back and check 22 May, when recovery happened, it was far more sharper in mid and small cap, than large cap. So that's the nature. So again, we are saying that hold on your nerves, don't panic. nothing is wrong with India. Environment settles down, equity will create wealth. I see similar to 22 kind of situations, and that is your
Okay.
call.
Well, this should be soothing for a lot of people because I'm still wanting to understand from you because you talk to a lot of companies. I know that, right? Both on the private side and the listed side as well, presumably. What are corporate conversations like? Are promoters slightly shaken because of the lack of growth? Are they telling you that no, they're confident about FY26? What have you? Tell us a bit about the feedback you're getting from them.
Depending on the sector to sector, company to company.
But broadly-
I'm telling you, banking, no problem. People are reasonably positive, and growth is there. And the recent whatever is happening, I think reasonably positive. Capex sector, I think order books are very, very strong. They're executing well. I don't think anybody is expressing any sign of worry, if you ask me. Pharmaceutical business are going reasonably well. Some part of uncertainty is there on US front, but you don't know. In fact, that they account for 45% of the US medical market. I don't think if it happens, it will be passed on. And, so I don't think there will be any challenge on that. So consumption side, again, mixed bag depending on what size of the company you are and, what sector you are. But we have few names where things are, doing pretty well. So I think the worries are coming in some pockets where there is a little bit of international trade where they don't know what's happening. So whether what to do and what not to do, how the things will pan out. Yesterday I met some auto component company. They export to Mexico and Mexico does some work on that and goes to Tesla in US. Now he was saying, I don't know how it will pan out. And like he said, I sent something to Canada and Canada say it comes to Detroit. It gets machined and goes back to Canada, gets some work done, goes back to Detroit. And say, I don't know how that business will play out. And that's like 25% of my business. So I don't know. So wherever uncertainty is there, they are kind of dealing with this whole uncertain period. We don't know. And obviously that's right. So all those things should settle in next 3-4 months. But generally speaking, I have not heard companies saying that, oh my God, it's like we are kind of cancelling our growth plans and curtailing it down. None of those things. I think, people saying that this can be challenging year, challenging environment will come out. So there's nothing which at least we have heard negative from corporates.
Very nice. The other question, Vikas, that I have is on what could happen to jobs creation if indeed AI, which is the big buzzword, I mean, it was the biggest buzzword in Davos this year. Everybody is talking about one thing, even though it was Donald Trump presidency, and that was AI. Now my question is, if AI is increasing efficiency, reducing need for duplication of jobs, what have you, and if it is negative for global capability centers being set up across the world and India, for IT sector, etc., is India sitting on a worry when it regards to jobs versus availability of labor?
So again, it's a very interesting and a very common question which comes all the time, and I have my favorite answer on that.
Which is?
So basically AI, I think there's a lot more, I'm not saying AI is not going to change the world. It is going to change the world, it's going to change the world fast. But I think there's a lot more fear than the reality. I'll tell you why. AI is nothing but similar to like internet. 15 years ago, we didn't have WhatsApp, we didn't have Google Map. Our life was going on, right? We all adapted to that. Today, you can't think of your life without WhatsApp, without Google Map and all those things, right? So point I'm trying to tell you is that everybody will adapt to new ways of doing things, right? In that process, again, another analogy I give you is in our capital markets in 97 or whatever, 95, when dematerialization happened, there was a strike in Bombay Stock Exchange that lots of people will lose job. People who were handling the share certificates physically and this and that, right, will lose jobs. Fast forward, SEBI went ahead, did dematerialization, made technology as a base. Capital markets, because of that automation, has probably created 2,000 times more job than it had that point in time. The point I'm trying to make is that technology always makes life easier, expands market, it makes your life, like I said, Google Map has made your life easier. We were living before also.
Yeah.
So point is, technology is an enabler to make your life easier. We all adapt to it. Of course, some people who are handling share certificate will lose job. If they can't adapt, there are lots of benefits to take care of them, but the new generation will adapt. New generation will benefit from that. So companies adapt very fast. So I think everybody will adapt, in my opinion. Now, people who don't adapt, they will anyway die, and they have always died. They have always suffered. I mean, we have seen whether it is companies or individuals who don't refuse to adapt, they will suffer from that. So I think it's a lot more fear than realities. Of course, you should be mindful how my business will get changed. Every company should think about it, but not from a fear perspective, but from a understanding and how it can change. In our industry, I think a lot of technology has been used, whether it is screeners, crushing data, using algorithm, it's been going on for a very long time, by the way.
That's true. That's true.
Now, how in AI also there are layers, Gen AI, kahan pe jayega? So I think, in my opinion, there's a lot more fear than I think reality. We will change, we will benefit. Human life will become far more easier. Of course, it can go, now there are theories, I'm not expert, that it can go all the way to take control of humans also.
Yeah.
But who knows that?
Who knows?
That I can't get there because I don't understand the full implications of that. But we will live with the future as it has always adapted.
As it is always adapted, yeah. Though, because I must say, this year, for example, a lot of fear around Indian IT, right, Vikas, and what could happen to job loss or job prospects there, will they lose jobs, etc. If you walk down, and I refer to the WEF because a lot of global companies come there, the promenade was dominated by Indian companies. And from a Infosys to a Wipro to an HCL Tech, everybody was advertising this, that yes, AI is the buzzword. If you know how to use AI well for your organization, please come to us because we will help you do that. So I think it ties in with the point that you were earlier making, that lifting kaun karega? AI बेच तो देगा, but बाद में lifting kaun karega? So Indian IT might do it. Interesting. Last couple of questions, Vikas. One is because a lot of people, one is on selection process methodology, especially during tough times, right? So let's assume कि मैं आपको example दे रहा हूँ कि you are a person who is not having an annual customer inflow of capital coming in every month or whatever. Your fund आपका खुला नहीं है, आप individual investor हो, right? You've seen your portfolio get eroded by 20, 30, 40, 50% as the case may be in the month of February, peak February I'm talking about, right? How do you then think about what to do in the market at that point of time? Because trading करने के लिए finger उठती नहीं है, the mind is scared. Right? Portfolios are bled and therefore you can't sell in order to invest somewhere else. So what would a Vikas Khemani do in such a scenario, the mental model?
I think first of all, manage your mental situation. Don't let it impact your judgment. Very often, I think when you see this kind of fall, people lose balance, people lose the objectivity, and they'll start, blaming everything what is not getting right, and I've seen these days everybody calling out for long-term tech application should be tax zero and all those things kind of advice, and those kind of things starts happening. In my opinion, make some government, blame some government, blame some corporates and all. I mean, this is in my opinion. So control your mind. Don't. I think if you made bad decision, correct it. Even if it is a loss, get into a good decision, right? But if you think you made a good decision, business is doing well, companies are doing well, stay put. If you have more money, average it out. I can tell you, I have had many companies in the last 20 years in my career, which are 20 bagger to 100 baggers. And each of them have seen between 30 to 50% correction many time over, not once. But if you, in any of those many time over 30 to 50% correction, you buckled in, then you will lose the entire big upside. So the key thing is that, do you know your investment well? Have you bought it on tips or do you know it with research? Do you know your company well? Do you know your investment well? If you know your company management investment well, your ability to stay put through thick and thin will be very high. And that is where I think job of a research, job of a qualified investment comes into. Unfortunately, a lot of retail people end up buying on tips, buying on, news flows and all those things. And they are the ones who suffer the most. Unfortunately, sad realities of life is this, because of, again, many finfluencers to a lot of people. There are all kinds of people in the market. Unfortunate reality is that people suffer from that. So I would always say that know what you're doing well. If you know what you're doing well, your ability to stay put through thick and thin is very well. And actually investing is this. Real successful outcome in investing comes in your ability to stay put through thick and thin, because there will be bad periods. There will be bad in market. There will be bad periods. Reason could be anything. I don't know any cycle. Like I said, 22 we had, 20 we had. I've been all around bullish. But you will. So if you are bullish for 10 years, there will be at least 4 or 5 periods where you will have 20 to 40% correction. Now, if you don't live through that, you will go back to cash or you will do something. So that's the only advice I can give.
Okay, great. Okay, Vikas, lovely talking to you. It's one of the best conversations that I've had with you. Really enjoyed it. Thank you so much for joining us on the podcast.
Always love doing that.
Yeah. And viewers, thanks for tuning in to Talking Point Unfiltered.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.